It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक कॉन्सेप्ट नहीं है. This is my life. This is my story. One night, no repeats. Book your tickets now.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Program now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Program. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
You're watching live from the NDTV Profit headquarters in Mumbai. This is India Market Open with Tamanna, Alex and Neeraj.
Very good morning. You're watching India Market Open, and there is just so much to unpack today because I think a new set of jitters might be seen today on the street. The implied open also showing a bit of a downtick, and I think some of that coming from the concern that there could be newer guidelines or eligibility criteria for F&O trading, amongst other things?
Yeah, I wonder if there are some leaks or whatever you call it, but some commentary floating around. Individual confirmations might be difficult to get, but at this point of time, the market texture is showing that, right? I mean, everybody is waiting for the US trade deal to happen. That being in the realms of possibilities, and then there are to's and fro's, but still the market not rallying shows you that the market is jittery until something turns around.
Lack of triggers is playing out.
I think enough triggers are there, but lack of confidence in the triggers perhaps. So there is a quote from the NSE MD and CEO saying that there may be a requirement for further eligibility criteria for F&O, and maybe more stringent guidelines may come in. I think that could be one of the reasons that has happened. And the other story that really caught my eye, guys, I don't know what you think, is Anthropic versus the US Department of War. All out. So, I mean, here's what's happened. Anthropic has rejected the Pentagon's latest compromise, and Dario, the head of Anthropic, has come out with this long letter. The long and short of it is, they're saying we'll not allow the United States government to use our software or our capabilities for mass surveillance of US citizens. And we will not give our technology for autonomous weapons that can strike, that can identify, target and strike themselves. And both things sound so futuristic, but it's here and now. And now you know that the US, the Department of War, is doing these things.
Yeah, it's quite astounding. I mean, I quite like the fact that somebody's standing up for whatever either the investors have said that you can't do, or whatever the reason may have been, right? There are multiple factors at play here. But standing up to the US Pentagon and saying that we are not doing this, and come what may. I think there are some deadlines around. I've missed that, but would be interesting to see how this plays out.
So my only worry is that this is one lone rock standing against a tide, because
they'll get someone else to do it.
Ultimately, the technology is moving so quickly that somebody or the other is going to have that ability to create.
Yeah, no, but you know, we've spoken about AI in so many contexts, but AI as a use of weapon is now coming into play.
Yeah.
Having said that, Jack Dorsey, the former chief of Twitter, has made an announcement today that his company, so yeah, we're going from Dario to Jack Dorsey this morning. There's so much happening on that whole front. His company has cut 4,000 jobs because of AI use across the board. So that's the next leg of what's happening, and we should actually pull that up. Talking about Jack Dorsey here, that's the next leg of what's happening. So those job cuts on AI are really real.
And saying that, by the way, I want to clarify, it's not that we are not growing. We are on a good growth path, but because of efficiencies, we are having to do this. So quite something. The other thing was Netflix walking away from the bid, and the stock zooming up 10% after that. So much happening on the
Right? And so it almost feels like a card game, and then you left someone else holding the bag. You bid higher and higher at an auction. So finally,
like
Warner
Monopoly.
Warner Brothers is not going to Netflix. Paramount is left buying it at a great valuation. So okay, so a lot of excitement going around. Yeah, that's the story we were talking about. He's Jack Dorsey, he's the ex-co-founder, is cutting jobs at his new company called Block. The headcount is being cut from 10,000 to under 6,000. It's the first large casualty of AI. And the stock was up. Now, this is the interesting thing. The stock was up 23% in post-market hours trading once this was announced. He's saying intelligence tools have changed what it means to build and run a company. And that's not the only set of layoffs because of AI. The US government, that's the DOGE, had seen quite a few cuts. This is the current employee list you're seeing. UPS, Amazon, Intel and Citigroup all have seen layoffs as well. But let's get to other global cues. It was a mixed day of trade in US markets as tech stocks lost favor. And you saw that across the board, really. Surprise factor there was Nvidia, perhaps, losing quite a bit after blockbuster results. But old fears coming back about capex and valuations, etc. Nasdaq down about 1% over there. Bond yields dipped slightly ahead of wholesale price data. The 10-year was at 4.01%. Weekly jobless claims have come in at 212,000. That's lower than estimates in the US. And there's one commentary that everything else is up and about. You can't really say what's happening. There's uncertainty, but jobs data, labor data is fairly steady in the US. So that's perhaps a good sign so far. Oil prices also steady after talks between Iran and US has taken place in Geneva. The Brent has stayed above the $70 mark. And let's pull up Asia for you as well. And Asia, interesting to see what's happening there. Nikkei actually cooling off after the Takaichi trade has cooled down. The new head of Japan has now nominated 2 people on the Bank of Japan. They're doves. So that's why that market is important to look at Sanai Takaichi there. The Takaichi trade taking topmost space in investor minds. The rest is quite mixed. I want to pull up the implied open for India, please, before we move ahead to that conversation with Matt Uton, and that's where the pain is, 91 points down. So another maybe shaky start to trade today. Matt Uton, Head of Advisory Solutions and Market Strategy, joining us this morning. Matt, very good morning to you. I mean, let's start by just getting your take on the AI job cuts that Jack Dorsey's company has talked about. Is this just the start of what we're going to see above the board? Because this is one founder who's come out and very clearly said that I've cut jobs because of using AI tools. Other companies may be doing it, but they couch it in various other reasons. He is upfront about it.
Yeah, good morning, Tamanna. And it's interesting because I think him coming out and saying this after there was a piece that was circulating across the US on, I think it was Tuesday, that helped take down the market that day, where there was a futuristic scenario of massive job losses due to artificial intelligence. And so I think it was very convenient to make this sort of announcement after the market had already had time to digest and think about what that might mean. I wouldn't extrapolate from what you're seeing with respect to Block to the wider market. And I also wouldn't extrapolate that even further to say it's going to lead to significant job losses across the US economy. I would call it workforce optimization, which has been happening for a while along the margin. I think Block is just a more extreme example. And this is also a company that has been struggling as well. And I think it makes sense to make that sort of decision, especially in a very light asset, more tech heavy industry where AI can do a lot of the programming work that people were doing. But to your point, you made the note that jobless claims in the US remain fairly consistent. You're not seeing continuing claims, which are the number of people sitting on the sidelines, increase materially. And so those are all good signals about the underlying health of the US economy. And that's why I'm still able to look through some of these changes we're starting to see take place and say, okay, we knew this was going to come, but it's not disrupting the overall jobs narrative, which then fuels consumption, which is critical to the overall economy. So I'm still optimistic on the economy and not so much on the fact that AI is going to kill jobs in a big number in the near future.
Okay. All right. A lot of people take heart from that. Matt, good evening, where you're at. The question that I have for you has to do with the murmurs that you might have heard over the course of the last couple of months about selling America, and that seems to not have taken place. In fact, it's contrary to what some people would have thought, because if you look at earnings, they've been robust. In fact, one might argue better than expected in several cases. Jobless claims and jobs in general are pretty steady. So things are looking good. So what does that mean for flows out of the US, perhaps out of developed markets into India?
This is such a great question. And so I'm actually in Nashville traveling, meeting with clients. And this question has come up time and time again as people think about rebalancing overall portfolios. And what I'm observing happening, especially with respect to a lot of our investors, is it's the marginal dollars going to work that might not be going to the US. So you're not seeing investors selling the US. You're seeing marginal dollars being put to work in areas where there might be more optimism around valuations, where investors are thinking about how do I get exposure to perhaps more value within my portfolio. So call it financials, call it energy, materials. And so they're looking to places like Europe. They're looking to places like Japan where there's fiscal support. You can capture some of the AI trade through Korea and Taiwan. And then you look at the EM complex specifically, which has largely been driven by those AI names. And then you have a country like India that underperformed the EM complex last year. It's been underperforming the broader complex this year. And so investors are thinking a lot more carefully about how they can bring down correlation and increase the risk reward potential for their portfolios. And there's a much bigger openness to having discussions around India in particular, because you can push out your efficient frontier as a foreign investor. And the fact that the Indian markets haven't broken down, they haven't broken out yet either, I think is encouraging. And I've been encouraging investors to really think about having an allocation, one, to help bring down correlations in your portfolio, and two, to have a market that I think, based on better earnings growth, strong economic growth, can really perhaps outperform, especially if there's weakness or stalling of the AI trade in the Koreas, Taiwans that have powered emerging markets so far.
Interesting take, Matt, and leads in perfectly to what my next question was to you, that if India is looking like an attractive alternative, and we've not yet seen that kind of interest coming in, where would you see that opportunity? Because we have now enough data from the Q3 earnings. What are you spotting right now? What are you excited about in the Indian equity space?
So I think one area that's getting more and more interesting is the defense space. So coming from the budget, defense was looking more interesting. You just saw Modi and Israel striking a deal with the Israelis. I think it's the first time in 9 years he's been over to Israel, and it just signals the importance of defense. Not only to India, but the rest of the world. There's significant investments being made. So you look at companies like Hindustan Aeronautics, which have underperformed, but over the longer term, there needs to be upgrades to aerospace, to helicopters, to jet fighters, which Hindustan basically has a monopoly on in the country of India. And parts can then be sold to other nations that are part of the supply chain. So that's interesting. You also have Bharat Electronics, that's been a much better performer, but has strong tailwinds and had really, really good earnings. So the defense complex to me looks interesting and has a little bit of momentum behind it. And if you want to lean into the consumer trade within India, I still think there's legs to the idea that you have a burgeoning middle class with more people wanting to travel. A name like GMR is something I've been looking at a lot more closely because they have exposure to airports, to duty free, to the real estate around the airports. And so there's a lot of diversified streams of income. And again, earnings looking very, very good and strong commentary for management. And then, another favorite on the more infrastructure type side, hard investments, more trade happening, is Adani Ports. This has been a name I've really been leaning into just because of their ability to capture the full spectrum of all of their customers from start to port. And so they're really making strides. And I met with their management team a few weeks ago and left even more confident with their ability to execute. And again, very strong earnings. So there's definitely opportunities across Indian equities for the more selective investor.
Answer. Thanks so much, Matt, as always, for taking the time, and wish you a happy Friday and a pleasant weekend ahead.
Thank you. You too.
All right, let's talk about what happened in trade yesterday. And choppy trade continues on the Lal Street. That's one line for it. You had the benchmark Nifty 50 that ended flat but with a positive bias. Of course, yesterday you had the Sensex expiry play out as well. The Nifty 50 traded in a narrow 173-point range. And I say narrow because it's relatively speaking narrow. The recovery took place from the lower levels, and that was driven by a few frontline companies. You had SBI, you had Reliance Industries, as well as ICICI Bank that contributed quite a bit to that recovery in the second half. In fact, Reliance Industries was a top contributor on the gaining side this time after having contributed the most to the declines in the previous session. The Nifty Bank actually mirrored that Nifty 50 move, and the Nifty Bank actually snapping a two-day losing streak in trade yesterday, though the gains were pretty muted, just about 0.25% higher for that index. A lack of triggers is what I had initially said, but as has been very well put by both Neeraj and Tamanna, it's not necessarily a lack of triggers, it's lack of confidence in moving to the triggers that is playing out seemingly. Broader markets ended mixed. You had mid-caps that outperformed because a few select stocks really did well in trade yesterday, 0.5% gains, and small cap index ended with a flat with a positive bias. So despite that, at the index level, you had quite a few individual stocks that reacted very sharply in trade yesterday, and so that bottom-up approach is what continues to be the main theme into 2026. Most sectors gained. You had defense and pharma that led the pack, as well as PSU banks. On the other end of the spectrum, you had media and FMCG that relatively underperformed. But there were a few stocks, Neeraj, even in trade yesterday, that gained 7-8%, over 10% in certain pockets. So that interest is alive and kicking at the individual stock level.
Yeah, and that's what probably continues to remain the case. Who knows until when?
Yeah.
Till the Nifty meanders in this very narrow range, while individual pockets continue to do so. I mean, which is why I'm saying that Nifty is in a bit of a no trade zone. In fact, if you think of it, if you're writing options, great, but if you're a buyer of options thinking that there could be an exaggerated move either direction, the eroding time value is exhausting all profits, and which is why option buyers are actually, licking their wounds, if you will. So it's become a bit of a no trade zone. Every rise is being sold into, dips are getting bought into at some point of time, but heavy resistances and supports in a very narrow band. Tech now looks like having some serious resistances at higher levels. I mean, Kush yesterday was pointing out how 31,000, which was the support, has kind of become a resistance of sorts from where the stocks are coming off as well at every serious bounce back. So in some sense, with PSU banks coming off, the bank Nifty has an issue. IT NUHs now has resistance. Autos now are starting to see that little bit of a issue because people believe margins could come under pressure because of rising commodity costs. That's 50% of your weightage actually having issues of its own. So difficult to see how the Nifty can show a bit of a breakout move. Today, maybe the MFI companies could be in focus. Now, keep in mind, viewers, there is a Bihar Assembly MFI bill that has been passed, and Bihar is the largest state for MFI originations or MFI lending. Now, the bill excludes banks and NBFCs and is applicable to a whole host of other categories, including individuals. But what brokerages believe, and Morgan Stanley Note says this, that the development could create an overhang on investor sentiment towards the industry, if not an actual impact. And they believe that lenders are likely to maintain or lower the share of microfinance in overall loans, given the volatility it may bring to earnings and stock valuation multiples. So there will be a sentimental impact, if not an actual impact, on a clutch of these MFIs, small finance banks and companies which have got the high exposure. Think Utkarsh, think Fusion, think many others. Some of it might be sentimental, but an impact there very well would be. And guys, just one thing, I mean, maybe we should have brought this up yesterday, but I was kind of talking to people and realized this, that CleanMax, the IPO, saw very tepid subscription. I was just trying to figure out why is that the case. And one of the things that came to the fore is that now AMCs are being very, very cautious where IPOs, the proceeds are not used for primary purposes, but are only OFS. A large share of OFS or only OFS. So I wonder if this becomes a trend for the future IPOs. It will be a really interesting thing to mark. Domestic subscription to large OFS or only OFS IPOs.
Yeah, but could it be one rule for all, or one brush paints all? It depend on the company as well, if it's that
pedigree,
100%. So they could, I don't know if this becomes a norm or no, but maybe collectively the body of the larger guys might have said, okay, listen, let's now be careful about subscribing to OFS.
There's also, and also IPO performances, post-listing performances have been less than dismal. It's no longer the hot ticket, and questions are beginning to be asked.
I wonder what that means for issuances, because 2026 was promising to be a great year. So far, it hasn't panned out in terms of size of IPOs coming.
Yeah, I believe the flood has turned into not a trickle yet, but almost there.
Yeah.
All right, some of the factors this morning, and I'm starting with Jeffrey's greed and fear note. It's made some changes Chris Wood has made some changes in the India long-only portfolio. So I thought that was noteworthy. Investment in Home First Finance will be removed and replaced by an investment in Adani Power. Investment in Ixigo will also be removed and replaced by Indigo, that's Interglobe Aviation. Lemon Tree will be replaced by an investment in Indian Hotels, and investment in ABB India will be increased by 1 percentage point by reducing the investment in Policy Bazaar. A long note, but I've just picked what I thought could be relevant and interesting. And one thing that they mention in this note is India's stance on AI, saying Delhi is focusing on the opportunity presented by AI for India. India is still viewed as a reverse AI trade, but it is healthy that the attitude of the Modi government is constructive rather than defensive. India certainly has the human resources and the entrepreneurial instincts to develop a flourishing startup culture, with the biggest challenge, perhaps, that the talent all emigrates to Silicon Valley. Meanwhile, if you look at the setup for today and factors today, markets are at a critical technical crossroad. Nifty has been clinging to the 25,400, 25,500 zone. The underlying momentum indicators suggest a sell-on rise environment unless specific resistance levels are cleared. Nifty is expected to continue its tug-of war between 25,300 and 25,650. The index is trading below its 20, 50 and 100-day EMAs, exponential moving averages, and the Nifty is testing the patience of bulls. A decisive break below 25,350 to 25,400 could open the trapdoors towards 25,250 and potentially 25,000. On the flip side, bulls only regain control if the index clears and sustains above 25,650. For the Bank Nifty, has been a relative outperformer, holding above its key moving average, support at 68.25 and 66.25, resistance at 61,570, 62,080. So look out for some of those levels today as well. But let me go across to Sharad for the FNO setup.
Well, largely we see the volumes and the rollover data which was there. It was on the lower side, and we can expect a couple of more days until the good trade comes in. Remember, there's a trading day holiday also next week. But right now, if you look at the opening cues which is coming in, the Asian markets have opened mixed, and the GIFT Nifty initial numbers, if I look at, it's largely range bound with a negative biasness coming in. And of course, we mentioned earlier that largely the heavyweights are not participating. Some day or the other, there is some issue in a sector, as Neeraj also pointed out. But let's look at Nifty Bank. That technical setup is looking a bit decent enough, and that buy the dip strategy is still working, at least for the medium term basis, especially on the long term averages. But let's look at how the FIs and DIs have moved. Yesterday FIs gave us a hope of 3,000 crores of inflow, but today there's a reversal of that. But interesting data is the shorts. Now earlier we used to talk about 80s to 90%, now we are talking 70s, and today also there is a minor increase in the, you could say, in the FI longs coming in. That's around shorts coming in at FI 78% as compared to 79%. Let's also pull out the important numbers to look at. The PCR ratio is still, you could say, very even Stevens when it comes, but slightly towards the put side. But nevertheless, we'll take this data for us. This is a good data. A good congestion level coming in for both at these levels have almost 25,600 and 25,700 when it comes to the calls. But let's look at the stock specific moves which should be in your radar, and on the open interest gainers, especially look at the capital market plays, CDSL and Angel One. There might be a little bit of more selling pressure coming in here, as this is what the data is suggesting. And open interest losers, let's pull those stocks also in to give you a perspective. And largely we see LIC Housing Finance. Over here we are seeing a decent long unwinding happening in this segment, but the persistent system and even other host sort of IT companies will remain volatile. And remember that up move which was there, slowly you could say that the impact is coming down. This is the rollover data which is coming in. Of course, these numbers will start going up as we go up. This is just the second day of the March series, the data which has come in. But largely we can see it's a consolidation at play, at least for Nifty, and no major indices trade can be made.
Completely. All right, stocks on our watch list. I'm starting with Aadhar Housing Finance. This was, by the way, something that Parag Thakkar was speaking about yesterday, and then you saw the way the stock moved as well, ended about 4% up. They have announced a promoter reclassification following an open offer completion. The Blackstone arm has now become the new promoter with significant stake. The acquisition involves over 28.27 crore shares at 425 rupees per share. This classification will come into effect from February 26th. Now, the previous promoter group, including BCP Asia, SG Holdings, and Singapore Holdings were in charge, and now, of course, it's Blackstone. So that might be seen as a further upside. NBCC is the other one. The company secured a 775 crore order from the DDA, that's the Delhi Development Authority, for the redevelopment of staff quarters. So may see some action there, or at least a positive sentiment. And the other one that I'm looking at is Tata Motors CV. Now, you would think that there is already enough positive narrative around this stock, but CLSA has come in with an initiate outperform, setting a target price of 673. They say this company is cycling up the hill. That's how they have described it, entering a sweet spot of cyclical upswing just at the beginning of current domestic CV upcycle. Iveco operations to benefit from emission norm changes in calendar year 27 and 28. These are all their basis for their upgrade. They're saying consolidated cash flows are also strong enough to result in lean balance sheet by 2028. So those are some of the stocks on my radar, at least my top 3.
Yeah, it's an interesting list. I've got Brigade Enterprises on top of my list, and this is an interesting one. I remember, guys, I've actually had a conversation with a senior living provider of care, and more this is going to be a combination of real estate developer with these senior living providers. And this one is Primus. The Brigade partnership is with Primus Senior Living for 3 senior living communities. Those will have a gross development value of 750 crore rupees. So the way that this works is, it is pitched as a senior living community. You can actually buy property in that community, and you get provided certain amenities that would be provided generally in a senior living area. 2 of those 3 communities will be integrated with a larger township development. A lot of these are being developed, by the way, in South India. They're yet to catch up in other parts of the country. It remains to be seen whether this is going to be a theme going forward as well. Ramco Cements is the next counter, and this is a simple update. They've sold non-core assets worth close to 60 crore rupees. This to Rainbow Foundations. They're going to utilize the proceeds to pay debt. This is something that they had stated that they would do. In fact, on the 22nd of December, they said that they would sell assets worth 200 crore rupees, and so far, including this latest update, they have sold assets worth a little over 1,080 crore rupees. These are non-core assets. MSTC is the last counter on my list, and they've gotten an order for NRS linkage auctions for Coal India. NRS, of course, is non-related sector. And for the coal sector, what that means is you're not selling to power, you're selling to sectors like cement and steel. And MSTC is going to facilitate the setting up of the auctions, the conducting of the auctions, as well as the execution of the agreements on its platform. So it's a platform service for Coal India that remains in place for 3 years. I guess to a certain extent, this would depend on volumes and number of auctions that take place. So they weren't able to quantify the revenue potential of the deal, but it seems like it's a good one.
Yep, we want good deals to happen, lest they help the market sentiment on individual names. By the way, Vishal Megamart may not have any such luck, because promoters likely to sell about 6.5% stake at a floor price of 115, current price 127, sourced from various notes. So keep an eye out for Vishal Megamart. May react today. If it reacts, you should know why. Aditya Birla Capital and L&T Finance might be interesting on a dull day. Because of the MSCI impact, which was scheduled to happen on Feb 27. So today, they are likely to see over $235 million worth of inflows. Now, I think for Aditya Birla Capital, it's 258, and for L&T Finance, it's 238 broadly, but over $235 million effectively, for both. So keep an eye out individually. So keep an eye out for them. And we're seeing instances of promoter buying happening in various pockets. Apollo Pipes fits that bill now. S. Gupta Holdings has bought about 2.43 lakh shares at 341.32. Remember the last few days when speaking about rising PVC prices and pipe companies doing well. Astral at 1675, Supreme has gone higher, maybe Prince has too. So Apollo Pipes, a much smaller entity, but in that bucket, and promoter buying happening. So I thought it was interesting to bring to the notice. So keep an eye out for these 3 in the session today.
The other big thing I think to track today is India's new GDP series. Gets unveiled today. It's revised GDP series. It will adopt FY23 as the new base year. Now, major indicators, CPI, GDP and IIP are being updated to improve accuracy. So we saw this happening with the CPI later. and now with the GDP. The reason is they want to better capture post-COVID consumption trends and the economy's shift towards services and digital activity. To understand the implications of this, I'm joined now by Gaurav Sengupta, Chief Economist at IDFC First. Gaurav, very good morning to you and thank you so much for joining us. How are you looking at this updation to 2023 as the base year? Will we see any real difference in the actual figure, and do you think this is a more comprehensive look at how to look at India's GDP?
Definitely there will be some impact in terms of growth rates. The last time when we had a revision, when we had it revised, the base was changed to FY12. There was an 8.8 percentage point increase in the average growth rate historically. We do expect that the new GDP, there will be maybe some marginal upward revision in the growth rates of the history based on the new series. But there are definitely methodological improvements. For example, they are trying to address the deflator issue, the fact that mostly 60% of the GDP uses WPI to deflate. So that tends to overstate the real GDP growth numbers. So they're trying to address that by reducing the dependence on WPI. They're also expanding the coverage. They're using new sources of information like GST, which will help, let's say, state level GDP capture to be improved. Even informal sector, for example, unincorporated enterprises, which are within households. Now you will have on a direct basis annual estimate of the value added by that sector, which is again a big change. So yes, we do expect there will be change in level terms as well as in the growth rate due to the GDP series revision.
Are you adjusting your own expectations, or will you have to wait? Or obviously you'll have to wait for the data to come through, but is there likelihood of an adjustment of overall expectations in FY27?
There will be. So we'll have to wait. So we have done our forecast on old base. It's very difficult to say, before the statistics comes out, whether there'll be an upward or a downward revision. Because on one side, if they address the deflator issue, that basically means that the deflator growth rate in the new base year series should be higher, which implies that real GDP growth rate should be depressed. But at the same time, because they are adding, let's say, GST, which will help them capture the formal sector much better. They are adding it, and that should enhance the growth rate of the GDP. So net, it's difficult to say, but we do still expect there will be a marginal upward revision because of the new sources of information. For example, even the informal sector will get captured better. You will have the consumption side. The other big change is consumption earlier used to be imputed. It was not captured directly via data. Now, some part of, let's say, household consumption will get captured by using data such as Vahan, GST, even railway freight movements, etc.
I think it's important. Thank you so much for that, Gaurav. I think this is important because for a long time, the question used to be, is the GDP actually reflective of the economy? And the fact that what gig workers now produce also comes in, what you spend on e-commerce also comes in, and all of that data is being captured is good. We actually have clarity on how much we're consuming.
Yeah. All of this is welcome, right? I mean, I really think on the macro front, both that whole inflation reorganization and now this is actually capturing the essence of, or trying to capture the essence of the revised spending and investing habits of the country. I think it's a really good thing.
100%. If you're talking about the CPI basket, then it still had cassettes.
Floppy disks.
And floppy disks in it. So it was bound to change, but also the reduction in the weightage of food to a certain extent, because so much of that swing was because of the way food prices would move.
Yeah. We should do a quiz. If you're watching this and you know what a floppy disk is, write into us.
Don't Google it.
Don't Google it. We'll take a very short break. We'll be right back with top trading strategies. Don't go away.
Some moments in life are lifelong. Some memories are lifelong. Blessings are meant to be lifelong. Trust is also placed lifelong. lifelong.
Heart lifelong, love lifelong, bond lifelong, memories lifelong.
True love is lifelong, isn't it?
Heart lifelong, love lifelong, bond lifelong.
We respect our loved ones lifelong too, don't we? Some relationships stay shining lifelong. Just like Tata Power Solar Roof. Best quality solutions, lifelong service guarantee and unmatched expertise. Ye on the quality lifelong.
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Program now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Program. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
साउंड चेक हो गया? विजुअल्स रेडी? लाइट्स ओके? एवरीथिंग इज रेडी? वेट, आर यू रेडी? ये सिर्फ एक कॉन्सेप्ट नहीं है. दिस इज माई लाइफ, दिस इज माई स्टोरी. वन नाइट, नो रिपीट्स. बुक योर टिकट्स नाउ.
First India tour in your city. Rock on with Shankar Ehsan.
Welcome back. You're watching India Market Open. Let's just pull up the implied open for you very quickly. A tough start to the morning is possibly what we will say. Let me go across to Parag Thakkar and Kush Bora joining us in our studios. Kush already has that TGIF smile. But, you know, is it because at least Saturday markets are shut and can't fall further? Or is there hope for some reprieve?
I'd go with the latter. But ये तो Monday to Friday वैसे ही रहती है. The smile.
The smile, okay.
But एक बात बताओ, all of this that we speak and discuss, this is recorded by the production team, right?
Yeah, and I think a few people do see it, Kush.
No, that's not what I meant.
You are on national television.
Of course I am. I meant if the production team records this, can we just ask them to pull up my recordings for the last 3 days and just play it again? मैं 4 दिन से same ही चीज बोल रहा हूँ, 4 दिन से same ही चीज हो रही है.
हम एक काम करते हैं, हम चैनल बंद करके घर चले जाते हैं. ठीक है?
आज नहीं कर सकते. Friday है, markets are on. No. So the reason I say that is because, like I said, we've been speaking about the same thing. Indices are a no trade zone. Buy on dips करो अगर करना ही है तो. And that's exactly what's playing out for the last few sessions, right? But like I just told Taman or answered कि the reason I'm smiling is because there are positives, and I'll come to that in just a bit. Let's just first recap what happened yesterday, right? IT stocks holding ground and PSU banks ka late recovery is what gave Nifty that push, right? And that's a good thing. So far, the 200-day moving average around 25,350, 25,300 zone, that's being respected. Don't take that lightly. Despite whatever is happening, despite the kind of gap down we may have, I remain very constructive on the markets, and couple of factors for that. The first one is the FII positioning on index longs. We've spoken about this a couple of times. It's inched up yesterday also from 21% to 22%. Don't take this fact lightly. Also, the second thing, and I think you've heard this enough. The last few sessions, we've been discussing how some of our calls have been really working. Again, that's not to say I'm great. It's the texture of the market. The stock-specific action in the market is so exciting, and that does not happen unless the undertone is positive. And that's why I remain very constructive on the market. The dip should be taken as a buying opportunity. Just to factor for volatility, I would suggest keep your positional longs ka stop loss at 25,250, 25,300 levels. If those levels are broken, then the structure could damage. But if not, there is a good possibility that the markets could rebound from here. So I take heart from that fact. Again, very interesting setup on Bank Nifty. Now, the reason I say that is because we've been saying isme bhi buy on dips karo, lekin the entry point is 60,500, 60,000 kind of zones. Largely on the back of profit booking in PSUs that we've been expecting. PSU बैंक में profit booking आया, yes आया, but सिर्फ SBI में आया और वो भी shallow. Now what does that tell you? That perhaps there is buying interest at lower levels, and hence 60,800 has been the level from where the Bank Nifty has rebounded for the last 3 sessions. So yes, if you do get a dip closer to those levels once again, that should be your entry point. So all in all, for the March series, unless something major disruption comes about, which it could very well do, I remain very constructive on the markets, positional long on Nifty and Bank Nifty at declines.
And stock picks this morning?
A couple of them interesting ones rather. I don't usually like the jewelry space, but I think Alex will recall we've discussed Thangamil, jewelers as one of the stocks that stands out in this space. And time and again, this has been popping on our radars. And this time it's just so strong that, I had to put it out as a call and not just as a stock that you should watch for. So Thangamil jewelers from a positional standpoint, 39.90, 4080 are your targets. 38.20 is where you keep that stop loss. Fortis Healthcare, again, positionally from an investment perspective, I'm very constructive on the hospital space. Fortis Healthcare has given a breakout. 985, 1010 are your very near-term targets. 945, is where you keep that stop loss. And you could also take this as an update, which is Colgate. Now, we gave this call slightly preemptively 2 sessions ago. The target 1 has been hit on it. The last 2 sessions move has been very interesting because the 200-day moving average has been taken out on the back of good volumes. So I think the risk-reward ratio still favors a long trade on Colgate. If you have a position, continue to hold. Targets on this one, 23.25, 23.85. Stop loss at the initiation price of 22.50 now.
Okay. Watch out for these. Thanks, Kush, for those ideas. Parag Thakkar would be smiling because FMCG names coming into focus. So, yep. But good morning, Parag bhai.
Good morning.
We might have a bit of a soft start today, dull if you will.
Yeah.
What do? I mean, there is also a longish weekend coming up because Tuesday also is a market holiday.
And plus the US-Iran thing is also pending. So
exactly.
Yeah. So markets will always have these events, but you have to pick your space. So yesterday I highlighted affordable housing finance and other. LG Equipment had a investor day yesterday where they are talking about doubling their EBITDA in next 4 to 5 years on the back of margin improvement. As Kush pointed out, I continue to like FMCG, Lever, Colgate, Dabur, all these are my holdings, Marico, Britannia. And I would like to say that now today, for example, yesterday what happened in US market was very interesting. That Nvidia was down by 5% and all Accenture, Cognizant, Infosys ADR itself, all were up. And that too, Accenture was up around 6%. Cognizant was up around 6%. So I think Nvidia CEO making the statements that just to consider these IT services companies as obsolete is the biggest mistake. I hope he is right. And I would like to say, for example, if Indian IT stocks don't open so much gap up, then I think it's a very interesting opportunity in large caps at least.
You think they will open gap up?
It should, because US, every IT services stock was up. It should open gap up over here. Let's see, but if it doesn't open gap up, it's a great opportunity in large caps.
It's interesting because the last couple of trading sessions as well, Parag bhai, and this week you've seen them, the index as a whole gain quite considerably, but it's been sold into and they've ended off the high point of the day, all of these indices, all of these stocks. But let's talk about the watch list, and incidentally the top stock on the list is Aadhar Housing because there's been a promoter reclassification, Blackstone coming through, and this is a stock that gained 5% in trade yesterday. Of course, Parag bhai pointed this out to you for different reasons. He said that he's liking this in the affordable housing space. Kansai Nerolac, we will talk about this in more detail, but some positive read-throughs based on the management commentary coming through. MSTC, I already told you about, they've been declared L1 bidder for the platform that will allow for auctions in Coal India's non-related auction. So this is something that you should look forward to. Jio Financial Services, there's going to be an infusion into an arm of 2,000 crore rupees as well. Brigade Enterprises is in the real estate pack. Interesting tie-up with Primus Senior Living. This is for senior living communities. A gross development value of over 700 crore rupees. Apollo Tubes, there's promoter buying. You Grow Capital, regulatory approvals have come through positive. NBCC has gotten a 775 crore order. Remember that order wins have been a trigger for quite a few of these stocks as well. On the downside, you have Vishal Mega Mart. There's a possibility of a block deal today, and so that could put some pressure on the stock. Utkarsh Small Finance Bank and a few of these other banks that have, or banks and NBFCs, just purely from a sentiment standpoint. With regard to the Bihar MFI bill, we've already told you that banks and NBFCs are not included in that bill. The sentiment could turn negative though. Dixon Technologies, the smartphone market is set to shrink according to the IDC, and this is something that will have a bearing obviously on Dixon Tech. And Hindalco, an acquisition review has been halted. This is amidst certain other factors that are playing out, but the entire metal pack, of course, you should watch out for on the basis of the underlying. Let me ask Parag Bhai what he thinks about real estate, and I know that the answer has been DLF in the past, but are you widening that at all, or are you thinking that this year is going to be a year of consolidation? It's going to be tough for these guys to sell property in the residential space?
I feel that DLF and Oberoi Realty, of course now I hold only DLF, but Oberoi Realty also, I think these two stocks are very good, and first of all they have a very low debt level, which I like in this cyclical business, and Oberoi Realty has a fantastic execution machine. So I would say that if you wait for 6 months, you can make good money in these stocks. In my view, these two stocks particularly, I would not touch. Unfortunately, the quality of Bangalore real estate stocks is very good, Brigade and all. But I think the connection with IT services, and although I'm bullish on IT sector, but I cannot take a view that IT companies will hire more. Right, so
no, quite the reverse. I think real estate might see a huge hit. I don't know if you guys saw what Jack Dorsey put out this morning on his company called The Block, and
that's what I'm saying.
4,000 people gone, so 40% of his staff is gone.
That's what I'm saying. That's why it is bad for real estate. Who are connected with IT,
and if
which
you
is
look
Bangalore.
At, and if you look at how the stock price reacted in post market hours, there was a 22% hike, a big jump in the stock price, because the investors are rewarding it, saying that you're getting leaner.
So and unfortunately,
he's saying my profits are good. I don't need to. I'm not in any trouble that I'm cutting, but this is just the way things are. So I think real estate, you think, will have a shaky day today?
So not shaky. I would say that IT. Actually Oberoi Realty, or to some extent, is not very much connected with IT services.
The Bangalore,
but the Bengaluru guys like Brigade and Prestige and Sobha, those kind of guys, they are all good companies. But the problem is that I think the lack of IT hiring should impact them.
You know,
in long run.
We are talking about it, I think, a little myopically, only in the context of real estate. But if this is across the board, then that whole salaried Indian middle class is propping up so many sectors and businesses right now, from quick commerce to consumer durables. I mean, then we're talking about a different situation.
That we cannot imagine right now.
Yeah, so that's maybe not a SaaS apocalypse. We'll have to think of another word for it, but that's a different story.
I hope we don't go there in real economic sense. Otherwise, it's a big problem.
I have a theory. Should I say?
Yeah.
That at some point, even though AI and technology adoption will give a lot of gains to the balance sheet, there will be a collective thinking to say, yes, it's good, but let's stop it, because the impact on civil society is too large. It will come in with those guardrails.
I completely agree with you.
Let's see. Let's see. It's a guesstimate prediction. Say what you may. You have the reverse view that the world will let everything just change dramatically.
I mean, I would suspect that not everything is in the control of the civil societies, and if things have a way of moving.
No, I'm saying governments will come in and step in.
I'm saying difficult. So think of it this way: the governments want control on currencies, for example. I don't think they will be able to stop the advancement of crypto per se. And then you had Trump coming in and endorsing it as well. At some point of time, societies which benefit out of AI will say that nothing doing, we are fine with it.
No, but the counter argument of the crypto point that you're making is that you have central bank digital currencies. That's the way that they're going to
Has it
control
stopped crypto is the point I'm making.
No, it hasn't. It hasn't. Okay, so I mean that's the ongoing debate. Join in if you will and tell us what you think. But let me go across to Somit. No debate that his dealing room chatter piece is most watched out for. What do you have for us today?
Well, few stocks that dealers have highlighted in trade. Firstly is Bandhan Bank. What dealers are indicating is that there are buy flows on institutional desks when it comes to Bandhan Bank. In fact, the bank met few of the institutional investors and strong commentary has come out from that. In fact, dealers believe that the fourth quarter numbers could be quite strong for Bandhan Bank and hence buy flows are expected to continue here. When it comes to Coal India, dealers indicate that the Feb 2026 volume number is expected to be quite weak, and this is despite the fact that last year was also a weak number. So despite having a low base, dealers are expecting a weak number in this month as well, and dealers indicate that the volumes could drop by nearly 2 to 3% on a YOY basis. Apart from that, GMR airports continue to remain in focus. Dealers are expecting a block deal to happen very soon on this counter. For HUL, multiple dealing rooms are giving positional short calls or positional sell calls to their clients for HUL, so keep an eye out for HUL as well. And when it comes to RBL Bank, there are buy flows on FI desk. A large prominent FI has been buyer in this counter in market. Delivery volumes are also slightly on the higher side, so keep an eye out for RBL Bank as well.
All right, so that's what's buzzing this morning on the dealing room front. But let's come back to stocks that we're talking about this morning and what we're focusing on. I want to just get a view on Kansai Nerolac, if anyone has looked at it, because good presentation, management has been talking about its focus going there, and we'll get a piece up on that as well. But in that entire space, is that something that you're looking at a little positively?
So I would say that it is the problem with the space is that the new player has come with a lot of capital and lot of aggression.
Heft.
Right. So overall volumes, if they go up, and for example, for Kansai Nerolac at least, I would say that auto segment is doing well. Right. For example, Maruti is doing extremely well because of the GST cut, and Maruti is their key supplier on the auto side, key customer on the auto side. So I would say that the housing paints, the coating paints, that is where the competition is hitting up. But I am hearing that Q4 should be good for them, and so they are also targeting 10%.
For Kansai or for all?
I'm saying for all paint companies. So I'm saying that if they are targeting 10% revenue growth, it should be possible. And the stock has not done anything since last many years.
Which one, Kansai or?
Kansai.
Yeah, and even Asian Paints is underperforming.
Yeah.
So, but would you be a buyer in any one?
Yeah, I would look at. I would start looking at this space now, because now it has underperformed meaningfully, and the stocks are genuine businesses. Businesses are good. There is no problem. It is just that one player has come with a lot of cash. Of course, they are also not here to burn their cash forever. Yeah. They also would like to come to profits.
Is there anything on the charts that would suggest that a bottom has been found?
Yeah, in fact, I was just going to say that, what Parag Bhai is saying about Q4 is reflecting on the charts as well. And, as we spoke, I was looking at Kansai, Berger Paints and Asian Paints, all three of them. All three of them have held their support zones, for the entire month of February, and there are positive divergences. Again, this is not to suggest that the momentum is very high and all of these are going to have a splendid next 1 month or two, but this is suggesting that from a near-term perspective, the fall has halted. So if you want to play a risk-reward ratio, then you could look at it. I would actually stick to the big names. I would stick to Asian Paints for that matter. The recovery is slightly better than some of the other names, 2350, 2325 being your stop loss. Just a quick word on RBL Bank, something Somit mentioned. It's popped up on my radar as well. Very interesting moves on this one. As long as 315, 320 zone is held, I think the stock is in for an up move, positionally.
Okay, so Kansai in focus, and we're going to keep that FMCG space in focus as well. Going across to Mahima for more.
Right. So, Tamanna, in terms of Kansai, so there was Kansai Paint Japan's meet where they discussed India business, and overall the management has laid out a sharp, defined roadmap for each of its divisions. In terms of non-auto industrial coatings, they've said that the growth is expected to be around 10% per annum over the next 5 years. Eventually, it will contribute around 25% to its overall revenue, which is currently between that 15 to 20%. 40%. Auto and refinish coatings, they've said that they're expecting healthy growth to sustain, has dominant market share of overall 60% plus and over 70% plus in two-wheelers and three-wheelers, to grow at 5 to 7% per annum and contribute around 35% to the overall revenues versus current 30%. So the focus is going to be more towards industrial coatings. For decorative paints, they've said that it is going to grow in that range of 2 to 4% with a stable top line growth and sales resilience of around 40% is expected. Plans to focus on investments in states where they have sizable market shares and focusing on 3 sub-segments, that is wood finishing, construction chemicals as well as projects, that is their B2B business. In terms of other highlights, management currently has no plans to divest their decorative business. They've come out and said that clearly. Competitive intensity remains elevated but is not worsening is the key commentary coming in, and they're saying that it has largely stabilized at high levels. Lastly, in terms of where margins go, they've said that they aspire for a 200 basis points improvement on account of first operational efficiency and second premiumization with no major capex planned in the near term. So this is the overall, key takeaway for Kansai Nerolac India business.
But it's not just Kansai, also focusing on HUL today. And an interesting point, actually this is something Parag Bhai mentioned a few days ago about how HUL's capex is something of a game changer. We dug in a little deeper and Mahima has this report.
So, in fact, I spoke to Parag Bhai yesterday, tried to gauge as to what this actually means for HUL. What basically happening here is that they are now going for focused capex, right? Last week they had announced that they're doing 2,000 crore of investment specifically for beauty and personal care. The investment will spread in the next 2 years to boost premiumization. So their focus remains on premiumization in the beauty and personal care, and more aggressive capacity expansion will happen in phases in the coming years. Now, in terms of where historical capex goes, of course, this has not been focused capex, but overall, the capex for the company has remained in that range of 1.5 to 2.5%, and this is the overall capex in the past 4 years that they've done as a percentage of their revenue. As you can see, it's been in that range of 1.5 to 2.5 odd percent. Now, what's the change in strategy, right? In the past 2 quarters, the commentary that has come in, the focus is on fewer and bigger bets, presence on the premiumization side. They're completely focusing on premiumization. And the third is that they're focusing on volume growth. Now, sectors that they're focusing on the premium side of businesses, the skincare, hair care, personal care, and home care liquids. These are the 4 areas of focus. Now, what is different under Priya Nair's leadership? As I mentioned, there's sharp focus on volume increase. From here on, they want their volumes to be better, sharp focus on premiumization as well, and focus on beauty and personal care growth. Lastly, in terms of where brokerage views go, Nuvama has maintained buy. What they're saying is that stock is attractively valued right now at 44 times FY27 and 40 times FY28. HUL stock is in the oversold zone. Company will benefit more likely from the inflow coming in the FMCG sector and expect recovery in HUL's volume growth to continue. So this is the overall view of what this focus capex means for HUL, and from here on what growth trajectory looks like.
Very interesting. Thanks so much, Mahima, for getting us those details. Parag Bhai, why don't you weigh in on this? Because the point is, on the face of it, if somebody is not tracking HUL on an ongoing basis, they would say that, oh, this amount of money that they're spending is not very large. But if you delve deeper, as Mahima has done, it is targeted. And so therefore, what is the takeaway?
Yeah. So basically, after Priya Nair has taken over, I think the precision with which she speaks and she targets the segments, I think is phenomenal. So I am absolutely impressed with whatever she has done. First of all, she wants to focus on beauty and personal care because she feels that that is a category where there is growth and premiumization both, right? So the margins will also improve gradually. All right, so that is where the return on invested capital is much higher, and that is where they already have a right to win, right? So they are doing all correct things, and as Mahima pointed out, 40 times the FY28 history. If you see, lever has never traded 45, 47 times 1 year forward, so it is below historical average. And now they have got a great CEO who is focused on volume growth and premiumization both.
Possibility of high single digit volume growth in FY27?
See, high single digit, I will not say. 4% was Q3, and
they said they'll be better than.
And this was even after the fact that till November there was a destocking going on because of GST cuts. So now I think this quarter should be 5% and above. Gradually they should move to 6, 7, 8%. And along with that, if they can maintain margins and grow margins, the EPS growth, if it comes to 9, 10%, I think market should be happy at this price, I'm saying.
HUL versus Dabur versus Nestle.
So all FMCG I like actually, but I have HUL and Dabur in my portfolio. Nestle is the problem is Nestle is doing very well, fantastic. The problem is that Nestle is too expensive versus HUL right now.
Okay.
It deserves it.
In valuation.
It deserves it. Yeah. It deserves it because right now the growth difference is also very high. But I would say that I'm a value buyer, so I will buy. So I have HUL and Dabur. HUL, Dabur, Marico, Britannia. Loaded actually.
Wow.
No, the only thing is this overarching bet on FMCG means that you are not as constructive on discretionary consumption. Would that be a fair assessment?
So basically, within discretionary consumption, I have Bajaj Auto in the portfolio.
That's one two-wheeler.
Oh yeah, one two-wheeler.
That's also not necessarily the upper end of the
Yeah. So basically, I'm little bit moving towards the safer ideas, and so basically, or contra ideas you can say, and just what we were discussing on these jobs and all. So I'm not very gung ho about very high discretionary consumption.
Interesting. So but which is what I was coming to. That one thing is that could there be job losses which could impact discretionary consumption, but two, this whole overarching thing. I mean, GCCs are making a real presence felt in India, and that is not getting impacted by AI in a meaningful way for now. At least there are new investments coming in. That plus the fact that growth, GST led, etc., and all of that is doing okay. And a lot of these sectors are completely underpenetrated even now, right? India doesn't have the highest penetration in a lot of these upper end of the K curve discretionary consumption names. FMCG may do well. Does it mean that it will come at a cost of this, even if AI related job loss or IT related job losses impact this? I think the question is still, the jury is still out there, not quite locked in.
I think soon enough we will get a sense of what corporate salary growth is at the end of FY26.
I think the point you're making is then if the IT software engineers can't buy, someone else will come and buy.
Yeah.
Because underpenetrated.
Because data centers are coming, other people are there, so they will come and buy. But some catchment areas like Bangalore real estate may get shaky.
And just to add to your point, that is why we have the jury is not out exactly, and that is why we have to buy stocks which have not priced in the big growth. That is why you have to keep that margin of safety.
Fair point.
Okay, fair enough. I actually
9 o'clock. Sorry.
It is 9 o'clock. It is 9 o'clock.
Infosys, first rates coming in. Look at Infosys. These will all settle. Look at right now. I want to pull up some of the others. I want to pull up TCS. I want to pull up Wipro. I want to see if what Jensen Huang has said and has helped some SaaS companies overnight in the US is helping here as well. All of these rates will settle. So that disclaimer is always there. Not NetPeptech really. I'm talking about your SaaS kind of players. What's happening with the Coforge, Persistent? Let's look at some of those players and the action over there as well. Vishal Megapart is the other one, that block deal. What's happening there? We can check that out. That's about 8% down right now. Some of the, Sapphire Foods not doing too well. AstraZeneca. These are all very, very initial rates. But you're saying IT is the big one to watch today?
Yeah, I think IT should be the big one. They are oversold. Yesterday in US at least there was a divergent trend that Nvidia was down and all these companies were up.
Yeah.
So
let's see if it continues.
Alex?
Yeah. No, I was actually making a point. You pointed out as 9 o'clock. I was actually going to ask about AC manufacturers because we were speaking to Blue Star just a while back, and the signs that were pointed out to were that people were, dealerships at least, were buying ahead of a possible increase. No, a possible increase in the cost of ACs because they will have to transfer the price of increase in raw materials, etc. But if the argument on consumer discretionary is what you're making, then you're saying that the pain for these AC players is not going away anytime soon.
I think it depends on summer, how it pans out. See, last time what happened, the summer was panning out well. On the 46th day, there was suddenly rain in India. And the entire summer fizzled out, right? So this is the risk in this.
It's not like I'm complaining,
there is a risk in this business. That's what I'm, so again, I'm coming to same point. So buy when things are not well. don't buy when there is a euphoria or there you know.
What did you make of this report on smartphone sales or growth reducing?
Sorry, I have not gone to depth, but I don't hold Dixon too much, so it's okay.
It's okay, all right. On the charts, Dixon at close to 10,000, would you buy?
Not really. I mean, there is overselling and, hence you could see some sort of a rebound, but is there any meaningful kind of an uptick? Not yet. Volumes also fairly healthy on the downside despite the battering. So yeah, I mean, this is some space, this is one space that you could avoid. In fact, if you want to look at something, look at Sirma and PG Electroplast in this space. Otherwise, I would avoid Dixon for now.
Okay. All right. Let's talk about, seasonality for a second here, even as we let those pre-open rates settle. Sharad Dubey is joining us. Now, by all accounts, Feb has been, you can call it frightful Feb, freaky Feb, whatever you want to call it. It was a painful one because a lot of ups and downs. Traditionally, February has not been great for the markets, but this time was even worse, wasn't it, Sharad?
Exactly, and there was a little bit of punishment, or I could say a big punishment for the anti-AI trade, as analysts talk about, especially the IT index, which I'm talking about. Today is, of course, the last day, but it's been a very rocky month. If you look at the larger IT plays and even the Nifty heavyweights, some churn was happening all across, but no major clear trend has been coming in. AI disruption, that is something which will keep the market on the hooks for the coming months as well. But the Nifty IT index, look at the decline, it's 20% down. I'm talking about rupee terms because after that there's an interesting dollar return analysis on that. It's the biggest monthly decline since September 2028. Let's just show how February has panned out, and it has not been that good. It's been red. Nifty 50 or 6 out of 10 times. Even the mid caps and small caps have taken a beating, historically speaking. IT and FMCG also make it to the list. Look at the average returns. This is the downtick coming in, almost 3% down, and of course a good pressure coming in this year as well. But other sectors are there which you should be watching out for, where it's even Stevens when it comes to real estate, and for banking and metals also we see it has been in the red. Largely the returns have been flat for these segments. I can't see a single green in the screen, and that's kind of surprising as well. But nevertheless, it is flattish here. But auto, that's also something to look at. That's down 3.5%. But this is much more interesting for you because I have done anti and AI trade, both of them. To keep things in perspective, it's in dollar return. Kospi, 20% up. Taiwan, TAIEX, that's up 11%. Remember, there's an emerging market and the AI theme being played. Nikkei, there's a Takaichi trade, and that's down, that's up almost 9%. Nifty index, actually dollar has helped, and that's actually 1.4% up if you compare that. And of course the Nifty IT index and Nasdaq, compare them. Nifty IT index 19% down dollar terms, and Nasdaq, there is a little bit of confusion in the AI space, that's down 2.5% as well.
Okay, so it's been I think really frightful Feb, if for nothing else. I just think of it from the Indian perspective. You started with the budget, a bit of concern there after the budget, that gets recovered. Then you have the India-US trade deal inked, there's euphoria there. Then you have this AI trade coming in. So much back and forth. But let me go across to Amardev Singh, who's joining us this morning. He's Senior Vice President Research at Angel One. Amar, very good morning to you. Let's get the Nifty Bank Nifty call first.
Yeah, I would say that if I look at Nifty and Bank Nifty, first talking about Nifty, clearly seems to be in consolidation because what we are seeing is that Nifty is very strongly supported on the 25,400 odd levels, but again on the upside meeting with resistance around the 25,800, 900. So it's more of a range play. And if we look at for the last almost since 13th of February, that's the way Nifty has been behaving. Technically, if I look at the charts, even from an intermediate term perspective, that clearly shows that there's more of choppiness that's going to be there, at least for next few weeks, till we see Nifty sustaining above the 25,800, 26,000 levels. I would say it's in for consolidation. However, Bank Nifty is better placed. I had earlier also spoken a few weeks back that Bank Nifty really hasn't corrected, and some of the banks have helped Bank Nifty stay I would say positive. This month also, if we compare Nifty versus Bank Nifty is up by almost 2.5%, whereas Nifty is up by marginally 0.6%. So Bank Nifty is strong and positive, but yes, there are some signs of, I would say, a loss of momentum in Bank Nifty as well. So as far as Bank Nifty is concerned, strong support for Bank Nifty is seen around the 60,000 levels. Whereas on the upside, the cap is around the immediate cap is around the 61,400, 500 zone. with definitely a positive bias for Bank Nifty.
Amar, quickly, what are the views on individual stocks that you are looking at this morning?
Yeah, so there are two stocks. One is from the banking space, and that is JK Bank. So if you look at this stock, the stock had been consolidating significantly for the last almost many months. It had been consolidating between the 100 and 110 range. So that range has been taken out over the last few trading sessions, and volumes have also been very significant. So if you look at the volumes and the delivery quantity, that has also been very strong and sharp, and it has taken out very crucial zone of resistance, which was around 116, 117. So this is one stock one can definitely look at buying at the current levels for an upside target of 139, because the stock sustaining over the 118, 120 levels could take it towards the 139, 140. So that should be the target. And the stop loss in this case is 107. So that's from the banking space. The second is from the infra space, and that is JSW Cement. So we've seen this stock correct significantly post its listing from almost 160 levels. Currently it's around 128 odd. It has bounced back. We've seen some strong volumes also in this stock. It needs to sustain above the 125, 126 level. So this is one stock one can look at for an upside target of 137 and a stop loss of 170.
Okay, all right, interesting. Particularly J&K Bank, right? Interesting setup for that. We'll talk about that in more detail. For now, let's turn to the big brokerage call of the day, and it's Bernstein that has maintained an outperform rating on PB Fintech, and Sharad joining in, of course, to tell you about the rationale. Sharad, what stands out here?
Well, thanks for that, Alex. It's a largely positive note coming in for PB Fintech. They have maintained outperform rating, and the target price is set at 2,200 rupees per share. The important thing is they've stated that they are thinking the commission regulation risk that is already being priced in, and there's a little bit of downside risk coming in when it comes to the reduction in the take rates. Take rates is nothing but commission in this industry. Now, they're thinking that the AI disruption debate for PB Fintech right now is actually more nuanced, and they do not think any kind of a AI wrapper would be actually impacting the key business models. Now, PB Fintech is best placed to build such a wrapper themselves, and this will aid the business itself going ahead, and the future agentic commerce definitely is a risk which they have mentioned, but PB Fintech needs to lead the industry when it comes to the AI efforts to actually maintain its moats. So net, the overall view for this brokerage note is positive when it comes to PB Fintech.
Okay. Thanks a lot for that, Sharad. Again, a stock which is kind of stuck in this range, doesn't quite eclipse 1800, no matter what the attempts may be. It seems buying at lower levels. Keep that in mind. By the way, as the pre-open rates have settled, Vishal Mega Mart, because of the block, is arguably the biggest loser, likely to be down about 5, 6, 7%. So keep an eye out for that. Don't see major gashes on this MFI related place. So it has remained a sentimental impact. Credit Access Grameen about 1.68%. I wonder if Utkarsh, SFB and some of the others, 2% lower. Nothing dramatic, just about a couple of percentage points, as it probably should be, because the banks and NBFCs haven't been directly mentioned explicitly in this Bihar bill. It is for individuals and others. So keep that in mind. Angel One about 1.78% lower as well. Kush, I know Parag Thakkar is not quite favorable with these brokerage names, but not just Angel One and Grow, but some of the others, Motilal Oswal, etc. and stuff like that, MK. There was some pressure in second half of trade yesterday because of some comments that came about. How do the charts look here?
Not very encouraging. And while I've said in the past that this is a sector very close to my heart, having worked in it for a while, I think this is more of a dying industry. If you speak to anyone who's in the industry, who's been working for a while, this is going the telecom way, where unless the revenues go or rather the pricing power comes in, which very unlikely, they're going to face pressures, and most of them have shifted from broking to a lot of other things.
Dying industry.
Broking.
You mean the non-tech broking?
Traditional
broking. See, a lot of these have already shifted to other products. Who relies on broking income anymore, right? Just to get a bread and butter. This is just to rope in the client and then you sell everything else. And hence, I think just these. I can't call any broker a pure play right now because they are selling everything, correct? But those who have more concentration of this are not going to do well, and hence I still like within this space 361 and Nuvama a little more.
Because more focus on wealth management.
Absolutely. And then if you want to probably broaden the spectrum a little, I think the AMC stocks which we've discussed, a host of them, Nippon, SBI and, Nippon, Aditya Birla and, HDFC AMC, just to name a few, they've been doing well. So I think that is a pocket where you want to focus on rather than just, guys who are just purely, dominantly, broking faced.
Okay, so that's I think a big one. I don't know if Parag Thakkar has any views there. He's
no, I have been very clear. We are all overexposed to equities, so I don't want to increase my exposure by buying brokers. I will give business to brokers. No, but Parag, I will not make them die.
No, but that is you. For an average person who is not overexposed, what about that person who's watching you?
I will go for wealth management and I would say. AMC, so ICICI Prudential, HDFC AMC, 361 Wealth, Anand Rathi Wealth. I think these are better ways to play the capital market theme.
Okay, I want to pull up the Nifty IT and how it has settled in the pre-open session and some of its constituents before we open up very quickly. Let's, if we can, pull up that Jensen Huang quote, which we talked about, highlighted first on this show, where he comes and says that fears of a SaaS apocalypse are overdone. The narrative is wrong since AI agents won't replace software tools, but they'll sit on top of them. You saw that kind of boost in US markets and perhaps here. Like I said, let's look at the Nifty IT, let's look at its components in Infosys, Tech M, Wipro, all of them in the pre-open session also up in the green. The Nifty IT itself nearly 2% up. So any buys right now on this charts?
Just a quick word, Neeraj was always fantastic with, macros and fundamentals. Thoda sa technicals bhi rub off kar rahe, where he mentioned 31,000 resistance and on the Nifty IT index. That seems to be, taken out by the, at the opening. I think Infosys and TCS to begin with is something that you should focus on. Maybe start buying in small quantities with the recent lows at stop losses.
Yep. Well, one portfolio is certainly up today, and that is the portfolio of the gentleman in our studios today. Parag Thakkar is overweight large cap IT that is starting to show some bounce. Let's see if that lasts or no. Yep. The 31,000 was frankly borrowed from Kush, but we're getting ready to start. And remember, it could be a soft start despite IT doing okay. So interesting to see what kind of pairs gains, maybe in Airtel, maybe in ITC, maybe some of the others. But yeah, a very soft start, not as bad as the implied was suggesting. Let's see if it kind of goes on to that 70-80 point downtick that we were seeing at 8 a.m. Bank Nifty is down 0.5%, contradicted by IT. I think IT would be doing well, and which is that supporting, and 2% up, 31189. Really strong start by IT. Let's see if this is a pop that gets sold into, or does this see some buying? We'll put both Amardev Singh and Kush Bora in a spot after 3-4 minutes when we ask them to give that call clearly. The small cap index must be flattish. The market breadth is even Stevens, but 1/3% lower actually. Let's get the heat map up on the screen. This scene would be dominated by IT here. Infi, Tech Mahindra, HCL Tech, TCS, Wipro. Frankly, if you look at it, that's the only pocket or only cohort which is in the green. Everything else is in the red. Now the Nifty 50 is down about 100 points. Airtel, 1.3% lower. Indigo, 1.4% lower. I think this cancellation leeways that have been given, much welcome as a customer, I must say, but maybe that is impacting Indigo as well. Ultratech 1.3%, Maruti, JSW Steel. Frankly, everything else is in the red. Reliance is down close to 1% or thereabouts, and which is also putting pressure on the market. So save for IT, everything else is in the red, Tamanna.
This is just single-handedly keeping the Nifty from looking worse than it already is, I would say, because you're already about 100 points down. So it took a few minutes after the open session, but yeah, the pre-open was fairly accurate in that sense. India VIX also about 1% up. Let's look at what the broader markets are also doing. Let's pull up the mid-cap and the small cap for you, and there the gash was even deeper, about 0.5% down. Advanced decline also showing you that the mood is not positive right now. Now, there could be a number of factors that's bothering the market, but the FNO guidelines and any conversation around the FNO guidelines is possibly one of them as well. I want to pull up the sectoral heat map for you and just get you a sense of what's working there. And yeah, it's just IT. Look at everything else. That's the lone ranger really in this market. And frankly, with that nifty presence that the IT has, it's not necessarily doing much for anyone's portfolio. So if you are one of those people who went long IT and showed faith in it, then that's fine. For everyone else, it's not a great day actually. Nifty infra, nifty auto, all down about 0.5%. Nifty consumption, the entire basket is looking fairly negative, like we saw with the breadth as well. I want to pull up specific stocks and talk about those, and I'm starting with a mix of mid cap and large cap IT, because Jensen has eased fears. That's the reason that's happening. Remember, you saw all of that analysis first here. So you're seeing an Emphasis doing okay, of course, a Tech M, Infosys, all of them between 2 and 2.5% up, really is what you're seeing. HCL Tech, Coforge also is something that we should pull up and look at how those stocks are doing, as we've started Coforge about 2.5% up. NetWeb was buzzing in the pre-open session. It's a data center play, 3% up right now as well. Let's look at Brigade Enterprises. They have a couple of tie-ups for senior living, not doing much to the stock, and maybe even if that is a positive news, this fear about job losses could be weighing down Bangalore-based real estate companies. Vishal Megamart will see pain. Large block deal got upsized shortly before markets opened. That's by about 7% down. And PB Fintech was our big brokerage call of the day. Bernstein has a positive view, but the street is not paying too much attention to it right now. I would say about 0.5% down. But then if you look at it, everything except IT is not doing great this morning.
It's looking like a not so pretty picture. In fact, even IT has lost ground from the high point of the day. Now trading with gains of about 1.5%. And you saw that on the Nifty 50 heat map, just those 5 IT counters doing okay, weightage of about 11% or thereabouts for the Nifty 50, and so therefore can't move the needle too much. But if you look at the broader markets now, Vishal Megamart, the worst performer, down 7%. Not too far behind that is L&T Finance, down about 3.7%. Coromandel not doing particularly well in trade today. Bandhan Bank also seeing a tad bit of pressure, 2.7% lower. Thermax, Jupiter Wagons, TBO Tech, IRCTC, all with cuts of over 2%. You have on the winning side though, Tejas Networks for a second day on the trot doing reasonably well. I wonder what's playing out here. 6.5%. Of course, it's lost a considerable amount of ground from the high levels, so it could well be just a bit of a bounce back from those lower levels. Kajaria Ceramics doing okay, 3.5%. Birla Soft, Dixon Technologies, interestingly, up about 2.7% or thereabouts. And then apart from that, it's mostly a list of IT counters. So the question to Amardev Singh first is that in this kind of a texture of the market, would you trade into IT, or would you say that there's been too much volatility and you're not certain of the direction from this point?
Yeah, I would say, see, IT definitely has been beaten down significantly. And I would say that you can look at heavyweights like Infosys at the current levels, because if you look at Infosys for the month is down by almost 20%. If I look at the longer term charts, that's on the yearly basis, so it's around very crucial support zone. So you can expect a pullback in Infosys, or be it some of the other heavyweights. So for example, if I look at Persistent Technologies, or for that matter TCS, so you can expect a pullback, but you need to remember that that's more from a trading perspective, because the longer term structure of most of the IT stocks have really turned very negative. So what it effectively means is that if there is a bounce back, that will be more used for profit booking or for creating shorts till the time we see consolidation in the stock. So for example, if I talk about TCS would have to consistently sustain above the 2800, 2900 level to indicate that the worst is over. Otherwise, it could consolidate. But as they have corrected significantly, we could see some temporary respite and bounce back. That's it.
All right. Kush, you want to weigh in on the index level as well, because Neeraj has given me my cue in this case, where I'm trying to put you on the spot. So 31,000 is where you said the resistance for the IT index is. It's above that point right now. So where does it close?
Yeah, so this will now act as the pivot level where in and around or around the 31,000 mark we'll perhaps trade for some time. And the reason I say that is because even though the IT stocks are positive now, remember this is more of a rebound from extremely oversold levels. So yes, I would look at where the index closes. I will also focus on where the individual stocks close. Do they close at the high point of the day, or they do or do they give up gains that they've had at the start? That remains critical. In any case, I'm not expecting a V-shaped kind of a recovery in a lot of these names. They just become a very interesting buy from a positional standpoint because of the extreme oversold nature. So yes, I remain constructive on IT, but I will not go out and buy the whole hog. Like I said, 15%, 20% is how you want to start buying if you already don't have a position on the IT stocks. So yeah, not out of the woods, but definitely a sector to and a space to watch for. One stock that I want to highlight, I think this was something that Tamanna mentioned yesterday in her commentary, and I think it's a call that Amar's given this morning, which is J&K Bank. Fabulous run on this one for the last few sessions. Also, just to put in context, this is breaking out of a 20-month long consolidation on the back of hefty volumes. So I think this is an uptick that could very well continue. So kudos to Amar on that call. I think there is enough and more room on the upside for this one to move. So just wanted to highlight that this setup is rather interesting.
But banks per se or NBFCs are actually a bit soft today. L&T Finance is down 3.5%, Bandhan Bank 2.5%, Credit Access, like we said, 2% lower. Aadhar Housing Finance, yet another 1.5% gone. Home First is down. So some of these are facing the pressure, NBFCs in particular. So keep that in mind. Vishal, Megamart is down 7%. Parag Thakkar, this block deal brings the price lower. Is it a business retail that you like? Would you want to go there?
No. 75 time trailing P. 75.
Too rich.
Too rich.
I love it. I love that he's just got all of these price to earnings ratios on the back of his hand.
So I got this. That is what we do 24/7.
I love it.
Yeah. So anything in that space which is not that
high
fat content.
So V2 retail actually delivers superb numbers. They are just too good to be true. So if somebody has some insight into it, that how they can deliver in such tough environment for retail, the numbers are absolutely phenomenal. But I don't know. I have not studied the company, and of course Avenue Supermart is my favorite, but I'm just refraining from buying it. Actually, I want to buy it.
V2 retail, you didn't do the no 55 times trailing.
The numbers are like, growth is amazing. Amazing growth comes. I don't know how this kind of growth is possible in this environment. So either management is doing something which is phenomenal.
Yeah. And why are you
So
not
you should
buying?
call them actually.
We've called them so many times.
We speak to them actually very often. Why do you want to buy DMart but are not?
Promoter is excellent, best quality promoter. You cannot have a better balance sheet, better cash flow. And now from last quarter, what I observed was 13% revenue growth and 20% EBITDA growth. That means they are increasing the profit margins by selling more private labels, which is an interesting thing. If it catches up, and if it becomes a trend,
but
then
to answer Tamanna's question, it's the valuation, isn't it? Over 85 times.
So
just another thing which came up into, so HCL Tech, for example, this is the first IT large cap services company where I am seeing promoter buying. It's worth watching and tracking. Because see, to say on every channel or every interviews that we are not going to be obsolete is one thing, and promoter himself buying into the company even after having a majority stake in the company is a different thing. So HCL Tech, I would say that it has come under my radar now.
Because of promoter buying, you putting
they
your
might
money.
be just deploying their extra cash with the get out of dividends from the company itself, because HCL Tech gives you huge dividend.
Yeah, but you're putting your money where your mouth is.
But at least that's a good thing.
GAIL, should we just look at GAIL very quickly? The guidance has been cut, and Kotak Securities has maintained a sell with a target price of 145. They have further cut marketing PBT guidance to 3,500 crores for FY 26-27 versus 4,000 crores, that's for 26, and 5,000 to 5,500 crores in early 2025. Sudden spike in Henry Hub settlement prices is what the reason is, and many customers opted for lower volumes. There are not many catalysts, and its high capex has been a worry. They plan to set up 2 gas-based fertilizer plants that have added to the worry. This is the Kotak view that I'm telling you about, and you're seeing the stock a little bit deflated, but then so is everything in the market right now. Another story that we're tracking for you, as Zimbabwe announces a ban on all raw material exports, we look at the impact on Indian companies and how it will affect global supplies. Varsha joining in with more details.
Well, the important point is why we are talking about this, how this is going to impact India. Number one is Zimbabwe exports raw material to China, and China exports processed lithium to India, and hence we have an indirect impact on India. Now, Zimbabwe is Africa's largest lithium reserve holder, exports 1.128 million tons of spodumene in 2025, mostly to China, and the lithium prices jumped globally after the ban announcement due to supply fears. Now, ban applies even to cargo already in transit, and ban remains in force until further notice. Now, which are the companies and which are the sectors that will get impacted when it comes to India? Well, talking about EVs, now the probable impact is indirect but maybe significant, because if you see the battery cost forms 30 to 40% of EV cost. So Tata Motors, Mahindra Electric, Ola Electric, Maruti are all the companies which may be impacted. Onto the battery manufacturers, over here Amara Raja Energy and Exide are some of the companies which will get impacted, because higher lithium will lead to higher battery procurement cost and will impact the margins for these companies. So overall, in conclusion, if Zimbabwe restricts lithium concentrate supply, China cost increases, global lithium prices rise, and battery and EV companies pay more.
Okay. Wow. Thanks a lot for that, Varsha. Thanks for putting that into perspective. But we'll take a moment to thank all our guests for joining us on the show today on Open, on a day which has been quietly subdued, if you will, and have a great weekend. And to Amar, of course, happy Holi. Have a great time there too. Now, on to a very interesting conversation, because if you're using a credit card, or frankly, any other mode of payment, but a credit card in particular, you've no doubt come across this company, Pine Labs. But the news is that they've secured multi-year contracts from all three major oil marketing companies to modernize digital payments. Now, before we get the management to talk about this and more, Sharad joins in with some details of the same. Sharad.
Neeraj, a lot of news flow coming in for this stock. The first one is the company received a big order of almost 130,000 digital payments from the three OMC players, IOCL, BPCL and HPCL as well. And this is a contract for nationwide digital payment platform modernization. This is a big contract. Recently, they also acquired 100% stake in Agya Tech, and this company itself is having RBI approval as an NBFC company. Also, AI announcement was there. That also piqued my interest. There's a collaboration happening with OpenAI, where Pine Labs will be embedding their models into the core of the global merchant ecosystem. And now they'll be moving ahead from the traditional automation to the agentic commerce as well. Of course, the recently Q3 numbers were also on the stronger side, but there are some issues as well regarding the GST segment for their gift cards arm, and that's what we'll ask the management on the clear developments on these segments.
Thanks. In fact, let me start with one of those points. Sharad, thanks for that. Sameer Kamath, who's the CFO of Pine Labs, joins us on the show. Sameer, thank you so much for taking the time out and being with us. Good morning to you, Neeraj here.
Good morning, Neeraj. How are you?
No, I mean, all of us in some sense use your transaction modules, right? Every time we transact via credit card. So the name is very well known to us and to everybody. But I'd like to start off by talking about, if you can explain to us, how does this contract wherein the oil marketing companies have asked you to modernize their infrastructure work per se? What happens in this? What's the kind of work that comes to you? What's the nature, and for how long could this be?
Yeah, Neeraj. So basically, see, Pine Labs is a company which has been around for almost 25 years, and we started our business actually working with oil marketing companies way back 20 years back. And our whole core is about solving complex needs through simple payment solutions through using technology. So coming specifically to this contract, if you see that oil marketing companies require three kinds of services. Energy automation at the petrol pumps and outlets, so that the dispensation happens at the right rate, the fuel density, etc., is well calibrated and shown. The second area of focus is the actual payment solutions, which is there at each of the checkpoints. And third is they have a large amount of fleet operators which rely on fleet cards, and there's a whole management around that. I think as Pine Labs, we have been an aggregated provider for all of these services for some time. I think the latest contracts further deepens our presence in this space by getting almost access to about 130,000 devices across 60,000 outlets. What this means for us is these oil marketing companies actually transact close to about 25,000 crores of volume on a monthly basis, equally split between card and UPI. It makes us one of the largest players in this space. To automate the billing solutions at the point of sale, that's 130,000 devices that we have got. It's a multi-year contract. Second, we're already working with them on the automation part. And lastly, we have got almost about 2 million cards, which is for the whole fleet management. So basically, a lot of fleet operators prefer this as a convenient mode of payment because it is convenient to them. Second, a lot of pilferage and leakages are prevented because of that. So these three contracts help us become a relevant and a very dominant player for some of these oil marketing companies.
Samir, just correct me, but weren't you already present at the point of sale for almost all of these guys any which way? So what's the newer element here?
So I think the energy automation, we were already there. We were already present across some of these, almost about 40,000 point of sale machine. This is a much larger contract of 130,000, which further deepens it. Fleet management is a new contract that we have got. So I think that deepens across all the three spectrums. So we were there in energy automation. We were there at some level in the payment solutions, but this deepens it and makes us one of the largest players in that space.
So, maybe that's why. Okay, so am I right? And just to double click on that, and Samir, good morning to you, Alex here. Obviously, we're using the pumps mostly in...
Alex, I think your mic is gone.
Okay, no, I've got it back. We're mostly dealing in Mumbai, right? So Neeraj and I. So we've come across your service more often here. Am I right in assuming that this will allow for better geographical spread and therefore this 130,000 is what is taking place now?
Yeah, I mean, typically oil marketing companies work on RFPs that get renewed, and therefore this is a multi-year contract. This is a national contract, so you'll typically find us at 130,000, actually now about 170,000 point of sale machines across the entire length and breadth of India, across the three oil marketing companies, IOCL, BPCL and HPCL.
Estimation then, Samir, of what the implications of this, first of all, is it already rolled out? And second, what are the implications for revenue outlook? Is it materially changed on account of this?
It's an important contract for us from two perspectives. One, yes, we earn two kinds of revenue streams. One is on the point of sale, we earn rental income, and on transactions, we earn certain bps as well. We are at about 1.9 million touch points before this contract was awarded. So obviously, there is a further addition to that by this 130,000 devices coming in. I will not give the specifics of the numbers, but yes, it's an important contract for us, both from a revenue perspective and also deepening our positioning in this important cohort of business for us.
Samir, what does this, I mean, is this a large incremental contributor to what is already a very strong growth trajectory that you've recently been showing? I wouldn't say recently, frankly, all through. But since we're talking after the Q3 numbers, I'm using the term recency here. Does this add meaningfully to the growth trajectory, or is this a small incremental addition to?
It is meaningful because it's a very large contract. I think last
Could you
quarter
quantify?
We'll not give the specifics of the contract given that's not in public domain. So I would like to keep it like that. But let me tell you one thing that we have grown at about 25% on a sequential quarter basis, on a year-on-year basis, that is for Q3. And within that, the digital payments business, which is large part of where this contract would sit in, has grown at about 16%. This will help us grow at a higher pace on that part of the business as well. And I think we have been guiding that we have grown at about 20 to 25%. All of these contracts help us sustainably grow because these are not just one-time contracts, but recurring revenue that comes through our P&L. So yes, it is a significant contract, both from a top-line perspective and from a long-term positioning in that space.
Street estimates, and I'm looking at brokerage notes here to help me out, Samir, that are pegging a revenue compounded annual growth rate of 20 to 23% between 26 and 28 financial year. You've talked about 20 to 25%. and you're saying this based on the latest edition as well. Is it not going to be better than that? Because the notes that I'm talking about are actually before you've announced this.
Yeah, no, I think all of this contribute to that growth, Alex. If you see where our growth comes from, it comes from both the domestic market and international market. International market, we have grown at about 35%. So Pine Labs is not just present in India, but also international business. So all of these contracts will go towards a sustainable 20-25% growth. I think we want to be conservative in our guidance in that sense, because honestly, we believe in delivering and kind of taking it forward. So I think we are very comfortable with the growth outlook that we're giving now.
Ask about your deployment of artificial intelligence as well, not just because it is a buzzword, Samir, but because it seems like you are doing actual work on implementing artificial intelligence. So can you help us understand what the productivity gains could mean for your financials? Do we see, for example, as early as the fourth quarter, an improvement in margin trajectory? How would that look like in FY27?
So let me, Alex, explain this in two perspectives. One is how we're using AI internally. And second, what does this OpenAI contract mean in terms of a top line and in terms of what we can do in terms of potential use cases in the future? As far as our own margin trajectory on a cost to income ratio and growth is concerned, we've been consistently showing improvement in our margins. Our adjusted EBITDA margins 3 years back used to be about 9%. We have projected at about 21%. So on a top line growth of about 24%, our adjusted EBITDA has grown at about 60%. That largely comes from productivity gains that are coming by AI deployment within. We have about 1,000 engineers. About 25% of our codes today are written on AI, and we can see that only going up. So we have guided that we will not add more engineers. We will see more productivity throughput happening through these engineers. And I think that's a big lever for us in driving the operating leverage of our business. We continue to use that across multiple in terms of the way we do our internal servicing to our customers, the way we do our reconciliations, the way we write our codes. So clearly that is already in play, and that's reflected in the trajectory of our performance that you've seen over the last few quarters. Coming to the open...
Sorry. No, please finish your point. So sorry to interrupt you.
No, so coming to the second part of AI, which is used more on the top line. So last week, we announced our partnership with OpenAI, one of the first in the payment space. I think it's a very interesting tie-up that we have. Look, ChatGPT has about 10 crore users in India, which makes it the second largest market for OpenAI, and probably predicted to be the largest market in the next year or so, which opens up a very interesting opportunities for commerce. So we've seen commerce becoming convenient. We've seen commerce becoming fast. I think it's time for us to make commerce intelligent. What I mean by that is today, when we look at, say, the Google ChatGPT LLMs, Claude LLMs, they're typically a question answer format, which is the base level AI, which is there. Imagine tomorrow if you could embed intelligence, which means a person who's shopping up, say, for example, a mobile phone. He's not just looking for choices, but he can put in his considerations, he can put in his budget, he can put in his preferences, and the agent within the AI LLM model actually finds the best offer for him, negotiates the best offer, and not only that, he can make a transaction on the LLM model itself. I think that's the world we are building for. Our prototype is already ready, and we're planning to go live very soon with these opportunities. It opens out a completely new channel beyond the offline and online. This is a new agentic model that opens out for us.
So, Samir, hi, Tamanna here. Sorry, I'm just getting into this conversation, but I was listening to that. So what does that product become? Because all of these choices to customers will be provided by a whole host of other aggregators as well. It'll be provided by the Amazons, Flipkarts of the world as well. So what is Pine Labs doing in this space?
So very simple, Tamanna. I think what we do is there is something known as system of records. You basically have your whole inventory across all the merchants. We work with almost about 1 million merchants, and we have the full product catalog of all of these merchants. So today, if you see, even the large enterprises sell online, they sell offline, and probably now the LLM engines becomes the third model or third channel for them to sell, because this is assisted purchase. What we do is we have our APIs tied up with the LLMs of, say, ChatGPT or OpenAI in this case. All of the inventory of these vendors are now posted on the LLM models. And that becomes a new channel and market for them to have their customers buy their products. So it actually increases the ability to commerce for all of the existing merchants. this is we are already live with our prototype, and I believe this is an exciting opportunity. The entire integration of this is what we plan to do as a part of us Pine Labs.
What is the revenue opportunity for Pine Labs?
I think this is early for me to give. I think this will adopt. I think it's in the beta phase right now, so I will not give a guidance on that right now. But I think this is a new channel, and we've already got requests from multiple AI agencies and also from other merchants to kind of take it live. So I think any adoption of this will only kind of help us grow at a rate faster than what we have been guiding.
Timeline for this implementation? When you see
I think our prototype is already ready, Tamanna. I think now it's about taking it further and taking it to the market. So somewhere through the year, you'll see some of these coming. You'll actually probably see this happening in live market.
Okay. Sameer, so effectively you are making the layer, but you already have a pipe to all of these customers, and therefore it becomes easy for you to do the outreach. It won't be a terminal model, right? It'll be an AI layer embedded in a software, if you will, by API.
I mean, imagine, Neeraj, so just imagine you're opening your chat GPT. I mean, earlier you used to search in Google. Now you can search on LLM. It is not just search. It's not just assisted search. You can even transact and close. So what we'll do is the payment layer and the catalogs of the products and the merchants will be now embedded within the LLM. So now you don't have to go beyond the LLM to do the end-to-end transaction. That's where the agentic commerce comes in.
Got it. Okay. Sameer, embedded to this whole conversation that we are having is a takeaway from what's happened last night, wherein the former CEO of X, Jack Dorsey, has said that they are laying off an X number of 4,000 employees odd because of efficiency gains due to AI. Do you reckon firms like yours could grow at a particular pace and go ahead and lay people off? Would you, for example, calendar year 26 could see layoffs from your firm because AI is helping you increase productivity any which ways?
Oh, Neeraj, if you see already for last quarter, if you see our people cost, it's only grown at about 4%, whereas our top line has grown by 24%. So some of those productivity gains coming through AI is already started kicking in. As I said, 20-25% of our code is already getting done through this. I think we have guided in our earnings call as well that we have about 1,000 engineers, and we will not be adding any more engineers for the growth that we are guiding forward. I think the first step of productivity gains for us is we are a very workflow use case driven business. I think getting all the mundane routine work, etc., done through AI is the first level of adoption of AI. And I think that's already happening. And I think engineers can now be used for multiple use cases with system designs, controls, etc. And I think that's where the first step is. We're already seeing productivity gains. And I think that productivity gain will continue to happen through the quarter as well.
I want to ask you, Sameer, about you, and you made a mention. By the way, the stock reacted when you did make that mention, when you said that 25% of your code is already being written by artificial intelligence. You see it going up. But where do you see that going? And to what extent do you see your code and your service being refined by human beings, but essentially driven by artificial intelligence?
I think our internal target is to keep moving it up. I mean, at least at about 30-40% to start with. And I think our internal focus on making it more and more live. In fact, we are running projects across functions. It's no longer just about a tech department. I think every function within Pine Labs is looking at how AI can be adopted. It's a big theme for us. And getting more done from less is a clear objective of the firm for FY27 and 26.
Okay, just on that specific question, Sameer, do you see job cuts in the offing? I know you're saying you're hiring fewer engineers, your growth was only 4%. Is that in the realm of possibility? Because I think it's a top of mind question, it's a fair one to ask right now. Are you saying AI tools replacing tasks being done currently by people in your system?
So two things here, Tamanna. I think one thing we have to keep in mind is while India, we are growing at 20%, international markets, we're growing at about 35-40%. So what we can do currently is we have guided that we are not going to hire any more engineers, but there are a lot of use cases. We have had some large wins across geographies. For example, we just won a new deal in Dubai with Wave Bank. We are working closely with Emirates NBD in Dubai. We have had some large wins with Philippines, Gcash. I think these are deals where we are actually taking the prowess of India. India is a large, complex market, and we are winning at scale in India. We are using our skill sets in India to build our businesses in some of these geographies. That's why almost about 300 crores for the 9 months ended 26. Our revenues did come from international markets. I think a lot of our people incrementally can be used for penetrating these geographies. Had our growth not been there, we would have looked at it. I think there's enough for us to do. So I think we can easily redeploy and build those markets without having to add any headcount. And that's the operating leverage that we're really gunning for.
But my question is not on adding headcount, Samir. If I may reiterate, it's on reducing headcount. Are you saying that there is no scope for that or no requirement for that? Or is that something you will have to go back and look at?
Opportunistically, Tamanna. We'll look at it opportunistically. I think as a firm, we will obviously try to keep our headcount as optimal as possible. I think it's too early for me to say yes or no. I think AI is still in the adoption phase, as I said.
Yeah.
But definitely as a firm, we are very conscious about cost. As we have guided, you've seen our operating cost for the last few years. So whatever needs to be done to optimally manage the cost, whether it's in terms of improving productivity or to make it optimal, I think as a firm, we are more than happy. And that's what we have already demonstrated through our quarterly results. So I think that's what the street should take as a guidance, that we will see operating leverage come in through multiple things that we're doing.
All right, fair enough. Just want to close out the conversation, Samir, asking about a correlated question to what we began which was the tie-up with the OMCs. This is a pretty large tie-up and a large order. Are you in the market currently negotiating similar large orders or similar large contracts, and what is the potential for that?
See, oil marketing companies run on RFP. So as and when they come up, definitely we will be bidding for them. I think that makes it very, very relevant. Having said that, we are also bidding for large contracts with banks. I think banks also are a big channel for us for distributing. For the payment solutions, we are working with large contracts globally as well. I think we work, for example, globally, we work with Amadeus on almost 19 airlines. And we see that as a big scope for our issuance business. We are the largest prepaid card and wallet processing company in India, which almost has about 80% plus market share. And we see a lot of use cases of some of these large contracts. So I think we are in the play for a lot of large contracts. We have just recently won large orders, even from the US market with Miniso and the Google Waymo driverless card. So I think winning large contracts and winning it big, both in India and international markets, for some of the examples I've given you, is very much on the play for us. And that contributes to the sustained growth rate that you're going to see.
Samir, thanks so much for taking the time. Pleasure speaking with you as always. And look forward to speaking to you really soon.
Thank you. Thank you, Alex. Thanks for having me on the show.
Our pleasure. All right, let's talk about the next company that we've got lined up for you. It's been an action-packed day so far on India Market Open. Zagle is driving sustainable urban mobility with its closed-loop CNG fleet solution, and it's been rolled out in partnership with Adani Total Gas and Hyundai Motor India. Let's bring in Jasmeet just to give you some perspective on what this is about and what the potential is, and then we've got the management lined up. We'll speak to them as well. Jasmeet.
Well, Alex, very good morning and thank you for that. Now, if you look at the overall company as an angle, the company is into prepaid services. Now, the announcement recently is that Zagle has joined Adani Total Gas and Hyundai in the Ahmedabad for the CNG drive, where they released their fuel-efficient card in the closed loop. Now, what the card offers is offer CNG benefits to the customer of about 15,000 rupees. We also have the other recent news where the company collaborates with various other vendors and provide their cards for employee management using the Zagle Save. And the Zagle Save is their AI software tool which help in better cost and expense management. If you look at the recent deal that the company has announced, they have announced a deal with Saurashtra Cements where they have entered into the agreement for 5 years for the similar regards, and they have also announced an agreement with Chennai Super Kings for the same regards to provide the employees and associates of Chennai Super Kings with the employee benefit card.
Okay, all right. Avinash Godkindi, MD and CEO of Zagle, is joining in. Avinash, apologies if I've said that wrong. Good morning and welcome to the show. Thank you for speaking with us.
Good morning, Tamanna, and you got it spot on. Godkindi is how we say it, yeah.
Fantastic. Okay, explain to us what exactly you are going to be doing in this tie-up, with Hyundai as well. What is going to be the product and the service and the cost cutting that you are providing?
So it's a conceptually very simple concept. Anybody who's buying a Hyundai car from the showrooms, if they buy a CNG car, or if they convert the car into a CNG car, we in partnership with Adani Total Gas offer a payment instrument which is loaded with obviously money, which can be used to fill gas at an Adani gas station, right? So the whole concept is very clean, very simple. You convert your vehicle into a CNG vehicle, and you get this card, and you can go and get your gas filled at an Adani gas station. That's up to 15,000 rupees is the benefit, so it's very sizable. overall, we do this program with Adani for some time now, and we are looking to scale it across fleet, across these sort of incentives, rewards. Um, and as Mr. Manglani put it, the whole idea as we partner with Adani is to be more like a part of the family and not just a supplier or a vendor, and to co-create solutions and solve problems together.
Avinash, hi, Alex here. I'm just trying to understand what the scale of this could be, because if you're talking about places like Mumbai, which you have most of the taxis, and you know, here I'm talking about even the ride-hailing services, they're ultimately using fleets that run on CNG. So is there a potential to have very large numbers on this? And I guess the outlook is for people who have large fleets to ensure that there's no leakage when money is given for filling of CNG. Is that how you look at it?
Yeah, absolutely, Alex. You're spot on. And the scale is potentially very large. The way Adani is promoting this product is also very innovative, because they're working with OEMs like Hyundai and Maruti, right? Where Maruti is also a partner in the same sort of program along with Adani Total Gas and Zagle, to be able to convert vehicles into CNG and to promote the use of CNG. And it's a win-win-win. You know, the consumer or the fleet owner benefits, the OMC or in this case the CDG company Adani benefits, and the manufacturer benefits as well.
Is there a sense of what the contribution could be? Initial indications, something that you've penciled in on the revenue front?
See, the contribution in the coming 3 to 5 years could be very substantial. We see this, and we've consistently held this even with our contracts with Think Gas, AGP Pratham, with Torrent. We did Mega Gas, IRM. So bunch of these CDG contracts we've done. We are currently speaking with the oil marketing companies, and some of those contracts that they do are through RFPs. And some of them are, through very innovative solutions that we're working to build with them as we speak. So hopefully in the coming financial year, you'll see us announce some of those partnerships, and there the scale again is massive.
Just wondering, Avinash, that for your company and the space that you are in, what is the kind of opportunity or threat or challenge from AI solutions which will come in very quickly?
Oh, we're using a lot of AI already, and we've seen that productivity gains come in both in terms of rationalization of human capital, where about last quarter we closed at about 325 people. The quarter before we were at about 400. So we've seen some real solid gains in terms of productivity, while revenues have grown very handsomely, right? So last quarter was our best ever numbers, 497 crores. EBITDA PAT was up very significantly. So we are seeing productivity gains because we are actually deploying it, and a sizable amount of our code is getting written using AI. And you also see, deployments become much faster. So you see deployments become much smoother. Integrations can happen much faster. And if you look at our SaaS component of our revenue, it's just 2.25% of our overall revenues, right? So we don't see any of our SaaS contracts or our software contracts in any stress. But even if there is a stress, since we monetize primarily on transactions, right? So 97% is on transactions. It really doesn't affect us adversely at all. In fact, a massive positive gains for us.
Mentioned, Avinash, that you've already dropped to 320 in terms of workforce. It's not the largest workforce, but do you anticipate that you will be able to work with an even smaller workforce going forward?
Alex, we don't intend to reduce people for the sake of reducing people. The idea is to be right-sized and lean. And we have now started to expand into the Middle East, Abu Dhabi being our, a base. And, we will use a lot of capability that we've built here in those markets, obviously. And some of the new, innovations and solutions that we need to build for those markets, we will obviously use our talent here. Additionally, of course, I need to highlight that there are acquisitions that we have made. So overall, our workforce has grown, and some of the gains have also come from our ability to be able to leverage the capabilities that a Green Edge or a Zag.money or any of these are acquisition companies have.
Okay, Avinash, thank you so much for joining in today and speaking with us. So a lot of developments there as far as Zagle is concerned, and important comments there as well on right-sizing the company. In fact, the last couple of conversations we've had have talked about this, and we have been speaking since morning in the context of Jack Dorsey and whatnot. But the fact is, both Pine Labs and Zagle, they have not said that they're going to remove people, but they have said that this is something that we will look at and right size the company.
Zagle seems to already have done.
He's saying out of 475 headcount was reduced. Now how the street looks at it further, does it actually move operationally for these companies is what remains to be seen, but that trend is pretty much there. It might not be as well captured because unlike Jack Dorsey, everyone will not go and post that this is what they're doing, but it's clearly happening. Can't really deny that. All right, eyes on the new debut. Gordium IVF is all set to debut on the bourses. It will be the first listed IVF player. Let's take a look at the SWOT on the company and whether it's going to have a good opening or not. Varsha joining in for more.
Well, talking about the SWOT analysis, let's talk about what are the strengths when it comes to Gordium. First of all, of course, this is India's first IVF listed company, has pan-India network using a hub and spoke model, and a strong promoter, brand led by Dr. Manika Khanna, and the medical tourism draws almost attention over here. There are patients from 30 plus countries. UK office has been recently opened, and attractive unit economics considering the high EBITDA margin that the company enjoys. Onto the weakness, though, high people dependency and brand concentration around the founder, and contingent liabilities and cash flow swings are some of the weakness that the company has. Well, on to the opportunities, fast growing IVF market, that is the sector itself, the segment itself is growing at a 13% of CAGR. Tier 2 and Tier 3 expansion with asset light spoke centers will widen the reach for the company, and add-on services like fertility preservation and genetic tests will lift the average realization for the company. Onto the threats, talent shortage and intense competition from large chains are some of the threats that the company has. Well, Gordium IVF has settled at 5% premium on BSE as of now. We are seeing, but overall, yes, a good company, but some of margin issue that the company has, because margin has been coming off, is one of the weakness also that the company has.
Okay, so there you have the management there, and some of the things also, some of the threats in that sense or challenges for a company in this space is that there is so much competition right now. Let's see if we get an ambience up for that last countdown. That's always an exciting time.
4, 3, 2, 1. Congratulations, Gordium IVF and Women Health Limited.
Okay. Let's look at the first rates coming in. You don't usually have a time when you have a listing pop. I mean, there was a phase at which a 10% upside would not be seen as a listing pop, but it's not bad at all, I would say. And maybe because of the unique space it's in.
Yeah, and also considering the fact that it's listing on a day when the markets are completely smashed, Tamanna, so 170 points in the red for the Nifty, but this one seems okay. I remember a conversation that we did with them when they were saying that we are amongst the first ones to get listed in the world in the IVF space, and that growth curve is very steep.
The growth curve is huge. The growth curve is huge, especially in urban India. The only question was, can you hold on to your specialists? Because that's what's key in this space, and competition coming from, say, large hospitals or other players but they believe that the kind of processes they have in place and the success rates they have in place, because that's key for fertility treatments, will actually put them ahead. Some of that premium getting shaved off fairly quickly for Gordium. Is listed at a premium, it's not lasted long. We'll take a very short break, but we're coming back with a superb conversation. Kenneth Andrade of Old Bridge Mutual Fund will be joining us. Don't go away.
True love is lifelong, isn't it? Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. Ye on the quality lifelong.
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
First India tour in your city. Rock on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक कॉन्सेप्ट नहीं है. This is my life. This is my story. One night, no repeats. Book your tickets now.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Program now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Program. The calls of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Alright team, our new water show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions.
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive.
Back with India market open, and the morning is not turned out to be as per a green script, because while we started off about 70 points lower, we are now about 170 odd points lower, trading at the lowest point of the day, and a clutch of names correcting. I mean, you can pick up a sector and I think you would find that it's in the red, and multiple themes out there, and we'll get to some of those themes as well. But while we try and do that and get in Kenneth Andrade into that conversation, since we are heading into the third month of the year, March often brings its own pattern to the markets. Historically, steady month, with the Nifty mostly managing to close higher, and small caps and mid caps have their own nuances as well. So let's get in Somit to try and tell us what he has observed when he scanned the March seasonality. Somit, over to you.
Well, Feb has been quite volatile, but March seems to be quite stable and on the positive side. In fact, if you look at the last 10 years of March month, then we have managed to close in green nearly 8 times, while the average return is 0.8%. Now, this average return is on the lower side because COVID 2020, that was the COVID March 2020, was one of the years where we had impacted very negatively, and hence the average return is on the lower side. But 8 out of the 10 times we have managed to close in green. We have seen positive returns of 4% plus in 2016, 2019, 2022 and in 2025 as well.
Now, when it comes to the mid and small cap indices, they have managed to close in green 6 times. Average returns for mid cap is positive 0.3%, while for the small cap is negative 0.5%. We have seen positive returns of more than 4% in 5 instances: 2016, 17, 19, 2022 and in 2025. And as I was mentioning, that March 2020 was the COVID month, and that time we had seen a sharp fall. Mid cap index had fallen nearly 30%, while the small cap index had fallen nearly 37%. And because of this, the average return is skewed on the lower side. But if you remove this, then the returns were much better compared to what we are seeing right now. If you look at the sectoral indices, Nifty FMCG, Nifty Bank, Metal and Energy indices have managed to close in green 7 out of the last 10 March, and the gains have been anywhere between 0.2 to 2.6% for this indices. Apart from that, if you look at the other indices like pharma, real estate, IT and auto, they have managed to close in green anywhere between 4 to 5 times. Pharma and real estate have seen positive returns, while IT and auto have seen negative returns in the month of March in the past history as we have seen. Now comes the most interesting part, this is stock specific action. Now these are the stocks that have closed in green 7 times and have seen a return of 5% plus on an average basis. So which are those stocks? Adani Energy has seen an average return of 13% in the month of March. Solar Industries, CG Power, Indigo have seen returns of anywhere between 7 to 10% on an average. Adani Enterprises has an average return of 7% in the month of March. Apart from that, there are stocks like Torrent Power, NHPC, APL Apollo, Nestle and Adani Ports, which have seen average positive returns of anywhere between 5 to 6% in the month of March. On the flip side, these are the stocks that have managed to close in red 7 times and have seen negative returns of more than 5%. Vodafone Idea tops the list here with an average negative return of around 10%. Inox Wind, Apollo Hospital, IDFC First and Samvardhana Motherson have seen a negative return of anywhere between -5 to -6% on an average basis in the month of March.
Okay, so net, can we hope for March to be better than Feb?
Well, yes, that is what at least the data is suggesting. March could be much better.
Let's hope. Let's hope that's what happens. Kenneth Andrade, founder and CIO of Old Bridge Mutual Fund, joining in this morning on Talking Point. Kenneth, very, very good morning to you. And thank you so much for coming in and speaking to us. You know, just because top of mind is Jack Dorsey, block AI-related job cuts, and only our IT sector doing okay right now. I just want your take on that. Are we in India as well, and in the Indian context, going to see that kind of upheaval on jobs and then discretionary spends coming out of it?
Well, Tamanna, I don't have that kind of foresight, but I think we'll find our way through this, right? There is definitely going to be a little bit of pressure in terms of cash flows, at least in the near term, in terms of how technology will reshape the underlying the underlying employment cycle that is there. But we'll just have to take it step at a time. Obviously, the good news or the bad news is that in the near term, the good news is that in the near term, I think you won't see too much of that happening. In the longer term, as technology evolves and as we embrace a lot of that, there might be near-term pressures that will exist out there. So net, I think wait and watch. Obviously, there'll be pressure on profit margins that are there from a lot of companies, especially in the IT services sector and anything that's got to do with technology. But the brighter side of it is that there will be a lot of capex that is also coming out there to enable this cycle that is there. And that itself would create a reasonable employment opportunity out there. So it's a mixed bag in the medium term. In the longer term, obviously, I mean, like I said, I don't have that kind of foresight to see what's happening, but obviously, automation will have its impact on how the current format of employment structure is. It'll definitely change.
Kenneth, good morning. Neeraj here. It's been a while, but I look forward to this conversation. How do you see the current structure as well, Kenneth? A lot of people were talking about the need for the US trade deal to fructify, for the market to find a fresh lease of life, if you will. Otherwise, it's stuck in this range. Somehow, post those developments, and I don't know if it's a done deal as yet, it seems that we kind of stuck in a range, unable to blow hot or blow cold for whatever reason. Does this continue, or will it take an earnings revival to take the markets out of this very tight range, if you will?
So there's not great good news for 2026. I think last time we had this conversation, I did mention something very similar to 25 will evolve in 2026. There are two parts of this that is happening. One, India has been stuck in this single-digit earnings growth rate for like now 2 years. We probably still have it in 2026-27. The consensus is saying something different now. All of that is happening within the country itself is the lack of demand to kickstart the economy, which is why we have to rely reasonably on finding newer markets. And the good thing about this trade deals that are coming through is it's okay as far as the US is concerned, but the bigger one I think is the European Union structure that is falling into place. Now, when you have both these trade zones opening up, whether it's the US and the European zone put together, we're addressing at least 23-24% of the world population with reasonable amount of spending power. And that should create another leg of opportunity that is there, or another leg of demand that is out there, which is why all of this was reasonably critical for India as an for Indian manufacturers and in Indian businesses. Without these two trade deals, I think the capex cycle wouldn't have come back. And now that you've got these two transactions on the table, all of it will start showing up in 2027, 28, 29. Okay, and I think that's the timeline that you need to work with.
So on the one hand, Kenneth, you're talking about any good news which has been announced or announcements actually showing some impact fructifying post 2027. On the other hand, are the negative news flows. Now, this whole thing about criteria for F&O participation, Ashish Chauhan has been quoted as saying this, that maybe it could be required, a minimum qualifying criteria. You're seeing all capital market stocks also getting bludgeoned. How much of a pain point is this sentimentally for markets and for capital market plays, which were the hot favorite, at least for the first half of calendar year 2025? Do you think that tide has turned significantly now?
This is, I mean, from a capital market perspective, this is an ongoing cycle that you've seen for the last 3.5, 4 decades, right? And I haven't seen anything that has been done from a regulatory standpoint which has not grown the capital markets. So I think we have to take this in our stride. If things become a little difficult, there will be corrective actions in future. So don't stand at the judgment seat for what happens in the near term. What the longer term things have fallen into place. When it comes to company stocks, etc. One of the biggest deterrent is how for businesses to correct or stocks to correct is also not just the business environment, but is also where the valuations and how perfectly they are pricing the market opportunity at this point in time. So any positive or any negative news does have a sentimental impact and does have a trading impact to all of that. So all said and done, I think look at it from a position of it's an ongoing cycle that is there. Stock corrections usually happen not because of there's something that is detrimental to the industry, but simply because they're also priced to perfection in some cases.
Okay, so that's a problem with capital markets. What do you think is ailing BFSI? BFSI, I would say if you're looking at an AI safe trade, that is there, economy is doing okay, you should be looking at BFSI. FIIs have reason to come back, BFSI should be doing well. But you're not really seeing that pop, is it? To your mind, Kenneth, what is the concern there, if any?
You see, that's an industry that has done extremely well over the last 2 decades. Like all market capitalization and all market leadership came from that category itself. Now it's taking a breather, and it's also become a significantly large part of the entire economy as well as the market capitalization. To say that it's going to go from 30% of or 35% of market cap to 50% of market cap, I think that's a little bit of a stretch. So net, let's put it this way. These companies are good, some of them are great. They will tend to be market performers to try and build earning cycles or business cycles that are growing faster than the entire economy. It will be relevant in a company 2 or 3, but I don't think it's going to be relevant for the entire industry. So our perspective out there is look for companies and businesses on a selective basis. So you have to be selective in an industry which is this large. And you will definitely get stock opportunities out there. Buy a category just because it's a large part of the economy, and I don't think that's investing really. That's allocation. So in a sense, it's a relevant part of the economy. It's a relevant part of people's portfolio. You have to pick the right businesses and companies there if you want to get if you want to build alpha through your portfolio. So be selective in that space. I don't think you need to just allocate to the business because it's a large part of your economy.
Got it. Kenneth, you look at cycles fairly closely. One of the things that came in the wake was with this FDA being signed and China export rebate factors also coming into play, maybe, just maybe, there could be a start of a cycle in chemicals which have been floundering for the last 4 or 5 years. Is that even a possibility that can be predicted, or is it difficult to call that right now?
I think business cycles usually start when most entrepreneurs give up on capex, right? And we're seeing elements of that happen. You've also seen a slight bounce in terms of market capitalization or stock prices in some of these companies. But I'm sure we're very close to the bottom if we are not already at the bottom. Will this stretch and will there still be a time corrective on this one? Probably so, at least for another 6 months to a year. But that doesn't mean that you will continue to lose money in this. So there are a couple of things that happens at the bottom of the cycle. One, you stop losing money. 2, there is time and price consolidation that is there. And 3, capex in the entire industry has stopped. I think we are going through all 3 of that right now. When it comes to the Chinese, I think they're going through a similar cycle at this point in time. Okay, return on capital employed is fairly low. They lead the deflationary cycle in chemicals. Currency-wise, they've got a reasonably appreciating currency. So all put together, I think the Indian chemical businesses and the Chinese can take on the cost pressures that the Chinese are throwing at us, or those other low-cost countries are throwing at us. But we won't be profitable. I mean, we won't go from 0 to 50 to 100 in profitability overnight. It's going to be a gradual rise. It's going to be a gradual process that is there. You've already seen a lot of these companies deliver the volumes. Now they will have to make sure that these volumes change into pricing and pricing change into profitability. So you're slightly at the beginning of the cycle, or I think we are all trying to anticipate the cycle. We're close. I mean, it should be a part of your allocation, but I'm not too sure how large a part of that allocation should it be.
Got it. Okay, Kenneth, what about this whole conversation around, this morning we were talking about it, but this whole conversation around if indeed the tech sector sees maybe pressures and job losses, what it does not just to tech as well as to, let's say, tech-focused real estate, but overall consumption growth, because that was the cohort, or that is the cohort that is present at the upper end of the K curve, air conditioners, two-wheelers, four-wheelers, etc. Is that growth, could that growth also come into question, or is it difficult to call that right now?
Okay, there are 2 scenarios here. One is everything that we say is going to happen clockwork. You're going to get pressure in terms of how the consumer economy evolves, but that will be in pockets of the entire marketplace. Obviously, you'll have to reskill everyone to take it forward from here. But Neeraj, I just like to step back from all the. I mean, there is a lot of macro noise out there. There are a lot of things that are happening with technology and what's its implication on long-term employment cycles are there. It is not only relevant to where India is, right? But all this technology changes that are happening are throwing up other opportunities that are out there where you just need to reskill and retrain your the entire cohort that works for these businesses, and things will normalize to an extent, not completely normalize to an extent. So wait, like I said in the entire at the start of this entire conversation, you've got to give it a little bit of time. In the near term, you won't see too much of pressures out there. In the medium term, you will see some element of how this industry will evolve. In the longer term, we will adjust to technology adaptation and rebuild other industries which are reasonably competent or can absorb this kind of or this trained skill set or this trained pool of employees that we have. So it's going to be a cycle. I don't think consumption is going to fall off the cliff right now, or at least from a point of view of where we've come from in the last 2 quarters, is going to fall off the cliff. You're still going to maintain that median of single-digit growth in volumes that are there, irrespective of whether technology falls off or not. Real estate has been driven primarily by the top end of the entire market or the premium luxury housing out there. These companies have to adapt to look for volumes over pricing, and I think we will move on. So we've been around for say 3 decades or 4 decades and seen how the country's adapted or how new technologies have come into play, and it's only gotten better. It hasn't gotten worse. So consider this: over the next 10 years, things will be better. It'll look very different, but it'll be better from what it is today. 20 years, it'll be even better from now. It's going to be different, which is why you have to get your portfolios which move in line with what the market cycles are or the market trends are. So don't be static. Any business that has been static has not been around for too long.
What's the take on IT, Kenneth? Can these companies survive? Would you look at the bellwethers doing better than the others?
So if I had to recreate a portfolio today, it would be zero IT. I'd still have a wait and watch approach, and then try and figure out what to do with this sector.
Okay. If you had to recreate a portfolio today, it would have zero IT. You're tempting me to then ask, what would a portfolio today look like? What would be in it if there's zero IT?
Well, it's in public domain. So we've got a reasonable amount of pharmaceuticals out there. The second one that we've got out there is commodities. Okay. We start with metals, and then we're looking at a couple of soft commodities that are there in the basket. The third we've got is automotives, and that's going through a reasonably good cycle, wherein you've got a single-digit growth domestically, but all incremental growth is coming offshore or with newer markets that are there. So these are the 3 large positions that we've that are there on our portfolios. Okay, discretionary spends, I think it will hold. So any opportunity out there as far as some element of QSR, which is actually in a good cycle, I would say in a good upcycle, but it's a good place to be because a lot of that is already in the price. So I think that's a little bit of where contextually our portfolio is placed.
Got it. Kenneth, just a follow-up to that, the call to not have IT is because of the uncertainty around the sector combined with the valuations the way they are, and would the stocks at a particular valuation multiple be looked at?
So the argument from a valuation standpoint is how much would the terminal value of these companies be? Right? And if they are non-existent or they have a very low terminal value, if there's not much value even at the current price, right? So again, it's becoming slightly like what we had in BFSI. Okay, it's going to be a place where you will look for companies that will come through in the next cycle, and there will be a number of them that do exist today that will be much larger in a decade from now. So I think we just have to recalibrate. So when I say that if I have to build a portfolio today, it will have no IT in it. It doesn't mean that we are bearish on where the cycle is. It's cheaper than it's ever been. That's a positive. But we'll just have to recalibrate business models to see what will make us a large amount of money in the next decade. So we will get back in at an appropriate time with and more importantly, with an appropriate business.
Get back in time with an appropriate business. Kenneth Andrade, thank you so much for speaking with us. You have very succinctly explained the, I would say, nervousness in the markets that we're seeing as well, and uncertainty more than nervousness about where things are going next. We saw that in the Nifty right now as well. Kenneth Andrade there, thank you. But look at the Nifty. Let's pull up the Nifty. Now above 25,300, but did dip below 25,300 at one point, about 170 points down on the Nifty. It's quite a bit of a painful morning for the markets. The advanced decline ratios will tell you the story. Save for IT, everything else is in the red. The advanced decline ratios pretty much skewed. And of course, your top losers are capital market stocks. We've talked about that extensively. But FMCG, auto, all of them hurting. And maybe that theory playing out, Neeraj, that if you have job losses caused by AI, that's fine. Where are all the people who have to earn salaries to go out and buy stuff? And invest in stock markets, amongst other things.
That too.
Yeah, so if you look at it in a way now, capital market plays are also part of that broader discretionary consumption basket. I'm extending the theory a little bit, but you're going to start investing only if you have a steady job.
Yes, and well, one only hopes that some of the new age sectors turn up the heat on employment well in a positive way soon enough, because right now it's looking like a lot of those sectors are taking it on the chin. But I'm sure that our experts on the other side of the show on Ask Profit will take forward that conversation on what you could do with your index strategy, if at all. But from Tamanna and me and the team that put this show together, this fantastic India Market Open today. Thanks so much for tuning in. Have a great weekend. We'll of course see you with India Market Open on 8 a.m. on Monday, but action continues on NDTV Profit, so don't go anywhere.
True love is lifelong, isn't it? Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. Ye on the quality lifelong.
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है, और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
साउंड चेक हो गया? विजुअल्स रेडी? लाइट्स ओके? एवरीथिंग इज रेडी? वेट, आर यू रेडी? ये सिर्फ एक कॉन्सर्ट नहीं है. दिस इज माई लाइफ. दिस इज माई स्टोरी. वन नाइट, नो रिपीट्स. बुक योर टिकट्स नाउ.
First India tour in your city. Rock on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
You're watching Ask Profit here at NDTV Profit. I'm Mahima Vachhrajani and with me is Soumit Sarkar. And the way Soumit is smiling, I think the markets are not for sure.
No. It has recovered a bit from the day's lowest point, but still we are down nearly 170 odd points. It's not a good
well
thing.
Below the 25,400 levels as well, trading around that 25,300 levels, down by about 0.7 odd percent. For the bank nifty also the pressure continues. There is a downtick of around 0.6 odd percent. In that 60,700 levels is where the bank nifty is trading at. Let's try to pull up the heat map to see as to what's causing the pressure on the benchmark indices, and see as to what are the counters that are actually trading in the red. You have Ultratech, which is down 2%, Dr. Reddy's, Maruti Suzuki down 2% each, Tata Consumer, Nestle, some FMCG names still not doing fairly well, down by about 1% each. Bharti Airtel, Interglobe Aviation as well as Grasim are also some of the counters that are in the red and trading with cuts of about 1%. But on the flip side, just few counters, few names in the green. Eternal somehow is topping that chart today after seeing continuous pressure, up 1.7%, followed by something like Infosys, HCL Tech and Tech Mahindra. So IT has seen a bounce back today. All three names doing fairly well, almost 1% for all of them. Apollo Hospitals, NTPC and Wipro are also some of the counters in the green. But let's try to pull up the sectoral heat map to see as to how that is looking like and how sectors are doing in trade today. Only the Nifty IT and Nifty Media in the green. Nifty IT is slightly up by about 0.7 odd percent and Media up by 0.5 odd percent. Otherwise, all sectors in the red. The Nifty FMCG losing the most ground, down by about 1.3%, followed by Nifty Auto. So I think consumption as a pack is fairly not doing well. You have Realty also down by about 1%. Private banks also doing not well, 0.7% downtick is what we are seeing. Let's also try to pull up the mid cap 150 and the small cap 250, the broad end of spectrum, to see as to how that is looking like. The mid cap 150 also in line with where the benchmarks are, down by about 0.8 odd percent. The small cap 250 also down by about 0.7 odd percent. Quickly, the BSE 500, before we move on to our guests for the day, you have something like a Reddington, which is trading, topping that chart, trading 10% higher. Tejas, Polyplex Corp as well as Praj Industries seeing gains of about 5 to 9% in that range. But on the flip side, you have Coromandel, Credit Access, Rain Industries all down 4%. India Cements as well as Shoppers Stop, Angel One down by about 3% each. So that's with regards to where the markets go. But let's welcome in our guest for the day. We're joined by Gaurav Sharma, Associate VP and Head of Research at Globe Capital, and we'll shortly be joined by Avinash Gorakshakar, Founder and Head of Research at Avinash Mentor Research Services. Gaurav, a very good morning to you. Your quick view, firstly, with regards to where the markets go. We have slid well below the 25,400 levels as well. Right now, trading around with cuts of about 170 odd points. Some strength in IT is what we are seeing, but overall, what is the picture looking like? Where is the support and resistance that you're seeing?
Hi, Mahima. Good morning. Thanks for having me today. Markets are weak. We have been maintaining a sell on rise trading strategy from quite some time now, and it has played in very well for us. Today as well, we uphold that strategy. Any bounce from the current level should be utilized to take fresh short positions. As far as the supports are concerned, the immediate supports are placed around 25,250, 25,200 spot zone. So that's where precisely I'm expecting markets to head in today's trading session. Apart from this, on a positional basis, 25,100 will act as a strong support mark.
Gaurav, just wanted to understand one thing here. This is, I guess, for the second time this week or second time in the last couple of weeks, we are seeing Nifty finding some sort of support near the 200 DMA. Do you believe that will continue that as a trend? And if, suppose, say we break below, decisively below this 200 DMA, then where do you see the support levels coming in?
Hi, Sumit. Morning. Yes, it is the twice in the week the Nifty is trying to find some base around the 200 period exponential moving average. Options data are suggesting somewhat a base between 25,200 to 100 odd levels, and if that is taken out, the next level would be close to somewhat around 24,800 odd levels, which has previously also acted as a good support mark.
All right. So that's the view coming in with regards to where the markets go. But let's start with the queries. We have Anjali calling us from Vijayawada. Anjali, hi. Very good morning to you. How can we help you today?
Yeah, very good morning to all. I'm having Voltamp transformers at 7,950 average of 70 shares. So what is the long-term and the short-term target to exit or hold? So just wanted to know.
Okay, Anjali, got your question. I'll take this up with Avinash. Avinash, a very good morning to you. Voltamp transformers, what's the view like, and what is the exit price that one can look at from a long-term perspective?
Yeah, I think good morning, Mahima. I think Voltam is a very well-established, transformer player, and one of the key points of Voltam is that it's one of those few companies in the sector which are very cash-rich and which are very lowly leveraged. In fact, the transformer market, according to me, has been doing pretty well on the back of rising power demand. And I think at least for the next 12 to 15 months, order book across all the transformer companies is extremely solid. So typically, I think Voltam, I think at least from these levels, even a upside of at least 15-16% is possible, despite the fact that it operates on a higher base. So I think the investor is still yet in the money. So I think definitely good prospect side. She can hold on for the next 12 to 15 months. I think expect a decent upside of at least 15-16% from the current levels.
Next query is coming in from Bangalore. Kishore, you can go ahead and ask your query.
Hi, Mahima. Also, good morning to you. So I have BLS International share, and I'm wondering, it's also a kind of monopoly stock. And the stock is pretty much down from its all-time high. And I would like to know both fundamentals and technicals on the stock. And I'm okay to hold this for a couple of years.
Okay. Avinash, any view on BLS International?
No, I think Somit, the viewer rightly pointed out that the stock has underperformed, but the business fundamentals continue to be very strong. It's one of the large visa players in the country and has been connected with the tourism sector. In terms of profitability, this year has been quite good. I think we should see a profit of at least 550 odd crores. And the company continues to be debt free, has got a lot of cash on the books, and plus operates a very asset light model. So, the point is, this is a company which operates in more than 65 odd countries. So I think you need to have a little bit of patience for this story to play out. Not very much competition currently in India for them. So I think if the investor can hold on for the next 12-18 months, he could definitely expect a decent risk reward. So continue to hold.
Right, so that's the view coming in on BLS International, but we've got our next caller as well. Suhas is calling us from Bengaluru. Suhas, hi, a very good morning to you. I believe you have a question on Infosys.
Yeah, very good morning. Thanks for taking my call. I was holding Infosys 34 shares, and during the recent buyback, I had participated in that, and around 19 shares were accepted at the rate of 1,800. And I was left with another 10 or 15 shares at 1390. Now recently, like 3-4 days before, again I bought the share around 1280. Right now my average price is 1346. I just want to know if at all I hold Infosys for the next 2 years, will I be making some 40% returns, provided all the negative sentiment on the IT industry right now going on due to AI.
So you said 40% for how much time period?
2 years.
2 years. Okay. Avinash, I'll again come to you on this one. Infosys, do you believe it can give 40% in the next 2 years?
I think, Mahima, I think this is a company where, I think a good amount of surprise could come in. I think they've already tied up with Anthropic, which is one of the leading AI tools provider globally. I think rather than giving you a target price or a 40% return commitment, I would say that this company can give another one or two buybacks, because the kind of cash they are sitting on, that definitely more than recompensates the investor. So I think in that sense, the kind of price the investor has entered is not a very expensive price, but I think he needs to hold on for the next 2 years despite the kind of volatility we are seeing in the IT market. I would presume that FY27 should be significantly better, but considering the buyback and the kind of re-rating possibility, I think he can continue to hold. At least a 25-30% upside looks possible over the next 2 years.
Right. The next query is coming in from Mumbai. Nihal is holding 2,200 shares of the Dabur at a price of 509. He wants to know at what price should he exit. Gaurav, any view on Dabur?
Well, Dabur is consolidating from past many weeks now, and the range is 490 on the downside, 530-35 on the higher side. So stock is currently trading in the middle of the range. Once that range is taken out, that is a break above 535. The stock will quickly rise up to 555, 560 zone. So from a short-term trading standpoint, that should be the strategy. 560 should be the level where the viewer should consider exiting the position.
Okay, all right. So that's the view coming in on Dabur. We've got our next caller. Shankar Rao is calling us from Hyderabad. Mr. Rao, hi, a very good morning to you. I believe you have a question on Sai Life Sciences.
My question is about Science DLM Limited.
Okay.
Science DLM Limited and
Okay,
Science
Science
Limited.
DLM. Okay.
What is the view on the next 3 months? I want to understand.
Okay, 3 months. Gaurav, I'll come to you on this one. Scient DLM is the counter that he's talking about. What are the charts indicating?
I'm afraid I won't be able to comment. We don't track the stock.
DLM.
Mahima, we don't track the stock.
Actually, you don't track the stock. Okay, all right. Avinash, then your view, though it's from a very short-term perspective, but any view that you can give on this particular counter from a fundamental perspective?
No, I think, my guess is that, if the investor is already holding on the share, it's better that he holds on for the next 1 or 2 quarters. The previous quarter was not very encouraging, but I think longer term, I think it belongs to the Scient kind of parent, which is separately listed. And this was a IPO which was widely, taken by the investors in a big way. So I think maybe in the next 6 to 8 months, I think one needs to hold on and see better numbers coming out. I think they have a very good long-term business opportunity. But in the short term, I think looking at the kind of scenario, it's better to wait and watch. So if he's got the shares, he can hold on. No fresh buying advisable.
The next query is coming in from Murli from Rajamundry, and he's holding 250 shares of HBL Engineering bought at a price of 800 rupees. He wants to know the long-term view. Should he continue to hold or sell this counter? Avinash, any view here?
Yeah, I think, Somit, this is a company which has moved up from 75 odd levels to almost 1,000 odd levels, and this operates in a very niche space. The safety systems for railways, which is called Kavach. It's one of the key vendors there. In fact, recently they've got large orders from the railways. So my sense is that if the investor has purchased it at a higher level, he could average at the current odd level, bring down his average cost, and stay invested for the next 2 years. The visibility for this business is going to be humongous. It's going to be very significant. But I think the kind of price he has invested, he'll have to give some time for the stock to get again re-rated and obviously make a risk reward over his cost price.
Okay, all right. So that's the view coming on HBL engine. But we've got our next caller. Rao is calling us from Andhra Pradesh. Rao, a very good morning to you. What's your query about?
Good morning. Regarding IFCI.
Okay.
Regarding IFCI. Can I enter at the current market price for 1 year term?
Okay, Mr. Rao, got your question. Gaurav, IFCI is the counter that he's talking about. Any view with regards to where charts are concerned? Can he enter right now?
The stock has retraced pretty much from its recent top. So yes, these are reasonable levels to take a fresh entry. I suggest the viewer to maintain a stop at closing stop at 55 and then take a position. Look for targets close to 70 to 75 for the next couple of months.
The next query is coming in from Sonali Mehta, and it's on HDFC Bank. She's holding 44 shares at a price of 908 rupees. She wants to know whether is it a good time to add more shares. Gaurav, any view on charts when it comes to HDFC Bank?
Somit, of late, HDFC Bank has witnessed reasonable sell-off from 1,020 odd levels. Currently, it is trading well below 900 marks, excuse me. I don't see much of a downside from these levels. Another 20-30 points cut can be possible towards 860. So one should start accumulating the position around the current zone.
Got it. Okay, so that's the view coming in on HDFC Bank. We've got our next question from Gautam, who's writing us from USA, asking about Jio Finance. He's bought at the levels of 293 and 10,000 shares is what he has. He wants to know if he can go ahead and sell this counter and invest into something like an AB Capital or Aditya Birla Sun Life. And he wants a technical view on this one. Gaurav, your view? Okay, I think we seem to have lost.
This question is to me.
Okay. Go ahead.
Yeah. So I think AB Capital is a better choice. The stock is consolidating at higher levels. I don't see any meaningful profit taking coming in anytime soon. Any dip from the current levels towards 330 should be utilized as a fresh entry. Take a closing stop at 320, maintain long position and add once the stock crosses 370 odd levels.
Right, so that's the view coming in on all of these names. But the next question that we have is from Dinesh, who's writing us from Noida, asking about power stocks from a long-term perspective. He wants to know if we can go ahead and buy something like an NTPC or Tata Power or a combination for both of these in the next 5 years. Avinash, what would you recommend?
I think within the choice given, I think Tata Power seems to be a much better bet. I think the investor can also look at transmission companies like KEC International. I think he should have a basket of stocks covering power generation, power distribution, and the power equipment kind of place, which I think can give him better alpha over the next say 3 to 5 years.
Okay, all right. So that's the view coming in on these power names. But we've got our next caller. Divi Gupta is calling us from Pune. Mr. Gupta, hi, a very good morning to you. What's your query about?
Yeah, good morning, madam. Yes, madam.
Go ahead, ask your question.
My question is, I have 1,440 shares of Eicher Motors.
Okay.
Yes, and my cost is about 150 rupees.
Okay.
Because his share got split now. So now what should I do?
Okay. Okay, got your question, Mr. Gupta. I'll take this up with Avinash. Avinash, you heard his query. Do you think can he continue to hold Eicher Motors after the split as well?
Yeah, I think he can continue to hold because his cost price is significantly low. Most importantly, I would suggest that book 50% profit, make the shares free, the remaining 50%, and then hold this stock for the next 12 to 18 months. I think the CV cycle is now just turning around, so you could expect better numbers from the company. But I think he could definitely encash 50% of his gains at the current level.
Okay, all right. The next question that we have is on Stalin Fluorochemicals. Amit Kapoor from Chandigarh is asking this. He says that it seems cheap as compared to its peers where PE goes. Should he continue to hold this for the next 2 to 3 years? Avinash, would you recommend that?
Yeah, I think, in the fluorochemical space, there are not many players. And I think this is a recent listed entity. And I think recently they've got approval to put a new facility in Rajasthan. So I think, numbers should definitely get better. But I think he needs to stay invested for the next 2 years to get the full benefit of this, growth rally, which is expected going forward.
Okay, all right. So that's the view coming on Stalin India Fluorochem. But the next question that we have is on NBCC. Venkat Ramani from Bengaluru is holding 600 shares at the levels of 80. She wants to know whether she can buy more, hold or sell for the next 12 months. Gaurav, from a 1 year perspective, what are the charts indicating?
No, I won't be suggesting to adding more position at these levels because the stock is not at all giving any signs of meaningful reversal coming in. But yes, he can hold on to his position because somewhat of the supports are placed around 84 odd level. So I don't see it falling below that. So my take is that she should hold on to a position with a stop at 84.
All right, so that's the view coming on NBCC, but shifting focus and of course, as always, we try to get you how the FNO setup is looking like, and we have Sharad joining by to give us the cue. Sharad, how are the cues shaping up right now?
Mahima, it's a bit turning negative. Earlier, last 2-3 days, we are complaining that the markets are in consolidation, but the key technical average levels for Sensex has been broken. And you see the heavyweights which are there, they are not giving in a good amount of support coming in, be it HDFC Bank, HUL, Ultratech, Cement, ICICI Bank, all of them dragging Sensex down. Remember, slight bit of positivity is definitely there in IT stocks, but is it very convincing? Will it hold up? That's the key question. BankX also, the story remains same, and it's a slightly much more weaker setup now as compared to Sensex going ahead. Stock specific also, there is not so much excitement in all of the 4 calls which I'm going to share because they are in a very narrow range. Petronet, LNG and Eternal are there where there is a long build up happening. And if you look at the short covering, that's also not that convincing. It's Kalyan Jewellers and Vari Energies. Long unwinding also, don't expect much major trade to happen, but yes, the market is shifting towards shorts, and this has pull up the key shorts coming in the capital market theme. CDSL, Angel One, all of them also cracking in the trade, and the NBFCs, of course, on the Bihar MFI news flow, all of them are seeing deep gashes also. Of course, some in the cash markets are also there, but that's the entire action basically happening in the shorts in today's space.
Okay, sure. Thank you so much for giving us those details with regards to where the F&O space goes. But moving on, I think Narendra is calling us from Tamil Nadu. Do we have him, Narendra?
Yes, madam.
Yes, go ahead, ask your question.
Madam, I have holding a Clean Life Science, madam. It is a chemical company. I am holding around 1,500 quantity at the rate of 920, madam.
Okay.
Shall I exit or continue to hold, madam? Because it is a huge loss in my portfolio. So I am very much affected by only because of these mid-cap stocks, madam.
I can understand that, Narendra, and I see that you're sitting on a loss of over 2.9 lakh rupees. Avinash, I'll take this up with you. What should Narendra do right now? Is there any scope of recovering his losses?
No, I think, Mahima, this company, ever since it went public, I think, it has never delivered. And I think investors have actually been largely disappointed because of the poor set of numbers. And quite ironically, this company was always traded at a premium. Even now, the valuations seem to be fair to expensive. So I think my sense is that since he has held on for such a long time, and his capital is not performing, it's better that he switch over to some other companies. I think maybe, from the banking sector, we continue to like the PSU banks like Bank of Baroda, Canara Bank, or maybe from the data center segment, something like an Anantraj at 540 could be an interesting bet because, these are all growing sectors, and our sense is that over the next 12 to 15 months, there could be a significant amount of traction in this area compared to clean science. So I think better to switch and, obviously allocate your capital to get a better alpha.
Right. The next caller query is coming from Bangalore. Garima, you can go ahead and ask your query.
Yeah, my query is that is it good time to enter HDFC Bank for long term, at least 1 year?
Okay. Avinash, any view on HDFC Bank from long term perspective for the next 1 year actually?
So I think below 900, Somit, it could be a good buy because, I think most of the negatives are factored in. Although one should remember the fact that last 2 years, the stock has done nothing. So it has underperformed, but I think hopefully if the banking cycle turns around, we have seen great growth now inching over in double digits, and it's one of the larger banks. So I think, yes, I think a small exposure can be taken, but below 900.
Okay, all right. So that's if you're coming on HDFC Bank. But with that, Gaurav, thank you so much for taking out the time and helping us answer all those queries. Viewers, time to slip into a very, very short break, but we'll be right back answering your queries on the other side. So do stay tuned.
True love is lifelong, isn't it? Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. ये on तो quality lifelong.
ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go, grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
साउंड चेक हो गया विजुअल्स रेडी लाइट्स ओके एवरीथिंग इज रेडी वेट आर यू रेडी ये सिर्फ एक कॉन्सर्ट नहीं है दिस इज माई लाइफ दिस इज माई स्टोरी वन नाइट नो रिपीट्स बुक योर टिकट्स नाउ
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. Welcome back. You're watching Ask Profit on NDTV Profit. The next caller query is coming in from Bangalore. Vishwanath, you can go ahead and ask your query.
Yeah, hi, good morning. Thank you for taking my call.
Yes, Vishwanath.
Actually, I want to know that is it a Trent or Tata Consumer, which is from the same group, so which is better at this point of time?
Avinash, what would be your view here? Tata Consumer or Trent from long-term perspective?
No, I think over the next 2 years, if one has to take a call, then I think Tata Consumer could be a better bet. I think not only from the point of valuation, but in terms of the kind of product category they operate. They have a very large and a very extensive product basket, which they sell not only in India, but abroad. So I think Tata Consumer could be a better bet. I think, but the investor needs to take a 2-year call. I think valuations are not cheap. But I think looking at the kind of branding power and the plus the network the company enjoys, a 2-year time frame can give a decent risk reward.
All right, so that's the view coming in on both these Tata companies. With that, let's also welcome in Rajesh Bhosle of Angel One joining us now. Rajesh, a very good morning to you. The next question that we have is for you. It's on Coforge. And Pravesh is asking this question. He wants to know if this is a good time to add. He's holding 29 shares at the levels of 1264. Would you recommend that? Rajesh, I think you're on mute.
Yeah, I hope I'm audible now.
Yes, you're
yeah,
on.
So IT packs are under pressure, and in fact, if we see well before IT packs came under pressure, this stock had already given a breakdown. So we expect the weakness can extend, and we'll suggest to wait for now. But if it comes around the levels of around 1100, that would be ideal level to average, because in the past, during July 24, we saw a rally starting from the levels of 1100 to 2000 levels. So if it dips around 1100, that would be ideal level to add on. But as of now, the stock is under pressure. Avoid catching the falling knife.
Right. The next query is coming in from Mahati from Hyderabad. He is holding 3,500 shares of Ola Electric, bought at a price of 42. He wants to know whether should he average at the current level or exit. He's currently sitting on a loss of around 50% he's saying. Avinash, what would be your view on this, Ola Electric?
No, I think I wouldn't suggest him to average here, Swamit, because as all of us are aware, the company continues to be on a very slippery kind of wicket. Q3 numbers were extremely bad, and I think fourth quarter is also going to be on similar lines. So I think it's better that he, shifts to some other stock. I think something like an IDFC First Bank or maybe a Federal Bank or a Bank of Maharashtra. These are much better bets in the current scenario compared to Ola Electric.
Okay, all right. So that's the view coming in on Ola. But the next caller, Parab, is calling us from Pune. Parab, hi, very good morning to you. I believe your question on DRL.
Yes. Hi. My question is regarding Dr. Reddy. I'm holding Dr. Reddy's 100 shares from last 1 year at the rate of 13.55. And my question to the fundamental analyst, Mr. Avinash Gorakhpur, what future he think about this stock?
Okay, fair. Got your question, Parab. Avinash, your view on Dr. Reddy's?
No, I think you can continue to hold. See, I think the stock may not have done at least for the last 1 year, but I think current trends clearly point out that the next 8 to 12 months would be promising for Dr. Reddy's. And I think Q3 numbers have also been quite, reasonably good. The commentary has been good. And I think hopefully this year the US market should present a much better and a bigger opportunity for the company. So I think, continue to hold for the next 6 to 12 months. I think you can expect a decent risk reward going forward.
The next query is coming in from Tenzuk from Kerala. He's currently holding around 308 shares of Bharti Airtel, bought at an average price of 1,940. He wants to know, let's get in Rajesh here to understand the short-term view on this counter. Rajesh, your view on Bharti Airtel?
Yeah, so this stock has been an outperformer, but if you see since November, the short-term momentum has turned negative, and maybe the weakness can persist in the near term. So as of now, short-term view remains negative, but somewhere around 1750 to 1780 levels, there's a strong support of key retracement and long-term moving averages. So short-term remains negative, but if it comes around 1750 to 1780, that would be ideal levels to add more around those levels. So short-term is negative, but at a lower levels can be added more.
Okay, all right. So that's the view coming on Bharti Airtel. Mohan is calling us from Bengaluru. Mohan, hi, a very good morning to you. What's your query about?
Very good morning. I just want to know, can I buy Shriram Pistons or Navin Fluorine at this time for a long-term perspective?
Okay. Avinash, Shriram Pistons versus Navin Fluorine, which one would you pick?
I think Shriram Piston looks to be a better choice. I think they have recently acquired a company called Grupo Antolin, which had a revenue of more than 1,200 crores. Very marquee clients like BMW, Aston Martin, then typically Tata Motors, Mahindra. So I think the real kicker will come in FY27. So I think he can definitely buy at the current level.
Okay. All right.
Right. The next query is coming in from Sunil from Pune, and he wants to know whether should he buy Vishal Mega Mart from short-term perspective. Rajesh, any view on Vishal Mega Mart?
So I would suggest avoid for now. Till yesterday, there was some positive momentum, but there's a strong gap down opening and volume-based activity is also there. So as of now, wait. The short-term momentum is definitely weak, where every bonds is getting sold into around 89 EMA. So wait for now. The stock is likely to slip further towards the levels of around 112 to 110 levels.
Okay, so that's the view with regards to where Vishal Megamart goes. But the next question that we have is from Mr. GK, who's writing us from Bengaluru, asking about two counters, that is Ashok Leyland and Tata Motors commercial vehicles from a 4 to 5 year time horizon. He's asking as to which one should he invest in. Avinash, yesterday only Puneet did a story on how all of these commercial vehicle stocks have really run up. Valuations are also not looking cheap, but is whether there is growth going ahead or not. And he laid down factors that yes, there could be possible legs of growth going forward. But between these two, that is Ashok Leyland and Tata Motors, which one would your pick be?
No, I think commercial vehicles we would like to bet on Tata Motors. I think although Ashok Leyland has also done pretty well, but in terms of the market share, in terms of the product positioning, I think Tata Motors CV has got a better kind of runway ahead. And I think the investor needs to keep a 12 to 18 month horizon because, the CV cycle has just started looking up. And hopefully, if GDP numbers are good, if the economy grows, I would not be surprised that the CV cycle could give a better run rate for a player like Tata Motors. Of course, Ashok Leyland would also grow, but relative to that, Tata Motors CV definitely should do better.
All right. In fact, we've got our next question from Vinay, who's writing us from Hyderabad, asking about AGI Green. He's got 100 shares at the levels of 700, sitting on a loss of over 15,000 rupees. Rajesh, your view on the charts on this particular counter?
No, I mean, the stock remains under pressure, and in last few weeks we have seen a volume-based sell-off. So, expecting further downside in the near term. Possibly the stock can slip towards the levels of around 510 levels and further lower in the near term. So, use any bounce towards 600 as an exit opportunity. We expect the underperformance to continue in the near term.
Next query is coming in from Ramcharan from Hyderabad. He's holding a few shares. In fact, 616 shares of NHPC bought at a price of 89 rupees. He wants to know whether should he average more or continue to hold this count. Avinash, your view on NHPC?
No, I think you can continue to hold and maybe average more, but this stock has always moved in a very slow kind of pattern, Somit. So, I think if the investor has got a 12 to 18 month time frame only, then he should average and stay invested.
Okay. All right. So that's the view coming on NHPC. We've got our next caller. Ravi is calling us from Bengaluru. Ravi, hi. A very good morning to you. What's your query about?
Yeah, I just want to know whether I can accumulate SpiceJet at the current price, because it went up to 12 rupees. Then because there is no much of competition in that field, other than Indigo. So is it the right time to bet on SpiceJet or it's not worth investing? I would like to know the advice.
Okay, Ravi, got your question. Avinash, I know fundamentally you would prefer Interglobe Aviation, but your view?
No, I think, currently at this level, if the investor has got the stomach to face the volatile market trend and be prepared for a little bit of volatility, he could definitely take a position at 15, 16 rupees. But please understand that the company still continues to be on a weak wicket as far as its financials are concerned. So I think the aviation space is growing. You will have to be very watchful on the company's performance and the kind of commentary and the traction it shows. So maybe at around 15 rupees, a small exposure can be taken, but I think with the caveat that in case the company does not perform well on the financial side, then obviously it could turn out to be a loser.
The next caller query is coming in again from Hyderabad. Nagarjun, you can go ahead and ask your query.
Sir, good morning, sir.
Yes, good morning.
I bought 100 shares in the Network Technologies at the levels of 3,100 rupees. Can I hold or exit, sir?
And can you hold it for long term?
Not for long term, sir. Not truly for long term. It may be, I thought that in 3 years, it's around like 9,000 rupees or 10,000 rupees. After 3 years, I thought that.
3 years.
Technologies are, the company are working on AI structures.
Okay.
But
got it.
short-term purpose, I am asking, sir.
Got it, Nagarjun. Avinash, any view on Network Tech for the next 2 to 3 years?
Yeah, I think the investor can definitely hold on. I think this is a stock which has always been fancied by the market, and I think the AI tool facilitator is definitely going to help benefit companies like Network. But I think he needs to stay invested for the next 2 to 3 years. Typically on a very small quantity, most investors try to book out very fast. So I think keep a time frame of 2 years and stay invested. You could definitely expect a decent price reward.
Okay. Brainbees is the next one. We've got Shiva Kumar who's asking as to what is the view on this particular counter. Rajesh, enough data on the charts to give a perspective?
Can you repeat the symbol?
Brain bees. So that's first cry. I'll get you the symbol. It is first cry only.
Yeah, so I mean, in the last 2 weeks, the stock has seen a vertical fall from the levels of around 290, and definitely the momentum remains weak. So we'll suggest. Yesterday there was a bullish engulfing, so some kind of base formation is definitely there, but we expect this stock to underperform in the near term. So use any bounce towards 20 EMA, that is around 235 to 240 levels, to exit long positions.
Next caller query coming in from Mumbai. Nishad, you can go ahead and ask your query.
Yeah, I want to know about transformers and rectifiers, and I also bought skipper. I just bought them today. I have a long-term view. I bought them because I was bullish on the theme electrification. So is it right? Should I buy more?
Okay, quickly, Avinash, your view on transformers and rectifiers. Should he continue to hold?
Yeah, he can continue to hold because the price is corrected also quite significantly, and within the transformer space, we feel that this is a company which is sitting on a very healthy order book, and I think the traction in this segment is going to grow. So continue to hold. I think keep a time frame of at least 12 to 15 months going forward.
All right, so that's the view coming in on Trill. But viewers, time to slip into a very short break, but we'll be right back on the other side. So do stay tuned.
True love is lifelong, isn't it? Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. ये on the quality lifelong.
हाथ, ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
साउंड चेक हो गया? विजुअल्स रेडी? लाइट्स ओके? एवरीथिंग इज रेडी? वेट, आर यू रेडी? ये सिर्फ एक कॉन्सेप्ट नहीं है. दिस इज माई लाइफ. दिस इज माई स्टोरी. वन नाइट, नो रिपीट्स. बुक योर टिकट्स नाउ.
First India tour in your city. Rock on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go, grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right order decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me.
Welcome back. You're watching Ask Profit here at NDTV Profit. Just a quick look as to how the markets are doing at the moment. The Nifty 50 still, in terms of where the numbers go, it's still down by about 0.6%. Around 160 points of a downtick is what we're seeing. Off from, of course, the day's high point. And with regards to where some of the names goes, IT pack is doing fairly well. Eternal also, topping that chart. But with regards to where the laggards are concerned, let's try to pull up the Nifty 50 heat map and see as to what are the counters that are putting pressure. Interglobe Aviation down by about 2.3%, followed by Bharti Airtel, Dr. Reddy's, Tata Consumer and Nestle. So that's the view with regards to where the benchmarks go. But shifting our focus to the recent listing on the bourses, that is Gordium IVF and Women Health got listed at a 5% premium, now trading around 3.8% higher. My colleague Ridhima Bhatnagar spoke to Miss Manika Khanna, CMD at the company, listening to that conversation.
By asking you that, the companies just got listed and saw strong retail participation, what's your message to the investors on the key priorities for the companies going forward?
Great. So my message to the investors, Ridhima, is that we are here for the long haul. We are here to create a legacy. We are going to aggressively make 19 hubs and equivalent spokes across the country. We already have a pan-India presence with 7 hubs and 28 spokes. So we understand, all 4 corners of the country quite well, because in infertility that matters. Like tuberculosis in Bihar could be more rampant and become the reason. Aging eggs or PCOD in Punjab could be a reason. So, we understand the entire country. And we work, we are a completely SOP driven organization. So to our investors, I would like to say that we are on a roller coaster and we plan to build these 19 hubs, make a lot of money for us and everybody.
Could you specify any, particular cities you're looking at for expansion?
Yes.
And also 2-3 quick allocations which will be done with the IPO proceeds.
Yeah. So as far as the cities are concerned, the whole list is mentioned in the RHP. We are going across. So there are 4 or 5 centers in the north part of the country, 2 or 3 in the west, 2 or 3 in the east, 4 or 5 in the south. These have not been randomly chosen. These have been chosen according to their birth rates, the affordability of the population, the sale of infertility drugs in that population. So that is how these centers have been chosen, and they are diverse. So they will have major metros like Chennai and Kolkata, whereas they will have smaller cities like Vizag and all these places as well. Tier 2 is also our focus, because it's a myth that infertility is confined to the metros. There's significant infertility tier 2, tier 3 down to the villages, and that is why the hub and spoke model that we follow works beautifully.
Could you give us a little bit of visibility as of how will you manage your margins and profitability for the investors in the next few quarters? What can be the expectations?
Yeah. So, we spent a lot of time creating a foundation. 16 years of hard work, 16 years of journey has been in making these SOPs and making this asset-light model, attracting medical tourism. So what we've done is that we've reached these sustainable EBITDAs and PATs despite opening 7 hubs and 26 spokes, because, we are asset-light. Spokes invite zero infrastructure costs. Second, we are 97% B2C driven in an industry which is largely B2B driven. So we are not paying any heavy professional fees to doctors. We are not star doctor dependent, so all our doctors are employed people. So since the base model is going to remain same and the foundation is strong, so we do not see much changing, and historically we have shown that in the last 3 years when we were expanding, the EBITDAs and PATs have sustained.
So talent availability as per your RHP also says that is an issue. Going forward, how will you manage while you scale to get good doctors and also maintain the success rates?
Excellent question. So, what Gordium does is that we train our own team. So we do look at a set of, for example, let's say I'm going to a city of Pune. So I'll look for a good gynecologist there, qualified, who has the minimum qualifications required by the 2022 ART bill law, and an embryologist or a nurse accordingly. But we do not depend on somebody having 15 years of experience. because then they're less flexible to be trained on our SOPs. Our SOPs are giving a clinically high consistent success rate of 58%. We want it to be that high always. And so to maintain that, all our doctors, embryologists, nurses have to undergo a mandatory training at the head office. They have to give an exit exam. Only if they pass the exam, they're posted. Otherwise, we say a bye-bye to them. So the talent pool is something we keep creating along with us. And that is also one of the reasons, the doctors stick to us. Because not only do they get annual salary increments, they also get performance incentive if one has outperformed the other. And the most important thing to a doctor, not just money matters, professional satisfaction matters. And they get the freedom to use their medical skills, but within the guidance of the SOP framework. So for example, my doctor in Ludhiana is the same from day one. My doctor in Srinagar is the same. So that's how we retain the best pool.
All right, so that's the conversation coming here on the recent listing. But shifting focus and moving on with the Ask Profit show, Chetan is calling us from Bengaluru. Chetan, hi, very good morning to you. I believe you have a question on Apollo Microsystems.
Yeah, good morning, everyone. I have a Apollo Microsystem 250 shares. I bought it 119. So I wanted to know long-term view on that.
Okay,
I can hold
Avinash.
it for 5 to 10 years.
Sure, Avinash, 5 to 10 years is the horizon that Chetan is looking at for Apollo Microsystems, already sitting on profits of around 30,000 rupees. Would you recommend a hold on this one?
Yeah, I think he can continue to hold for the next 2 years. See, I think defense companies' premature nature is that the more you hold, I think value can be compounded. And I think the company in which the investor has invested is already in the money. But I think looking at the next 2 years, the kind of order book visibility, the kind of scalability this company would grow, I think definitely he should hold on for the next 2 years to get a better alpha.
Right. The next query is coming in from Somashekar from Bangalore, and he wants a short-term view on Tata Steel. He has around 100 shares bought at a price of 181. Rajesh, your view when it comes to Tata Steel?
So definitely an outperformer, and it's continuously moving in a higher top, higher bottom structure. I suggest him to continue to hold on to it. We are expecting a move towards the levels of around 225 to 240 levels. On the downside, he can keep a trailing stop loss below 204, which is its 20 EMA, which is getting, every dip towards it, it is getting bought into. So keep a stop loss of 204, and on the higher side, keep a targets of around 225 to 230 levels.
Okay, all right. The next question that we have is on Bombay Burma Trading Company. K. Anand from Hyderabad is asking this question. Wants to know if fresh buying can be done at the current levels. Rajesh, would you recommend that?
So I would suggest him to avoid. We are seeing that bounces are getting sold into around 200 DMA, and overall the structure remains negative. But if in case it dips towards the levels of around 1550 to 1500, there we see a strong support of 200 weekly moving average, and also the last year's swing low. So as of now, wait. But if it dips towards 1550 to 1500 levels, that would be the ideal levels to enter longs.
Next query is coming on, is a caller query coming in from Pavitra. Pavitra, you can go ahead and ask your query.
Good morning, everyone.
Good morning.
So I want to invest 5 lakhs in any sector which can grow maybe 30 to 40% in 1.5 year to 2 years time frame. So can analysts suggest any few stocks where I can invest?
Okay, Avinash, where would you suggest Pavitra to invest 5 lakhs for long term?
I think from the large cap, I would still say, Mahindra and Mahindra Somit looks to be quite attractive at 3,400. So this could be one stock, and the other stock could be possibly, Anant Raj, which has the data center theme. I think this theme is going to catch a lot of momentum considering the noise we are seeing on the AI side. So, these kind of stocks would give a little bit of stability. At the same time, next 12 to 18 months, the runway looks pretty solid.
Okay, all right. The next question is from Sanket, who's writing us from Mumbai. He's asking about Purvankara. He's holding 200 odd shares at the levels of 285. Should I sell or hold from a slightly long-term perspective? Rajesh, what is the view with regards to where charts go?
I mean, it has seen a sharp vertical fall from the levels of 265, and as of now, I mean, further weakness is expected in the near term. So I would suggest him to exit, use any bounce towards 210, 215 as an exit opportunity. The stock prices are likely to see further downside in the near term.
Okay. The next query is coming in from Lata, and it's on IIFL Finance. She wants to know whether should she hold this counter for long term. Avinash, any view on IIFL Finance?
Yeah, I think, Swamit, you can hold it for the next 12 to 15 months. Yeah, I think this has been a corporate which has delivered in the past. And I think, looking at the kind of tailwinds going forward, the investor needs to be, of course, a medium-term investor. So continue to hold. Maybe in the short term, there could be a little bit volatility. But next year, I think hopefully if the capital markets do well, most of these financial services companies should do well. So I think continue to hold.
Okay. All right. We've got our next caller. Mohsin is calling us from Gujarat. Mohsin, hi. Very good morning to you. What's your query about?
Yeah, very good morning, ma'am. Ma'am, I have a orange share, 2,386 shares, at the rate of 285 rupees per share. So what can we do for near term, ma'am?
Okay. All right. I'll take this up with Rajesh then. Rajesh, ONGC, what are the charts indicating?
So we see a strong breakout on the weekly charts, and already the stock has seen a strong momentum after the breakout. We expect the stock to move towards its all-time high levels of around 310 level. So hold on to it. In fact, any dip can be added, can be taken as a buying opportunity. Somewhere around 260 to 265 levels is the breakout zone that would act as a support. And in the near term, we expect a move towards the levels of 310 levels.
So that's the technical view coming in for ONGC. But with that, completely out of time, Avinash as well as Rajesh, thank you so much for taking out the time and helping us answer all those queries. With that, viewers, like I said, completely out of time with this edition of Ask Profit. But do stay tuned. KYC comes up next.
True love is lifelong, isn't it? Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. ये on the quality lifelong.
बिटिया की शादी है हमारी।
बधाइयों बधाइयों।
कुछ पैसे मिल जाते समय पे लौटा दूंगा। जिंदगी में जरूरत के वक्त हम अक्सर अकेले पड़ जाते हैं।
इसीलिए तो केपरी लोन्स आपको गोल्ड लोन देके अपना फर्ज निभाते हैं। केपरी लोन्स फर्ज निभाते हैं।
साउंड चेक हो गया? विजुअल्स रेडी? लाइट्स ओके? एवरीथिंग इज रेडी? वेट, आर यू रेडी? ये सिर्फ एक कॉन्सर्ट नहीं है। दिस इज माई लाइफ, दिस इज माई स्टोरी। वन नाइट, नो रिपीट्स। बुक योर टिकट्स नाउ।
First India tour in your city. Rock on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What
Hello and welcome to KYC. I am Sharad Dubey, your host and host, and let's start the show. Very interesting company I have got for you in KYC. It's recently listed, but I'll give you some hints. Try to guess it. The logistics service provider for e-commerce, express parcel and value-added service. We also call them 3PL. This is the new word which we have got for the last 2 to 3 odd years. It's backed by big names. Flipkart, 8 Road Adventures. You must be getting the vibe of a VEPC. Yes, it is largely funded on that. Promoter stake is on the lower side. We'll get you on that. And the other important thing is it's recently listed in January 28, a very limited period where we are getting this company. But a lot of interest coming in this stock. And currently, the stock is trading below its IPO price of 124 rupees per share. Well, it'll be very interesting to know which company this is. And I don't want to keep you in the shadow. This time I'm going to give you the answer a bit early. The company's name is Shadowfax. Let's get them on screen. Think ahead. That's the tagline. Pretty much interesting. But why are we calling this company? Of course, there's a lot of interest. A lot of you have written to me for KYC to get in new listed companies as well. But remember, the history would be a bit less and I will tweak the ratings as well. But let's get on the key questions. Why are we actually getting this company here? The revenue margin guidance is very much important because this is still an evolving business model, at least for this perspective, and also on the financials. It is not an old business, it's a newly made business, and now it's moving around the 3PL industry growth rates and the company's market share. Of course, the market share is looking on the higher side, so we'll get in all the exact numbers from the management. Another important reason to call this company on our show in KYC is that any acquisitions plan, generally these companies have a bigger war chest for cash and they might look at some inorganic way of moving ahead as well. Apart from this, also the demand inquiry trends, especially for the B2B clients. Remember, if a CVF cycle starts, which is already therein, it starts benefiting logistics companies. And if you talk about logistics, that's why Shadowfax is over here. What's the growth looking like for both the express segment? Is it actually outpacing the hyper local segment? That's what we will try to understand. There are these two business segments which the company is looking at. FY27 capex plans, there's already a little bit of moderation in FY26. So that'll be pretty much interesting to talk about this company. And also the new growth engines. There are a lot of key initiatives which are coming in. Same day delivery, larger delivery, luxury delivery, all sorts of things are there, and it makes us, a bit at times, it becomes overwhelming for an analyst to understand so many things happening just for one odd company. But it's possible, it's India and it's the startup space, and that's where the surprise happens. And on the show is Abhishek Bansel. He's the co-founder as well, the CEO of the company, where we will talk with Abhishek on his journey and the company's growth aspects as well. But let's give you some more details about this company. Ye karti kya hai? What does the company do? Of course, about the company, we had mentioned you that it's a tech-led third-party logistics, 3PL, that's the full form. Every time this PL word will be coming, so it's not profit and loss. At least for a logistics company, it's 3PL, it's third-party logistics company in India. Another important fact about this company, it's focused on enabling the digital aspect of this commerce, especially in express logistics. Also, we focus on the asset light model. That's pretty much interesting. It's operating across 15,166 pin codes, and that's a large exposure area. But nevertheless, there is a big scope to grow. Also, India is a big country. 23% market share they have for India's e-commerce parcel shipments. That's a good market share coming in from the base which they have grown in the last 3 to 4 years. Express forward parcel delivery is for the e-commerce and the D2C brands as well. So whatever you're ordering from phone, a lot of back-end work is being done by Shadowfax, and that's why it's actually in the shadows, but it's very much prevalent. And look at the big names. I'm sure you must have shopped from all these larger brands, and the people behind it is of course Shadowfax. Also, looking at these clients, it just keeps on going, and these are a part of our everyday life. So this company also technically becomes a good player in that. The reverse logistics, reverse pickup market leader by volume. These are the other products which the company is focusing on. Quick commerce also, it's there. The hyper local, as we call it in these terms, they might look a bit difficult, but to be honest, this is the startup parlance. So I'll try to explain you slowly what actually this is all about. Same day and next day delivery service. This is where everybody wants. I want something in 10 minutes. Maybe you want something in just a day. That is where Shadowfax comes in. Also, apart from this, these are the hand-in-hand exchange deliveries as well. So these are the nitty-gritties, of what things are happening behind the screens, and that's what I'm explaining you. The revenue model, paisa kaise aata hai? This is called fee per shipment, order delivery. That is how these metrics work. That's why I just wanted to give you that, but I'll show you the revenue. That will be more simple for you, and that's what I'm talking about. The revenue, the top line numbers go up in these type of companies because they are still in their growth phase. That means the growth hasn't stopped. That's why maybe the markets are giving a very high valuations, but we'll come to that. Also, apart from this revenue model, we'll talk about the forward express parcel, how the numbers have changed. This is the growth coming in 8%, and now it's at around 23%. It'll be very much interesting to see whether they can touch the 25 or 30% mark in a month or a quarter. There is market share picture, of course, is the largest 3PL company for reverse pickup shipments. That's one thing. Apart from that, there are 3-4 other important points. This is the largest 3PL company for same-day delivery, and this segment we are seeing something much more happening in the entire market. Largest 3PL quick commerce for quick commerce deliveries also, 10 minute, 15 minute, 20 minute, that's what you call. Also is the operational performance. This is the number, the Q3 numbers I'm talking about. Express is doing better than hyperlocal, but you never know. These models keep changing, the companies keep pivoting, the mindset is startups. So it's a bit difficult for a public player analyst to understand these models, and that's why maybe the markets are not giving the premium which the company might get. This is a very important news coming in. One NCR is the largest automated sortation facility to date. We'll ask more details about it. It's a very recent announcement coming in from the company. The facility is now fully operational. Roughly a 50 crore investment we could talk about, and this is roughly a 2.1 lakh square feet facility in the NCR region. So this is the recent news coming in when it comes to Shadowfax. So पूरा detail आपको तो बता दिया company का, but I'll explain you the ratings, how we go about it in KYC, what are the rating parameters, and remember, to be fair and one of the loved KYC shows we will change some parameters for a company like this, because it's not fair to judge one company with all the same parameters. Of course, the basic things remain there. This is the holy grail. I won't change that ever. But the operational parameters I'm getting, because return ratios is not fair to actually get these numbers right now. Let the company mature in the business model. Shareholding street cat, this is very much important. But remember, it's a very small time period. So you won't get anything on a time basis, time series analysis. So we have to be very neutral on that aspect. Valuations, yes, we'll focus on that. Outlook, this is very much important on the future and the industry. So we'll get you all those details. But right now, let's go into the first rating parameter, and that is the income statement. Income statement, largely, you see the companies like that, the growth comes on the top line. The focus is always on the top line, and they are doing what they are told. The way the model is set up, the PVC funding is there, and that's the growth coming in. Also, if you're looking at the bottom line, so you must be wondering, Sharad, why the profits are not going up? Because company is in a big expansion phase, and just getting path to profitability that the company has achieved, but how much more will it go up? That is something which we'll talk about. But if you're working at scale and the benefit starts coming in, that is where some amount of good upflows can start coming in, and that's little bit of that hint has already started coming in. This is just the Q3 numbers, so I would just like to give you the longer picture. Definitely the path to profitability has to go up more, but look at the moves which are happening in Q3. So that is something which is showing us that the story of Shadowfax is intact, and that margin jump also we saw. Whether this will hold up that 6% margin, that's what we'll be asking Abhishek. But as of now, the story, the movement from Q3, from the lower numbers, at least in the profitability and margins, has gone up. So that is something which I liked. But long-term company needs to prove more, and that's how it's evolving. So let's give it time and give a neutral rating when it comes to the income statement.
Balance sheet is also very much important, and largely balance sheet is really well funded, to be honest. And you see the borrowings has also come down. The IPO listing was there a month ago, so not much there. The balance sheet strength is very strong, and even there's 191 crore cash as well. So some acquisition or treasury management is always there. So to be honest, balance sheet is very strong. So I'm going to give a thumbs up when it comes to the balance sheet. But cash flows is very much important also. Logistics industries, at times the cash flows get lumpy, and there is some seasonality impact also. There's a festive season where you get more orders, and let's just see how that has panned out. And I've just taken data till FY25, and largely the data is kind of showing some positive moves here. But remember, this cash flow segment is a bit lumpy. Just to give a benefit of doubt for both the long-term investors and even the short-term traders, at least the cash flow segment is something, even if you could say that you could skip this is fine. It's a neutral rating coming in, not much happening. But nevertheless, FY25 numbers are decent. Let's talk about the operational parameters. You must be wondering, Sharad, where are the return ratios? Return ratios I have not taken. The model is a bit different. So let's focus on the operational part, and that is where my interest is there. Express and Hyperlocal doing really well. And that is something which you should be looking at least for this stage of the business cycle of the company. Let's move ahead. Any other important operational parameters are there? And yes, other segments are also there. Other logistics segments, they are also doing well. So if something is going at an average of 50% plus, that means it's in the right direction. And if it's in the right direction, I'll give a strong thumbs up when it comes to the operational parameter. But let's see the shareholding. Remember, we just have one data itself. The promoters, you don't have so much stake, but remember, there are large investors already there. This is how the model works. FIs, DIs is between 9 to 16%. But if you're seeing public just doesn't only mean the retail or HNI, it also means some large PVC investors who are classified as public. So net, it's a neutral rating. Let's give it more time and see where the institutional money starts moving in here or there. Let's talk about street cred. That's our fourth parameter. It's been flat since IPO listing, that 124, 120, that is where the stock is moving. And let's give it more time, to be honest. This is the price you must be looking at. You must be checking the prices at which you must have entered after the IPO, or if you have got a IPO allotment, you are still stuck there. It's just been a month, but remember, February has been a very volatile month. Maybe the Q3 numbers are not factored in yet, and there's a lack of analyst coverage also. So that's why I'm here for the KYC show, so that everybody listens, be it the analysts or even the fund houses who really like our show. So it's a neutral rating when it comes to the IPO pricing, or you could say the street cred. But valuations is very much important. Sometimes it's questioned in the higher IPO mispricings from new age tech companies. Sometimes the old investors, old thought process, they do not like that. But at times, of course, as the earnings go up, the lumpiness starts coming in and the normalization happens. But I have taken a P, in our analysis for this. Shadowfax is at 200 times. See, remember, the profit numbers are on the lower side, but the numbers are numbers, and that's what we are here to give you, that perspective. Around 60 times P ratio is delivery, and Blue Dart is at 37 times. So right now, if you look at valuation, you want to enter the stock, it might not be the right time for you. This is for some investors who always have some opinions on higher valuations. So for that, I have given a thumbs down when it comes to the valuations front. Let's talk about the outlook. This is very much important if the stock is listed right now, 1 month ago, or if the stock is 100 years ago, it has been listed. The most important thing is the outlook. What lies ahead? That is where stock market gives you the valuations and the price movement. One NCR, the largest automated sortation facility, that's coming. That's something which will be very much interest of. Capex might be moderating to almost 4% in FY26. The number was, if I remember, 140 crore rupees. So we will understand a little bit more about it. The diversification growth engines, of course, the quick commerce, time sensitive segments, the luxury segments, the heavy goods segments, are they over diversifying it, or everything is under control? The CV upcycle, will the logistics also start performing because of that? And generally this happens. First CV comes in, then the logistics comes in.
So it will be very much interesting for us to check this. This is an industry perspective. But whenever these industry perspective things happen, there's a consolidation always at play. So you might find a lot of mergers, acquisitions coming in, and when the larger players come in, you'll have 2 or 3 larger players actually commanding a bigger market share, and we are going in that industry. So this is very, very much important. As of now, outlook looks very strong for me, the way the company is going up. So it's a strong thumbs up. But let me give you the entire picture of the ratings. We spoke about the company, what the company is doing, what the company will do. But let's give in the ratings, एक revision हो जाए. Income statement is largely neutral. Balance sheet and operational parameters are really strong. Cash flows, let's give it more time, and same thing happens for both of them. Valuations, if you're looking at, then certainly not, this is not the company for you. But outlook, the future, that is also very strong. So all in all, on the higher side of the KYC ratings which we give at an average, it's 5 out of 8 when it comes to Shadowfax Technologies. But to give us more perspective, we'll be joined by Abhishek Bansel. He's the co-founder and CEO at Shadowfax Tech. An interesting trivia about him: he's an education from IIT Delhi, and also he has worked with Hay Group as a business consultant. So Abhishek would be joining us, and Abhishek, it's always a pleasure to talk with you. Good afternoon, and a very strong Q3 numbers also has come in. Just want to ask you on your new announcement first before we get into the other details for KYC. Is one NCR. What is this automation center all about, and how does it change a lot? Because in your presentation I've written there's an inflection point also. Now just give us the example, or maybe what does this inflection point mean? One NCR's automation center which has come in.
Yeah, thank you, Sharad. So One NCR is an automated center. We have been building it for the last 18 odd months. It's the largest sortation center today that we have set up. Today, Shadowfax runs close to about 55 sortation centers pan-India. One NCR, what we have set up, is a fully automated single-touch center where right from batch sortation to shipment sortation, we are able to basically consolidate all volumes in a single facility in North India, and then basically ensure that they are efficiently moved across the length and breadth of the country. What this facility helps us build is an extensive mesh network where more than 50 cities will have direct connections on a national level. Another probably close to 70 to 80 cities at a zonal level will have a direct connection from a single facility. It gives us incredible advantage from a speed, capacity standpoint. Think about it. I mean, we as an organization, our express parcel business, we are the fastest growing logistics player in the country today. Our business is growing at north of 60% year on year. We are at a point where with this kind of a growth, we are investing in some of the futuristic facilities because we believe a very, very healthy growth number is going to continue over the next 4 to 8 quarters for us. What you saw, what you were speaking about market share, we have rapidly gained market share over the last couple of years. We believe in this market, we will continue gaining market share over the next 4 to 8 quarters. And that inflection point is something which a facility like a One NCR will continue enabling us to deliver on the fastest speed and at great cost.
Abhishek, of course, we spoke about one NCR, but will there be other 2 NCR, 3 NCR, or maybe 1 MMR also?
There is a lot more in plans. We will continue to do automations over the next few years. If you look at our historical numbers, close to 55 to 60% of our automations happen within our sortation centers. As a guidance that we are given to...
Right. And Abhishek, when you speak about automation, of course, there's an engineer in you. I'll, of course, ask the second question on AI. And AI, automation, and definitely the space you're working at, how are you deploying that? And do you see this, big operational efficiency coming in from this? And if yes, will we see that in the next 4 to 8 quarters?
Yeah, absolutely. The guidance that we have given is that every year we'll continue improving our profitability by anywhere between 100 to 150 basis points on a yearly basis. Whatever you're looking at our numbers, it also includes the cost of all this expansion, cost of building some of these facilities. And when you look at our profits, when you look at our EBITDA, it actually includes the total cost of growth as well. So some of these facilities have a very, very long duration of build up. As I said, it takes about 18 odd months to get a facility commissioned. So some of those costs continue to be part of our net profit as we are looking at. year on year, as we continue to grow, we will see a lot of operating leverage coming in, and one should expect anywhere between, as I said, 100 to 150 basis points of profitability jump every year in our numbers. On your question on AI has become one of the most important elements for us in deploying some of these automations, and that's why using AI, deploying these automations right now gives us a competitive advantage as well. One of the big advantages we have created in our sortation system is dynamically based on the load prediction, you can figure out how many shipments do you want to bag based on direct sortation or indirect sortation, so as to optimize on the cost. And it's a very sophisticated IP-driven predictive model that we have created in our organization using data engineering, using artificial intelligence. We also have created our own mapping system. See, in India, it's very, very surprising. 9% of the customers in India either enter a wrong PIN code or they actually don't even know their PIN code. Looking at address and sending them to the right location using our PIN code fix engine, using our own mapping engine, is a huge competitive advantage that we have built over a period of time. It helps us give us a great cost advantage. It gives us a customer experience advantage. Today, we use everything on our own mapping system. We don't use third-party apps. And this entire mapping engine that we have built is built on top of our AI engine that we have internally created.
And Abhishek, let's just give us, the market of 3PL and your market share. It's around 23%, right? So how much percentage the market is actually growing? And of course, you are doing better than market, and that's why the market share gains is coming, at least in the organized space. Just wanted to get some numbers on it. Maybe if you maybe 25 or 30% market share, can we touch that in the next couple of quarters?
Absolutely. We are definitely on track of that. See, to understand our market share and the whole story around it, as you would understand, in India's 3PL space, there are very, very limited players now. It's a fairly complex sort of activity that we have got into. And there's been this place is largely governed by 3 or 4 players. Okay. In this market, one can also understand is that our customers don't want to work with only a single partner. They typically choose to work with 2 or 3 partners because they also want to diversify and ensure that they are able to optimize on the right cost and the right experience by choosing the right partners. What we see is our customers actively diversifying, and with our cost value proposition, with our new age services, with our focus on value added services, customers are loving what we are offering as a tech-driven player. And historically, that's why despite being in a competitive market, our market share has grown from 8 to 23%. I think you're completely on track. We will continue gaining market share. Assume the 3PL market to grow anywhere between 15 to 18% at a market level. We will definitely be growing faster than that.
Exactly. Right. And Abhishek, the way you are growing, it seems like, a management student in me would think that, hey, let's do a little bit of acquisitions also, something which is around your, circle of competence, or the thing, which will help your business all around. Are you looking at something here? Because I feel like there might be some inorganic acquisitions at play.
I think, just to be honest, we are not actively looking at acquisitions. Our hands are too full, focusing on the core business, be it e-commerce, be it quick commerce. We are seeing very, very high levels of growth in the market right now. Our focus is to double down on the segments where we know we can gain market share, build operating leverage, and convert that operating leverage into profitability, build market leadership in each of the segments where we exist in today, and then think about some of the diversification through acquisitions. We did do a small acquisition last year. We acquired a company called Critical Log, which focuses on movement of luxury products. But that's something that we did last year. No immediate acquisition one should expect over the next maybe 4 to 8 quarters.
Okay, so 4 to 8 quarters, I think the entire management and the team is locked in. 4 to 8, 4 to 8, 4 to 8. We have been hearing that. But the new growth engines are also there. You spoke about luxury. You spoke about the heavy industry, the single day product delivery segment. It gets very technical for me and some of our audience also. But the new growth engines, if you can just simplify it, what would that be?
I think the new growth engines are exactly the areas where we are looking to gain market share, where we have little presence. We want to just enable that. Shadowfax started as a service for delivering smaller products. Now we are diversifying and growing up into larger products through the same supply chain. Think about a suitcase or an aquaguard or a large package of diapers. Okay, so that is something that we have got into over the last couple of quarters. Moving forward, we are about to launch white goods as a big category. I think it's a segment which is very, very interesting, where we have very little presence. And typically, when you're delivering white goods, your average realization per order is far higher than delivering a small good. So I think that's a very interesting segment. Using our existing supply chain, how we are enabling white goods in our white goods, furniture, some of the other categories in our business. Same day delivery is something which helps our D2C brands compete with hyper-local services like quick commerce on one side and Amazon Prime on another side. Today's D2C brands want to do self-fulfillment. They don't want to work with aggregators, or they don't want to work with basically some of the demand generators, because they completely kill their margin. They want to work directly with third-party logistics companies, do their fulfillment. With our same-day delivery service, it is today the fastest growing service we have. It is a big differentiator that D2C brands basically get from us. In very, very simple ways, let's say you go to a brand.com website, you're sitting in Mumbai, you're placing an order by 12 o'clock. What we essentially promise is delivery of that by end of day, okay, in your same city. If it is a different city, we fly that shipment overnight, deliver it to you next morning. Today, this service is applicable in more than 30 cities. We are the market leaders in doing same-day delivery.
So Abhishek, we spoke a lot about your business, but there's this one question I get asked by a lot of my Gen Z folks. They keep writing to me and they want to put a question to you. The question is, someone who is 24-year-old right now looking at you in our KYC show, they want an advice as an entrepreneurship, and if they want to break into your industry, what they should know about?
Well, see, I mean, as a youngster who's probably looking to start something of their own, looking to build their own brand, I think India is in a great place right now with AI coming in, with ordering patterns completely changing, with video commerce becoming really a big thing. Today, influencers generate more orders than the traditional Google and Facebook marketing schemes that we are looking at. I think the thing to focus for anyone coming into this sector, coming into starting their own brand, is probably to focus on some of the new age trends, new ways of acquiring customers, building the right product, creating a differentiated sort of a product, which probably was available offline, is not available offline, and then building a brand on top of that.
All right, so that's the mantra. All the young viewers, Gen Z folks listening, do take note of it. He was also once a student, and then now he's having a market share of 23% plus. It's always a pleasure to talk with you, Abhishek, on the company and the future outlook ahead. Thank you very much. It's always a pleasure. Thank you. So this is Shadowfax. Of course, 4 to 8 quarters. That's the bullish tone coming in when it comes to even the margins as well. An interesting view coming in if the young folks want to enter into this business as well. Pretty interesting conversation here, but that's all folks for KYC. Stay tuned to NDTV Profit.
बिटिया की शादी है हमारी।
बधाई हो, बधाई हो।
कुछ पैसे मिल जाते समय पे लौटा दूंगा। जिंदगी में जरूरत के वक्त हम अक्सर अकेले पड़ जाते हैं।
इसीलिए तो केपरी लोन्स आपको गोल्ड लोन देके अपना फर्ज निभाते हैं। केपरी लोन्स फर्ज निभाते हैं।
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
First India tour in your city. Rock on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक कॉन्सर्ट नहीं है. This is my life. This is my story. One night, no repeats. Book your tickets now.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches.
Benchmarks trade under pressure today with Nifty shedding over 180 points. Sensex loses more than 500 points today. Real estate and FMCG are the drag. IT and oil and gas remain resilient. Setback for Amara Raja in Exide. Zimbabwe announces ban on all raw mineral exports and lithium reserves. Africa's top lithium producer wants more local processing and cites malpractices as the reason for the ban. India is set to adopt a new GDP series with 2022-23 as the base year, replacing the decade-old 2011-12 series. The Ministry of Statistics and Program Implementation is scheduled to release the national accounts data based on the new series. That's today. In a major relief to Aam Aadmi Party's leadership, Arvind Kejriwal and Manish Sisodia have been cleared of all the charges in liquor policy case by a Delhi court. Add CBI's charge sheet lacked evidence. Major escalation in Pakistan-Afghanistan conflict in our neighborhood. Pakistan bombs major cities, which puts the neighbors at open war after months of tit-for-tat clashes. Hello and welcome. You've tuned into Markets at 12 on this Friday afternoon. Let's take a look at the market on Friday. Yes, completely losing steam on the market as well, because Nifty 50, it's inching closer to the lowest point of the trading session today. Remember, it's almost lost 180 odd points, and more than that from the high point of the trading session and 25,300 odd levels. Well, Bank Nifty is also in tow with the key indices, and when we talk about the mid-cap index, the broader markets, that's also down in line with the key indices. Small-cap index is, however, taking a deeper cut. When we look at the contribution, well, HDFC Bank, remember, by rotation, a quasi-investment into the Indian market and the economy, HDFC Bank is the top dragger today, and that's what is coming up. But some of the IT counters are really seeing the recovery, and that recovery trend is continuing. And that particular sector is the only one which is adding some bit of momentum and some bit of green shade on the markets today. So IT sector doing well, but apart from that, most of the consumption plays are really a drag in the market. When we talk about the biggest drags, it's real estate, FMCG, auto, consumption. These are the sectors which are falling the most. When we look at the mid-cap universe also, some of the financials which are quasi-consumption like PB Fintech, Muthoot Finance, these are the ones which which are the biggest drag in the market. So that's a synopsis of the market. There is volatility that has been persisting because of various factors, and now that volatility is turning more into weakness as of today. Markets losing steam on Friday. Chakri Lokripriya, who's the Chief Investment Officer of Equities at LGT Wealth, joins us now. Chakri, always a pleasure to welcome you on NDTV Profit. What do you make of the market sentiment that we are seeing today of extreme pressure and weakness?
Thank you. It's always a pleasure to be with you at NDTV. I think, what's happening is it's the geopolitical and the tariff uncertainty. Now, clearly, the good news is, the tariff is somewhere between 15 to 18%, the US tariff. And so that is until the Supreme Court decision is finalized. So which means capex by many companies in India, whether it is textiles, all the export related companies are going, metal companies, because and auto ancillaries, these kind of companies, for them, the tariff for autos is 25, for metals, it's 50, for textiles, we're waiting to see, and the government has removed some subsidies. And net of all this, companies are going to wait and watch what is the final tariff before they commit to capex. So I think for the next 5-6 months, therefore, we'll have a sideways market.
Chakri, so if there is a sideways market, do you think that there is any pocket of investment for a longer horizon, which now looks like is at an attractive valuation, which could be strategized as an investment theme?
The domestic the proxies, which is basically financials, those are unaffected. They're affected by the broader macro slowdown or pickup. Now, given that 2025 was a very unsettling year and did not do much, I think 2026, with the tariff maximum capped at 18, is much better than 2025. Therefore, incrementally, the Indian economy will kind of improve. And all the past GST cuts, etc., will all start to kick in for the benefit of consumption maybe later on in this year. So given all this, I think, financials and some of the shallow cyclicals like, maybe automobiles, and we're going into summer, so some consumer durables we can begin to look at.
Right, but good you mentioned consumption, Chakri, because this is the sector which demands the utmost importance or attention in today's market, because the biggest drags are really coming in from banks and financials, which are also sometimes the quasi investments for the economy, like HDFC Bank falls on a day of weakness the most sometimes. So apart from these drags, auto, real estate, as well as other consumption, FMCG, these are the ones, and even financial services, which are quasi-consumption like insurance, as well as gold loan, etc. So these are the ones which have fallen the most and showing utmost amount of weakness. What is the trend and what is the sense we are getting from this kind of a play in the market?
If you divide it into 2 or 3 segments, so basically one is financials. Within financials, PSU banks clearly will benefit the most versus the private banks, because whatever capex which is done by the government will first flow to the PSU banks. For the private capex to pick up, which will again go to the PSU banks, and some of it to the private banks, therefore, again, private banks will lag. And third is because the consumer is not yet fully recovered and will yet to enjoy the benefits of the GST, etc. cuts. Consumer spending, credit card spending, those kind of spending which benefit the private banks is likely to be back-ended. On the other hand, in the case of pure consumption, autos have done very well, so there is some amount of profit booking. And in the case of consumer staples, I think it's an incremental volume game. There's no pricing power for those companies largely as a sector. So against that backdrop, therefore, that sector is unlikely to recover anytime soon.
Right. So, Chakri, at this point, what would you advise in terms of an investment strategy for medium to long-term play? And if this volatility you're saying or market is going to remain sideways with many of the factors beyond our control in the global arena also having their fair bit of impact on Indian markets, putting all that into perspective, what will be your investment advice? The markets, are they a falling knife gradually? And should it be wait and watch, or should pickup be done, or judicious investments be done at this particular point?
It's clearly the moving away from being a trading market. You might get these opportunities, obviously. When channels like yours come and point out individual opportunities, they're always buying opportunities. Now, for the longer term investor, clearly it is a wait and watch game. And since it's the US Supreme Court, tariff, Trump coming in, FTAs between various governments, these are all way beyond our control. And they can also change on a dime. Now, tomorrow, if Supreme Court or the Congress in the US reaches an agreement and the tariff comes up at a particular number, it's all final. Those things can happen very suddenly. So therefore, it's good to be invested gradually. There's no point. I think one can also do a sip across stocks and funds.
Right. Thank you so much, Chakri, for joining us. It's always a pleasure to take your insights on the market. So as we talk right now, 25,300 level that has been lost. Nifty 50 is down more than 200 points and is closer to the lowest point of the trading session at the particular moment. So keep an eye out on the market, but a lot of our market pressure is also because of the global factors. Let's join in Peter Cardillo with his expert take. He's the chief market economist at Spartan Capital Securities and joins us from the US. Peter, always a pleasure to welcome you on NDTV Profit. You heard that Indian markets on shaky ground, also a lot of global factors at play. What is your outlook on the various uncertainties globally? There is trade war, where the uncertainty persists even after the Supreme Court judgment, and the US-Iran tension, and there is some middle ground being sought right now. How do you see this situation impacting global economy and the markets?
Well, domestically, I think we're going to grow somewhere between 2 and 2.25% this year. On a global scale, I think it'll be somewhere between maybe 1.75% to 2.5%. And that, of course, includes China, Europe, and Asia as well, the southeast part of Asia as well. And so I think growth will continue. Of course, there could be some headwinds, and those headwinds could be geopolitical, perhaps interest rates, and of course, perhaps a relocation of assets.
That's right, Peter. In fact, one important development is also how the Federal Reserve in the US now goes forward under new leadership. How do you see the strategy and the vision of the new chief coming in?
Well, if you look back at Kevin Walsh's history, he's been a hawkish, very hawkish. And his concentration has been mostly on inflation. So I kind of think unless the inflation numbers come down rather quickly, that he's going to take his time in lowering interest rates. He will lower interest rates this year. And that's because I think that the U.S. economy, the labor market, is going to permit that to happen. I don't see the labor market falling off a cliff, but I do see jobs getting. I see people having a harder time in finding jobs, and I think the impact is most likely going to come from AI. It's going to be a very big challenge for the labor market.
Right, big challenge for the labor market. But when you look at India amidst all these factors, Peter, and of course, India is impacted by the FII inflows coming in from the global market, especially US, and also the crude oil prices. How do you see India's economy and what's the view on that?
I think India is going to do well. I've always favored India. It's a very vital economy at times. Your technology and and pharmaceuticals industry should carry the economy to new heights.
Its outlook on India is good, but Indian economy's performance is also dependent on the various geopolitical factors which are impacting crude oil prices as our import bill. How do you see the near-term US-Iran, developments really impacting the global economy and other factors?
Well, we've had a spike in oil prices, not because the fundamentals warrant it, but because of the Iran-U.S. tensions. But another round of talks were just concluded, and there seems to be some progress being made. So I remain in the camp that when it's all said and done, I don't think the United States is going to resort to a strike. I think that diplomacy and some sort of accord where Iran and the United States can basically save face. No one wants to see the price. I can assure you that President Trump does not want to see the price of oil go above $100 and stay there. That would be a defeat in terms of inflation. And I don't think even the oil producers nations want that, because eventually they would come crashing down. And so Iran certainly doesn't want a regime change, and if there's no deal, that's a very good possibility. If Trump has to resort to an attack, those attacks may lead to a serious political situation in Iran, and there's a good possibility that government may collapse, and there might be a regime change, a new upspring, so to say. And so I don't think Iran wants that. So I think Iran is going to have to make a deal with the United States. They may not get everything that they want, and that goes for the United States as well. But I think some sort of a deal is on its way.
All right, some sort of deal is on its way. So you do see de-escalation in US-Iran tensions for a sustained period. But you did mention job losses as one of the big factors. AI also has a lot of role to play. What is the immediate impact on the US economy of all this?
Sure, absolutely. Well, as I said, the jobs market is not all that strong. It's not all that weak. At this time, it's quite hard to read. We month to month, sometimes we get surprises like the last reading. The upcoming data, which will be out next week, I think will show certainly a jobs creation that has come down from the previous month, maybe by about 40 or 50,000. And so again, it's a market that has to be looked at very carefully. But again, I think one of the problems here is the loss of jobs attributed to AI. In fact, Fed Governor Cook recently talked about the implications of AI, and she basically said, it's good, but we have to really be careful and study and see what the impacts would be on the dual mandate of the Federal Reserve, which we all know is the labor market and inflation. And so in certain aspects, AI could be trouble for the global economy, for not only for the United States economy, but for the global economy as well. And I think that governments have to study it and make sure that it doesn't get to a point where it could destroy jobs. And what technology constantly evolving into new areas, it would rather be difficult to perhaps replace those losses of jobs.
All right, Peter Cardello, thank you so much for giving your insights on all aspects of US economy and the factors which are really impacting the global trends. Thanks so much for joining us. And while we are talking about the US and the global developments, one important deal that is really turning heads is the one for the Warner Brothers, and the Hollywood power shuffle has really taken a dramatic turn over there, more than what we see in our movies, with Netflix officially stepping out of the Warner Brothers deal. Bidding war leaving rival Paramount Skydance in pole position in this particular matter. After months of high-stake talks and also regulatory lobbying, Netflix says that the price tag simply stopped making sense, especially after Paramount raised its all-cash offer to a level Warner's board deemed superior to that of Netflix. With Netflix walking away, the stage is set now for a tectonic merger that could really reshape the entertainment landscape, from HBO to CNN to iconic films franchises. So this is the largest deal that is really taking place, and it affects us also directly. At least I'm a fan of Warner Brothers movies and also a regular watcher of Netflix. So that's the important deal. But while we are talking about the deals, a large deal in terms of government disinvestment taking shape in India, Fairfax is emerging as a frontrunner for IDBI Bank's majority stake, potentially also reshaping the lender's future through fresh capital and also strategic partnership and possible CSB Bank merger. To discuss this further, we are now joined by Ashutosh Mishra, who's the head of research institutional equity at Ashika Stock Broking. Ashutosh, good to have you on NDTV Profit. Because of this,
Thank you.
This news now, the stock of IDBI Bank is over 1.5% up in an otherwise absolutely weak market. What's your sense on this particular transaction?
This transaction was going from a long time, and I think this is the right step. Suppose Fairfax comes and they already have fit and proper criteria qualified, because they are owning one of the bank, CSB, at this point of time. So then the whole process can be completed fast, and the most important things next will be on the pricing and how the deal is structured.
When we talk about this spate of foreign investments coming in and fueling the Indian, banking as well as financial services system, Ashutosh, considering that IDBI Bank has a huge PSU, holding, government as well as LIC, how do you see IDBI Bank's shareholders really benefiting from and foreign investor really coming into this? What lies ahead for the shareholders, and in how much time can they really benefit from their investment?
Yeah, surely, given there is a lot of scope is available to improve the operational and other efficiency in the case of IDBI Bank, and this is one of the easiest for the government to do the disinvestment, because this IDBI Bank is not governed by the Public Sector Act, different Public Sector Act, but governed by the Company Act out there. So it's very easy for government to do the disinvestment of this. So I clearly see that good value can be emerged, but it will take some time to it. First to complete the merger, what is the pricing, another part, and then how the whole CSB and IDBI this combination also takes place. Post that, it may be beneficiary for the shareholders of both the banks, but this whole thing will take some time out there, and that's why
right.
We are not. Yeah.
Yes, there has to be a lot of patience when it comes to these kind of large transactions. Very quickly, Ashutosh, any reason, the stock has already run up quite a bit in anticipation of this deal. Does it make sense to invest at this point, looking at probably a 2-year horizon for those investments to really start showing results, or all are baked in right away?
No, it will take time to come out, because here it will be double merger get involved. First, it's the acquisition of IDBI Bank, first transaction, and the second transaction is surely RBI will not allow them to run two separate banking franchise, so the merger of these two. So a lot more clarity and other thing, and that's why it will. This whole investor who want to really ride this whole thing probably will have to give 2.5 or 3 years time to take the benefit of the whole transaction.
All right, 3 years time, that too also assuming that everything else remains same and goes positively. Mergers take a lot of time, and that needs to be also seen an opportunity cost that you also give in terms of that patient capital being really stuck in one particular counter. So that's an assessment that needs to be done. But Ashutosh, thank you so much for your expert take on this particular large transaction that's on the anvil. Now, moving on, an important development when it comes to the mineral resources that are becoming extremely prominent right now. As Zimbabwe really announces ban on all raw mineral exports, we look at the impact on the Indian companies and how it will really affect the global supplies. Varsha is here with a detailed analysis. Tell us, Varsha.
Well, the important point is why we are talking about this, how this is going to impact India. Number one is Zimbabwe exports raw material to China, and China exports processed lithium to India, and hence we have an indirect impact on India. Now, Zimbabwe is Africa's largest lithium reserve holder, exports 1.128 million tons of spodumene in 2025, mostly to China, and the lithium prices jumped globally after the ban announcement due to supply fears. Now, ban applies even to cargo already in transit, and ban remains in force until further notice. Now, which are the companies and which are the sectors that will get impacted when it comes to India? Well, talking about EVs, now the probable impact is indirect but maybe significant, because if you see the battery cost forms 30 to 40% of EV costs. So Tata Motors, Mahindra Electric, Ola Electric, Maruti are all the companies which may be impacted. Onto the battery manufacturers, over here Amara Raja Energy and Exide are some of the companies which will get impacted, because higher lithium will lead to higher battery procurement costs and will impact the margins for these companies. So overall, in conclusion, if Zimbabwe restricts lithium concentrate supply, China cost increases, global lithium prices rise, and battery and EV companies pay more.
Right, so that's the impact really coming in, and lithium is an important mineral, remember, for the electric vehicle batteries, and that is a critical thing to watch out for. At the moment, Nifty 50 at the lowest level in trading sessions. Keep an eye out on that, more than 200 points lost, and there is weakness in the market. But out of time on this edition of Markets at 12, but do keep it with NDTV Profit. Thanks so much.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक concept नहीं है. This is my life. This is my story. One night, no repeats. Book your tickets now.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decisions.
It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide, and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches.
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Hiral Dadia, and Sharad Dubey, standing at the NDTV Profit Market Pit with all the action in the markets today. Sharad, a negative day of trade. We are trading at the market's lowest levels as well, and major pressure coming in. I mean, I was just talking to Jasmeet a while ago, where IT as an index has seen the worst performance since, Lehman crisis in 2008. It's the worst February that the sector has seen as well on a monthly basis as well. Lots brewing.
Well, yes, you see the markets, there's a big sell-off happening here, but kind of you could say that overall support is not coming in. Look at the levels, 25,300 below. That means it's below the 200 DMA levels also. Let's pull up the Nifty Bank to show you how the strength is looking like. And today also, the larger players are not offering major support. There are some hints of, you kind of a reversal happening, but we need to wait it out. But options data is suggesting a different story. Let's pull out the factors for the markets right now, which is very much important. And the most important data for the day is the Nifty has broken down below the 200 DMA. That's 1 month low. The second important factor, of course, why the markets are trading lower is definitely going to be the buy the dip strategy. This can be there if you are having a medium term setup for both Nifty and Nifty Bank. Third important strategy you should be looking out for is that the options data is suggesting a minor recovery when it comes to the overall trade in the day's trade. Also, importantly, the Nifty heavyweights, they are carrying not major contribution, and that's the overhang coming in the markets. There aren't any clear winners. Of course, a little bit of short covering coming in the IT stocks, and that is holding up the Nifty a little bit, but nevertheless, the contribution is not that strong. Major sectors are in losses, but it's in a very narrow range. It's not a very big, stocks are down between 2 to 3%. We'll take that volatility in our stride. Capital market and select NBFCs, that's a big drag coming in. This, of course, on the news flow and the overall short setup coming in. But net, we can say, on a medium-term, long-term basis, we are still in consolidation, but yes, a technical breach has happened for Nifty.
Technical breach has happened in terms of Nifty and major sectors seeing that kind of selling pressure. Thank you, Sharad, for that. But let's quickly go through the watch list. Consumption names are under pressure, from a Nestle to a Tata Consumer, HUL, all of them seeing good pressure in today's session. Eternal has recovered after a strong fall. Ultratech down in trade as well, and it's flat over the last 6 months. Maruti Suzuki is seeing selling pressure. In fact, the auto sales numbers will start trickling in tomorrow, so that entire sector is going to be in focus. Redington, strong moves coming in there, along with the Tejas Networks as well on the back of the supply order. Praj Industries is a volume buzzer along with a Sun TV. SpiceJet has been buzzing on the back of the block deal, and VMart as well on the back of the deal today.
Vesuvius, a flat sequential top line, and that's having an impact on the counter. Coromandel has reached a 2-month low, and Apollo Microsystems is seeing pressure along with volumes. Your Bihar-based microfinance companies on the MFI bill are in focus as well in today's session. So that's what the watch list is looking like. But Sharad, over to you to take the rapid fire forward with Ajit Mishra of Religare Broking.
Thanks a lot, Hiral, for that. Ajit, good afternoon to you. Always a pleasure to have you. We'll start our rapid fire. Buy, sell, hold. You know the drill. First stock is Eternal. Your views on that?
Seeing recovery, hold.
Okay, the next stock is Ultratech Cement. Brokerages are definitely bullish on it, and if and when that upcycle comes from the cement space, then something to watch out for. Your views on that?
Accumulate on dips, 12,300 major support.
And Ajit, your views on Maruti Suzuki now?
Consolidation is more likely. Prefer TVS, M&M.
Well, this stock generally doesn't come in our radar, but today, of course, the volumes have seen some changes. Reddington, your view on that in this cash counter?
Strong rebound, likely to continue the momentum. 260 should be the stop. Can hold for 310.
Another stock doing well in trade, of course, large order wins also coming in. Tejas Networks, that's the stock I'm talking about. Already a good up move has come in last 2 to 3 trading session. Good time to book profits here?
Yes, book partial profit at current levels and trail stop loss at 385 for the remaining position. Book complete around 485-500 zone.
Your views on Praj Industries already last 4 to 8 quarters. If you talk about it, the company has been giving dismal numbers, and the way the US exposure impact is there, that's what we saw in the Q3 numbers. Your view on the technicals?
Likely to form a reversal pattern confirmation once we cross 345. So start accumulating with stop at 300.
The stock is in consolidation phase. I'm talking about Sun TV network. Some movement here. Your views on that?
Yes, a strong rebound witnessed today. Continue to hold with 610 as a stop loss and 670-80 as a target zone.
Ajit, another counter, Vesuvius India. There's of course a CFO appointment also at play, but your views on the stock now?
Looks like consolidation to continue here also. Not much to comment upon. Means it's likely to languish in this range of 500 to 550.
Ajit, another seasonal play, Coromandel International. Your views on that?
Coromandel looks still in consolidation. Confirmation above 2400 would trigger the next uptick. So hold with the stop at 2200.
All right, and of course, defense and component play, Apollo Microsystems. That stock is also buzzing in trade. Your initial thoughts on this? What are the key levels to watch out for?
Trying to form a base. Consolidation range breakout will get confirmed above 260 to 65. So hold is the recommendation with stop at 225.
All right, these are the views coming in the rapid fire segment. Over to you, Hiral.
Okay, thank you so much for that. These are interesting names. But very quickly, let's take the Google trend stocks with Ajit Mishra as well, because lots could be in focus on the back of the trends that we are looking at. Angel One, now, broking companies have been seeing pressure since yesterday's day of close post, the commentary that came in from Ashish Chauhan when it comes to the F&O segment. Tejas, we've spoken about, SpiceJet, we've spoken about, and Bharat Forge is the new one that we're looking at. Ajit, any views when it comes to Angel One, and if you have to look at any of the other broking businesses along with the Bharat Forge?
So Hiral, Angel One, we are seeing consolidation continuing. It's been almost like 1.5 years now that broadly consolidation in this range of 200 to 340 post this split is what it's trading in. I believe that this kind of sideways scenario might continue until we break 280 decisively on the higher side. So for a short-term point of view, one should refrain from any fresh position. In case if you have any existing bets, 225 should be your stop loss, and use any recovery towards 280 to reduce your position. Other stocks from this space, they're largely again trading with a sideways bias. JM Financials, we saw an uptick of late, but here also we are seeing that selling pressure emerging at higher end, and same hold true for Motilal Oswal as well. So for a time being now, it's prudent to avoid them and let them consolidate and form a base. Bharat Forge, on the other hand, we are seeing steady traction. The stock is at the record highs, but since the last move has been almost like vertical, fresh entry is something that you should avoid at current levels. Wait for some consolidation or a dip towards 1850 to re-enter.
Okay, so that's with regards to where the stocks on Google Trends go. But thank you, Ajit, so much for joining in. Always a pleasure to speak to you as well. But moving on, capacity infra, that's one stock that is in focus as well on the back of the order wins that they have been seeing lately. The slew of orders that are coming in have been pretty strong. The stock, though, at the day's lowest levels, and this is in consonance to what markets are doing. Subir Malhotra, whole-time director at Capacity Infra, joins in. Welcome to the show, Subir, and always a pleasure to speak to you. My question coming to you is, with that 537 crore Thane project recently that has been awarded as an LOI, what is the expected timeline, for this one and the Noida project to actually convert into definitive work orders and begin contributing to revenues?
So, frankly, this is not the first package that we are doing. I think we have been consistently performing and getting packages from Raymond Realty in that package of land for all the buildings that they have constructed till date. So I think we should have constructed all the projects that have come up in the Thane region and now even in the Bandra region for Raymond Realty. So this is a formality of an LOI. I think we have already been told to commence our activities of mobilization at site.
Okay, so that's revenue recognition portion for Thane. What about the Noida order? Will that also be on similar lines?
Yes, so this is one of the esteemed and upmarket projects which Great Value is now launching in the Noida sector. Noida sector, as we are all aware, is now the new booming area as far as NCR is concerned. So this is an up-end construction which Great Value has launched. And I'm happy to say that their first contract in this sector has been given to us. So which collectively, I would say, is a reposition of faith into us of taking almost 1,000 crores of orders in the last 10-15 days.
Okay. When you talk about, the expected commencement date and the stipulated completion timeline, what does that look like in terms of both of these projects?
So the Thane project is supposed to hit ground immediately. We have, like I told you, been told to mobilize immediately. As far as the Great Value project is concerned, mobilization has started. Kickoff meetings have commenced, and we intend to hit site by the 1st of May. Both these projects come in generally with around about a 36 month timeline. Yes, there are some provisions of, NGT, etc., which are additional in the north, but generally this is the timeline that we are operating in.
Okay. And, given this is a repeat order, what specific operational efficiencies or maybe, cost-saving measures are you going to see? Because you have a previous order already in terms of Raymond projects. Anything that you can apply from there to here which will actually help margins?
So that is our biggest advantage of working in a place like Thane, and especially for a client like Raymond's, where we would like to say that there is a complete match of the expectation levels of timelines and quality and safety standards that the client is expecting from us. And so for us, it is just a repetition of the works that we have been doing in the past. And also, as you say, there are operational efficiencies that we will obviously bring into the system.
Okay. And overall, how will the company manage the mixed-use nature of residential retail of this project to ensure that there is specialized resource allocation also going ahead?
No, for us, it's just a simple construction project of an RCC building. And that is not really demanding a lot of additional capabilities as one may ask.
Okay. And Sabir, how does this 537 crore order win impact the current revenue guidance for FY26? Because the order book already is very strong from here on now.
So, no, it will not impact the guidance for 26 because we only have a month left. And by the time revenue start hitting, it is actually month 2 or month 3 into the project that revenue start coming in. So, yes, I will say they will definitely have an impact on the Q1 targets of the next year.
Okay, so Q1 targets of next year is something that could see an upward revision. Anything else that you want to add when it comes to the outlook going ahead?
I would just say we are going in the general direction that we have been talking about decent CAGR that we've been earlier talking about.
Okay, so the CAGR growth is going to remain absolutely decent. Thank you so much, Subir, for joining in. Always a pleasure to speak to you. So that's the management of capacity infra. What's interesting over here is that FY26 guidance remains the same, but the first quarter of FY27 could see some bit of a revision on the upwards, taking the kind of orders that are coming in as well when it comes to the execution part of it. But let's also get in a fundamental guest on board. Devarsh Vakil of HDFC Securities joins in. Devarsh, welcome to the show. Always a pleasure to speak to you. I'm sure you've heard the management as well of capacity infra, a small company. But any views that you share on it with the kind of order book and execution that they're talking about?
So I'll speak in general. The sector, I think it is on a cusp of a revival. I think we can see in the budget also that government is spending a lot of resources towards infrastructure, affordable housing. And now I see that the private capex is also going to move. Now, in this light, I think companies like Capacite has potential to reward its customer. Execution was muted, but now I think execution is going to pick up this year. Our fundamental research team has Capacite under coverage and they have a buy rating there. So we also expect growth to continue in this country.
That's an interesting take coming on that. Yesterday, of course, there was a match also, India versus Zimbabwe, which India won. But there is another news coming in from Zimbabwe as well, and I think it's a negative news. Varsha, your view on that?
Well, Sharad, Zimbabwe actually suspended exports of critical raw material and lithium concentrates with immediate effect, and the ban applies even to cargo shipment which are in transit, and no further notice has been given by the country. Now, why we are talking about it? Because if you see, the process is that China buys raw material from Zimbabwe and India imports the processed lithium from China, and hence we have an indirect impact from this ban. Now, if I were to talk about who will be impacted in India when it comes to which sectors will be impacted, you have of course the EV companies, because the battery cost, if you see in an EV, makes up almost 30 to 40%. So you have Tata Motors, Mahindra, and all the auto companies which are going into EV vehicle, which will be impacted. And of course the battery manufacturers, you have Amara Raja and Exide Industries, which will get impacted because higher lithium will lead to higher battery procurement costs, which will impact the margins for these companies. So in short, China's cost will increase, the global lithium price will rise, and hence the EV vehicles manufacturers and the battery manufacturers will be impacted from this ban.
Thanks a lot, Varsha, for that. Of course, some adverse impact coming in from Zimbabwe, but Devarsh, to get you on this, your views on these auto stocks, so especially the EV plays, any impact on them we can see going ahead, and if any you had to pick, what would that be fundamentally good here?
So I think this has a implication on the Indian players. I think immediate impact will be the global lithium prices will spike. Last I saw, there was a spike about 5-6% on this news. So obviously what we are seeing is the mad rush towards all these commodities, critical minerals, which we are going to see this battle intensifying. All these countries who have access to resources are trying to extract the extra pound which they can get from all these resources. So if you were to look at a little bigger picture, the last year was about AI, it was about the intellectual properties. I think this year is going to be an important year for hard commodities and critical minerals. And as investors, we also need to switch our focus towards commodities, towards minerals, and try to identify all the beneficiaries.
And Devarsh, does CV play in India? That's also where, like, you could say a bullish sentiment is there. It's a kind of an upcycle we are seeing in. Two names come to my mind: Ashok Leland, Tata Motors CV. Brokerages have also given mixed views right now. Of course, some views coming that, there might be a good up move going ahead. At times somebody is talking about higher margins, which the companies were enjoying might be impacted. Your view on this, and if you had to pick between both of these stocks, which one would you pick?
Right. So we are positive on autos, especially the commercial vehicles. After the GST cut, we have seen good growth. And I think, as I just mentioned, the domestic capital expenditure cycle is likely to reverse and it's going to boom. So we expect commercial vehicles to do well. So players, large players, which you just mentioned on the commercial vehicle side, will continue to reward investors and we like them.
That's with regards to where impact on EVs, auto and battery companies goes. But moving on, HUL did make this announcement of a 2,000 crore capex. Now, all this while we were thinking, it's 2,000 crores. Is it going to be as large for a HUL or not? But when you delve into it, you actually understand the kind of importance just 2,000 odd crores holds for a Unilever in terms of their growth story, their capex plans, strategy as well. And that's what Mahima is bringing for us. Mahima, what do you have? This has been the discussion since quite some time. 2,000 odd crores, how do they plan to use this 2,000 crores? What would this actually mean in terms of strategy is the key?
Right. So, as you rightly mentioned, it's not a very big number, but the importance here is that 2,000 crore is a very focused capex that they're going to do, focused investment that they're going to do in the beauty and personal care. Now, what this means is, like I said, it's going to be an investment in a specific segment that is beauty and personal care. And this is going to be, spread in the next 2 years to boost premiumization. They're going to focus on two things, that is the segment and the premiumization of that segment. And this is, one of the most aggressive capacity expansion in one particular segment that HUL is going to do. So this is what it means basically. Now, in terms of how capex has been over the years, not a focused one, but an overall generic capex, it's been usually in that range of 1.5 to 2% as a percentage of its revenue. These are the numbers in the past 4 years. If you can see, that range as a percentage of revenue has been between that 1.5 to 2.5%. for HUL. This is the generic capex, of course. This time they're going to do a focused one. In terms of what is change in this strategy, now they're focusing on fewer and bigger bets, clear focus on certain segments and certain brands, and presence in premium side. They're focusing more towards and want to grow volume more towards the premiumization side. And of course, volume growth from here on should take off is the view that is coming in from the commentary from the past 2 quarters. In terms of where the sectors go or the specific segments that they're keeping focus on, skincare is the first one. Beauty and personal care, of course, we talked about that. Hair care, and in terms of where the other two go, personal care we talked about, and the last one is home care liquids is what they're keeping their focus on with regards to where the segments go. Now, moving on as to what has changed under the leadership of Priya Nair. Focus on volume growth has increased. From here on, they are expecting good volume growth. Focus on premiumization has increased. And lastly, beauty and personal care is going to be the next leg of growth, the next segment where they're going to see growth coming in from. Lastly, in terms of where brokerages view stand, Nuvama has maintained buy. They're saying that stock price is attractively valued at 44 times FY27 and 40 times FY28. In fact, in the morning, Parag Thakur did mention that HUL has never traded at 40 times forward PE. The stock is oversold zone is what Nuvama believes, and the company will see benefit and more likely will see more benefit with the inflow coming in the FMCG sector. So that's what Nuvama believes. Lastly, they've also said that going forward, this remains as their buy, and this is the overall view of what's happening with HUL and why and what this 2,000 crore means for the company.
Okay, so this is going to be very interesting. Thank you so much for that. Devash, any view when it comes to HUL? A focused capex that they are talking about. Apart from that, there is some value buying happening in terms of FMCG as a sector over the last couple of days. Yes, there is pressure today. IT is seeming pretty reasonable to a couple of analysts as well. How are you looking at the sector in your view?
So both these sectors, we have been quite cautious over the last few years. Earlier they had a prolonged phase of uneven demand. The consumer sector is beginning to show some signs of stabilization, some recovery. Urban side remains relatively resilient, but because of the rural market where there was a lot of inflationary pressure and muted wage growth, we did not see any volume growth. And the whole theme of premiumization is across the category where D2C brands are actually gaining market share. For particularly this quarter, the price of key commodities like the oils, copra, cocoa, coffee, all these things have come down, and that will have positive margin improvement for some of the FMCG categories, but personal care and other categories are continue to struggle unless they have an improved revenue mix. They have higher share in the premium brands, some innovation. Will remain cautious here. What we like from this sector is stocks like Britannia, Nestle, the Marico. That's where we see some kind of EBITDA margin improvement, and that's where we are focusing. But overall, we continue to remain underweight on the consumer sector.
So that's with regards to FMCG as a sector. But thank you, Devash, so much for joining in. Always a pleasure to get your views as well. But before we wrap, two stocks, one stock that I want to discuss or mention is a Mastech. Their UK arm has bagged a 5-year project it's a 49 million pound project that we're talking about. A marginal spike coming in terms of where Mastech goes from the day's lowest levels only on that back of the 5-year deal that we are talking about as we speak. But it's mainly the UK arm which has backed that one. And very quickly, if we can just get the lines back in terms of Anil Ambani and the summons that he had. He skipped appearing at the Delhi ED office today. That's the latest that we're picking up in terms of the summons that he'd received from the Enforcement Directorate. Anil Ambani has skipped appearing there. What's the ramification? What's the next update is something that we will watch out for as well. But that is a quick update that we're giving you with regards to where Anil Ambani goes. But completely out of time with that, it's a wrap on this edition of Trending Stocks from Sharad, the team that put the show together, and myself. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक कॉन्सर्ट नहीं है. This is my life. This is my story. One night, no repeats. Book your tickets now.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you.
Benchmarks trade under pressure with Nifty shedding over 200 points, Sensex loses close to 600 points, Realty and FMCG drag, IT and oil and gas remained resilient. And setback for Amara Raja and Exide as well. Zimbabwe announces ban on all raw mineral exports and lithium reserves. Africa's top lithium producer wants more local processing and cites malpractices as the reason for the ban. And India is set to adopt a new GDP series with 2022 to 23 as the base year, replacing the decade-old 2011 to 12 series. The Ministry of Statistics and Program Implementation is scheduled to release the national accounts data based on the new series today. In a major relief to Aam Aadmi Party's leadership, Arvind Kejriwal and Manish Sisodia have been cleared of all charges in liquor policy case by a Delhi court. The court also adds that CBI's charge sheet lacked evidence. Major escalation in Pakistan-Afghanistan conflict. Pakistan bombs major cities, which puts the neighbors at open war after months of tit-for-tat clashes. Good afternoon, you're watching Lunchtime Trades with me, Shreyansi Singh, and this is the show that gets you a roundup of everything that is happening in the world of commodities, news and updates on the top buzzers at this hour, all while you grab lunch. Let's kickstart the show, but before we do that, let's quickly take a look at the markets because it's actually looking like a bad day coming in as far as the Nifty is concerned, with that about 200-point knock coming in, Nifty hovering very close to the day's low levels as well. When you talk about Sensex as well, you're not looking at a better picture by any means, because it's also the Sensex that has lost over 600 odd points. It's trading near the day's low. When you talk about the sectoral picture as well, let's take a look at some of the sectors that are on the back foot. So there's Realty that is leading losses, FMCG on the back foot. And other than that, even auto is on the back foot. What's faring well and comparatively better is IT that is remaining resilient. It's oil and gas also that is remaining resilient. With that in mind, let's quickly take a look at some of the gainers and losers. When you talk about the entire Nifty 50 pack, you in fact have something like a Bharti Airtel that is trading with a cut of about 3%, Dr. Reddy's, HDFC Life, Interglobe Aviations, after that DGCA and notice also coming in as far as this particular account is concerned, Shriram Finance, SBI Life, Nestle India, some of the other losers from within the Nifty 50 pack. And what's holding up quite well is something like a Trent, HCL Tech and Infosys, also trading with gains of about 1.5% thereabout. When you talk about something like an Apollo Hospital, that's also holding up quite well. So is something like an Eternal and some of the other counters from within the Nifty 50 pack in terms of your IT majors. So Tech Mahindra and Wipro also trading in the green, albeit a little bit on the back foot. So that's largely the kind of picture that you have as far as some of these stocks are also concerned. But with that in mind, let's take a look at commodities in terms of the week gone by and get your check going as far as some of the movements when you talk about gold and silver are concerned. Let's take a look at gold first, because you do have gold steadying very close to that $5,200 an ounce level in terms of that safe haven flow. So that's been largely the story when you talk about gold prices Yes, volatility has been the name of the game when you talk about gold and silver. But still, despite the mild pullbacks, you do have prices emerging strongly in terms of that weekly gain coming in. So that's largely the kind of picture that you have when it comes to gold. When you talk about silver as well, it's holding firm around that $88 to $90 range thereabout. Prices are stabilizing after the January rout as well, and that's something that you're looking at when you talk about silver as well. But when you talk about this volatility largely, that's also still persisting when you talk about the silver market. So largely, that's the kind of move that you have coming in as far as some of your top commodities are concerned. With that in mind, let's also connect with our guest this afternoon. Dinesh Samani, founder of Pro IntelliTrade Services, joins us on the show. Mr. Samani, a very good afternoon to you, and thank you so much for taking time out and joining us. First things first, it's been quite the volatile week. When do you see the dust settling when you talk about gold and silver? Because, you do have mild pullbacks that you've seen. Largely the kind of movement that we've seen is that every time that prices sort of move forward and in good stead, there's a pullback that you see.
Yes, definitely. We have seen a good and a decent pullback in the prices of gold and silver. We've seen the low of 43.80. From there, it is almost trading around $5,200. As far as COMEX is concerned, since last 4 weeks, COMEX gold is showing a weekly gain. So that's also a good sign. Overall, in last 8 to 10 days, what I could see is it is trading in a very narrow range of 51.30 on the downside, where it's acting as a support, whereas 52.20, it is acting as a resistance. If I look at silver, $85 was holding for quite a long time. After it crossed 85, it went up to 91.30. It's steadily trading around $90. So overall, I see a broader picture. If I look, prices of gold are more or less in a very narrow range of say $100 to $110. While silver, I look at it from $85 to $92. Unless and until prices move past that $92 mark, I don't see a major up move in silver as far as the COMEX silver is concerned.
Absolutely. But what kind of levels are you exactly looking at when you talk about the next 3 months? Is there any level that you're looking at as the key support level when you talk about silver?
Yeah, definitely. Prices have bounced back from the 74 level marks quite a bit time, but it is wrestling around $94 to $95. So overall, if I look at a broader picture, I see $100, $102 max on the upside. Downside, I see $74 should act as a baseline support.
No, absolutely. And I also wanted to put the spotlight on that entire route that we saw coming in the month of January, because we're just about wrapping this month. I wanted to get a check going for our viewers in terms of the context, in terms of the month also gone by. Now, when you talk about silver and gold prices, you did have silver hitting that $121 an ounce level, thereby also declining 31%. It was a record decline that you saw coming in. Do you think that that entire dust, that entire volatility and those concerns have largely settled? Or are you looking at a little bit of a concern there when you talk about silver?
I see more of a consolidation now. The major rally has been already passed out. If I look at January 2025, from there, in Indian terms, the prices were trading around 86,000. From there, it moved up to 4,20,000, almost 4 times in a year time. And if I look at COMEX, from $50 to $121 is almost more than double. So I think the major rally has already happened. It has taken place. The volatility will shrink days ahead, and I see more of a consolidation as far as silver prices in domestic as well as international market is concerned. In the domestic market, if I look at MCX prices, 2,92,000 would be the major resistance, 2,25,000 would be the support. I think prices should consolidate between this broader range for the next 1 or 2 months.
Absolutely. And Mr. Samani, how are you looking at the month gone by when you talk about gold as well? Let's just also put that into perspective before we move on to other commodities. Because, you did have that $5,600 an ounce level roughly being reached. After that, you did have quite some decline coming in as far as gold is concerned. Now, of course, gold is a much bigger asset in terms of market cap. So the route that you saw was a little bit limited when compared to silver. But just the fact that there was such a route when you talk about gold is quite the concern for traders as well. Do you think that that concern, that worry on the trader front has really settled in when you talk about gold as well?
As far as geopolitical tensions are concerned and the tariff are concerned, I think gold will definitely will try to move further. If I see a broader range, the $5,600, which was the high we've seen in January, from there the prices collapsed almost by $1,200 to $1,300, and it almost tested 43.80. From there, we've seen a decent pullback, and we are very just close to the all-time high of $5,600. just $400 short of that mark. So we have seen a sharp up move in gold prices compared to silver. If I look at the COMEX gold and silver ratio, which was at times 80-82 mark, it went down to 40 level mark, and then the strong pullback towards the currently 57 mark. So gold is definitely showing a strong strength compared to silver, and we expect gold prices to even move further from this level. So overall, if I see 5130 should be the good support, that buying level. Upside could be anything around 5480, 5400 levels. So I think gold would be a better bet for the next quarter compared to silver.
Absolutely, all that sparkles is going to be gold, looks like, and that's the kind of sense that I'm gathering from what you have to say also. But let's also shift focus onto oil, because when you look at the last 2 weeks thereabout, you're looking at those 7-month highs thereabout, and that consolidation really coming in. There's a lot of volatility, of course, still at play when you talk about Tehran and Washington. And there's a lot that still remains unanswered when you talk about oil prices. But given the kind of factors that we have, how are you looking at oil prices?
Mostly geopolitical tensions are the major reason for the pullback in the crude oil prices. We have seen in MCX prices were close to 5200 level marks. From there, it moved almost by 800 points to 6,000 levels as of now. If I look at the international market, from $58 to $65 is stabilizing right now, but technically the chart look bit stronger. And we have seen the higher highs and higher lows, which indicates a steady and uptrend in the crude oil prices. As far as the MCX levels are concerned, I think 5800, 5820 should act as a good support for the next 15 to 20 days, while the upside 6120 should be the major resistance level. We expect buy on dips. That could be the strategy, better strategy. Anything around 5900, 5850 should be the good buying level. 5750 should be the stop loss for the long-term levels. Upside expecting a price around 62 and 6450 levels.
Absolutely, and when you talk about copper as well, I quickly wanted to shift our attention to that before, we're done, we wrap up this conversation, because, there's also copper where you've seen quite some strength, or at least some semblance of strength coming back in terms of the entire week gone by. How are you looking at this particular development, and what kind of levels are you watching out for when you talk about copper?
Yeah, being an industrial commodity, definitely follows silver more or less. Prices have moved up quite a bit in the last 2 to 3 months. In Indian MCX market, we have seen prices move up from 1920 levels to 1480 levels. Then a sharp correction in line with the silver prices stabilizing around 1140, 1160 levels. I think the momentum is slowed down a bit for quite some time, but anything around 1180, 1200 levels, that would be a good opportunity for a long-term investor. Upside is still intact. We may expect prices to move to 1320, 1340 levels in a short span of time. 1140 should act as a major support zone.
Absolutely. And Mr. Somani, before I let you go, the conversation would be amiss if I don't ask you which commodity out of the ones that we've discussed thus far are you most bullish on? Because, of course, you do have some of the brokerages that are quite bullish, looking at somewhere close to $6,000 an ounce when it comes to gold, but don't want to be influencing your decision here. Which are the ones that you're looking at, and which is the one commodity that you're most bullish on right now?
Definitely, we've seen since last 25 years, gold has given a return of 15% on an analyst basis. So I think the best commodity to bet on is gold as of now. Gold would be a better performer in the next quarter compared to any of the commodities. My second bet would be on the crude oil prices.
All right then, thank you so much for taking time out and joining us this afternoon. So there you go, all that sparkles is gold, and that is also the word coming in from Mr. Somani in terms of the outlook going forward as well. Thank you so much for taking time out and joining us. With that in mind, let's quickly take a look at the crypto tracker for this week, because in terms of the week gone by, you do have the Bitcoin rebounding sharply towards that $70,000 zone as well. And you do have spot demand turning positive after months. In terms of critical support levels, you're looking at about $60,000 as the major level. Major resistance, of course, is capped somewhere close to 82,000, which seems like a little bit of a dream right now, because you do have that record run that is really broken when it comes to crypto. But when you look at the last 3 months, let's get a check going on that as well. You do have Bitcoin that has dropped from 89,000 to about 60,000. So you do have a volatile crash, like I mentioned, that drove that deep market correction as well. And you're looking at a bunch of things. So 60,000, in fact, is repeatedly holding as the macro floor. 82,000 is the ceiling that is blocking every single major rally. Now, what you're looking at is that volatility is also the name of the game here. In fact, since October highs, when you talk about Bitcoin, you've seen that record 126,000 level coming in before crashing. about $19 billion liquidations triggering steep October fall as well. And that's something that you're looking at when you talk about crypto. That's the entire crypto tracker for you this week. But with that in mind, let's also shift the spotlight back to gold and silver, because you do have SEBI that has changed how gold and silver ETFs are valued, moving away from London reference prices and also shifting instead to domestic spot rates. In fact, Nimit Dixit is joining us with some more details when it comes to this one. Nimit, over to you.
Hi, so yes, the SEBI has changed the way your gold and silver ETF is going to be valued starting April 1st. Now, why it's done this is because so far gold and silver in India, both physically and then of course going into the ETF, were valued based on the London system and the London rates. Now, this meant that once gold was imported to India, then a lot of premiums, taxes, customs, GST, and then the premiums charged by all the different funds meant that there was a lot of differentiation in pricing going forward, and this affected the way Indians purchased ETFs. There was no uniformity. To ensure this uniformity, SEBI has now turned to Desi valuation. It's going to anchor gold and silver ETFs according to domestic stock exchanges. Now, what this means for investors is that in the short term, you might see slight price changes, but not a lot. But in the long term, it means clear, consistent standards and prices at which you purchase gold and silver ETFs.
Absolutely, and that's something that we're looking at in terms of the latest development coming in there. Thank you so much, Nimit, for getting us all of those details. But let's also shift focus, and speaking at the post-budget webinar, you do have PM Modi emphasizing that the need to improve bond market liquidity and introduce new financial instruments in India's debt market is something that they're looking at. Adding to this, you do have PM Modi also stressing on bringing foreign investors back to the Indian market with these new reforms. Let's go across and listen in to what else the Prime Minister had to say.
साथियों, हम फॉरेन इन्वेस्टमेंट फ्रेमवर्क को और सरल कर रहे हैं। हमारा प्रयास सिस्टम को ज्यादा प्रेडिक्टेबल और इन्वेस्टर फ्रेंडली बनाने का है। हम लॉन्ग टर्म फाइनेंस को बेहतर बनाने के लिए बॉन्ड मार्केट्स को और ज्यादा सक्रिय बनाने की दिशा में भी कदम उठा रहे हैं। बॉन्ड की खरीद और बिक्री की प्रक्रिया को आसान बनाया जा रहा है। साथियों, हमें बॉन्ड मार्केट रिफॉर्म्स को लॉन्ग टर्म ग्रोथ के एनेबल्स के रूप में देखना होगा। हमें प्रिडिक्टेबिलिटी सुनिश्चित करनी होगी, लिक्विडिटी को गहरा करना होगा, नए इंस्ट्रूमेंट्स लाने होंगे और रिस्क का प्रभावी प्रबंधन करना होगा। तभी हम सस्टेन फॉरेन कैपिटल आकर्षित कर पाएंगे।
Other than that, right there is the word coming in from the Prime Minister in terms of simplifying foreign investor framework as well. But with that in mind, let's take a very quick break on that note. More news and updates on the other side.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go, grab your tickets.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide, and drive. I'm Siddharth Sharma, and I am your Automate.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक कॉन्सर्ट नहीं है. This is my life. This is my story. One night, no repeats. Book your tickets now.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What
Welcome back. Thank you so much for staying tuned into Lunchtime Trades. It's time now to get you some analysis. Then this quarter's earnings season shows a clear divergence when you talk about companies accelerating on revenue and profit growth, and those seeing multi-quarter deceleration as well. Domestic-focused businesses continue to hold firm, while export-linked sectors, now those are the ones that are feeling the impact of weak global demand, tariff-related disruptions, and even margin compression. In fact, Jasmeet is standing by with all of those details.
Well, thank you for that. If you look at the overall Q3 as a picture, it was one of the best quarters in last 12 quarters, and that's what the performance showed of most of the companies. So what we have done is we have pulled up 10 such companies, 5 which have shown a good growth in revenue on YY basis over last 4 quarters, and 5 that has shown degrowth in terms of the PAT overall on YY basis. Let's quickly go through the first set of companies that have shown a good growth. Well, first on my list is Jubilant Framework. If you look at the overall performance of this particular company, the company has seen a good growth from a negative -3%, has grown up to 43% of PAT growth on YY basis. Then we also have Polycab, we have Persistent, Max Healthcare, and Home First Finance has seen a good growth in the range of 30 to 40% in terms of the PAT on YY basis. Now, while if you look at the overall draggers, like what's helping the company grow in terms of all these companies, let's quickly understand the growth drivers. For Jubilant Pharma, we have the Domino's expansion leading the overall growth. The company has grown 10% in this quarter, and most of it is led by the Domino's expansion by the like-for-like store growth. If you look at the next aspect, that's Polycab India, the growth is led by the wire and the cable segment, and the GST boost and the government capex is driving the overall growth in the company. That's why the positive upmove in terms of the overall growth of PAT. Well, thirdly, it's Persistent Systems. The company is investing heavily into AI, and the overall AI growth is something that's helping the powering the momentum of this particular stock. While third one is Max Healthcare, while the company is seeing a growth momentum in terms of the overall unit and the brownfield ramp up, which is boosting the profitability of the company. And lastly, I have Home First Financials. For this particular company, we do see a strong disbursement and continued capex, which is helping the company grow. Now, let's quickly understand the valuations. Where does this company stand in terms of the valuation as the return potential? So Jubilant Food stands at 108 times its overall PE valuations, while the return potential is 26%. And the highest among the top 5 is Persistent, while IT has seen a huge downturn in the month of February, down about 20% and that's why we see the return potential Persistent standing at 40%. Now, in terms of the overall valuations of Home First, it stands at 4.2. This is book to price ratio of the company. Now, let's quickly understand the next set of 5 companies which seen a degrowth in terms of overall PAT performance. We have Concord, which has grown negatively in this particular quarter, while we have Concord Biotech, Kotak Mahindra, Croptom, and as well Axis Bank, which has seen a negative growth. So they have moved in from a positive up move in PAT to a negative in the current quarter. Now, what has led to the impact in terms of profitability and where the company is facing the issue? Let's quickly understand that. For something like a Concord, the overall export-import softness and the global uncertainty is something that's dragging the company's PAT down, and even the high depreciation cost is impacting the company. While secondly, if you look at the other company, we also have, which is Concord Biotech, while the US tariff has hit all the healthcare and the IT companies, and that's what dragging this particular company as well. The EU supply issues and as well as the overall tender delays in terms of the trade ramp up. Well, thirdly, we also have our next company, that's Kotak Mahindra Bank, what we see is here the low-cost deposit pressure and the liquidity volatility is something that's dragging the company's performance. While we also have the next company, which speaks about the overall Crompton Greaves, what we see is the overall commodity price inflation where the margins are reducing and even the PAT is getting impacted. While lastly, we also have one more banking company, that's Axis Bank, where we see the overall wholesale lead is taking the mix and over the CASA ratio is impacting the PAT. And that's why we see a downtick. Now, lastly, let's quickly understand the valuations of these companies and what's the return potential of all of them. If we look at the return potential, the highest in the company is Crompton Greaves, where it's 27.8%. These are the companies which have seen a negative growth in the PAT over the last 4 quarters. While in terms of valuations, they all stand at mid-20 to mid-30 valuations. And for bank, we have taken price to book, where the Axis stands at 2.9, which is very cheap compared to the Kotak Mahindra at 11.48%. So all in all, we do see a mixed set of numbers here, but Q3 was a strong upbeat for all the companies.
No, absolutely, and thank you so much, Jasmeet, for getting us that roundup. In terms of the earnings story that you're looking at here, in terms of the accelerators and the decelerators here, but let's also shift focus onto Uber then, that is accelerating into autonomy. From self-driving vehicles in Dubai to electric air taxis preparing for launch. You do have NDTV's executive editor, Auto, Siddharth Sharma, checking out how the company is really shaping the next wave of mobility.
What we witnessed here in Dubai was a test flight of that. That is a vertical takeoff aircraft that will be used as an air taxi in Dubai to cut down commute times that take hours into just mere minutes. The partnership with Uber will define the next step of mobility, and prices, as they say, will be very similar to what you pay on Uber Black.
Dubai will be among the first global markets expected to see a commercial rollout of Joby's air taxi in partnership with Uber.
Joby Aviation is a California-based aviation company that has built this. This is a vertical takeoff aircraft that's beginning passenger operations later in the year 2026.
Joby's aircraft can carry 4 passengers and a pilot, travel up to 160 kilometers and reach speeds up to 322 kilometers per hour. Flown by a certified commercial pilot, it offers a remarkable way to travel above the city and experience the next generation of flight. Joby's aircraft uses 6 tilting propellers to take off vertically before transitioning into a forward flight. In 2021, Joby acquired Uber's Elevate division, and in 2025, Joby acquired Blade's passenger businesses, which flew more than 50,000 passengers in the year 2024.
So we're launching here in Dubai in 2026. We'll be in the US next. We've got New York, we've got LA, but we're looking at London and Japan, and of course we have India, and just the amazing opportunities there as well. So we spent 15 years designing this aircraft. A lot of it is the very first principles around safety. You'll notice that it's got 6 different propulsion units. If you compare that to a helicopter, you know it's got 1 rotor, right? So this has a lot of redundancy, far more than others, so that when we launch later this year, people can be assured it's safe.
Being an all-electric aviation vehicle, the rotors on this one are also engineered to be super duper silent. So this is very non-invasive. The decibel levels are also super low. And when they fly all over the city in the future, you will not hear them that loud in the skies.
Uber and Joby plan to integrate air taxi mobility services directly into the Uber app, allowing users to book electric air taxi rides seamlessly in the future.
As EV mobility expands from roads to the sky, the Uber model is also evolving and having those multiple layers when it comes to mobility and transportation in the future.
All right, and that's all that we could pack for you on this edition of Lunchtime Trades. From me, Shreyanshi Singh, as well as the entire team that put this show together. Thank you so much for tuning in.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक concept नहीं है. This is my life. This is my story. One night, no repeats. Book your tickets now.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Good afternoon, you're watching Small Cap Buzzers on NDTV Profit with me Somit Sarkar and my co-anchor Mahima. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade. So what's on the show today? Firstly, we'll be speaking with the management of Artemis Hospital. Now, the company plans to scale up their capacity by nearly 3.5 times over the next 4 to 5 years. So what's the plan here? How are they planning to do this? And what will be the growth that we could see going forward is something that we'll be discussing with the management on the show today. Secondly, it's Fusion Finance. Now, that stock is down nearly 6.5 to 7% in trade, and this is largely post the Bihar MFI bill was passed yesterday. Now, Bihar accounts for nearly 17% of the company's asset under management, and this is having a sentimentally negative impact on not only Fusion MFI but also other microfinance companies. But Fusion Finance is something that we'll be discussing on the show today. Zagle e-mobility. Now, that stock has been gaining for the 4th consecutive session. It's up nearly 30% in the last 4 sessions. What could be the potential reason behind this kind of a surge coming in for Zagle e-mobility, despite the fact that the broader market continues to remain weak, is something that we'll discuss on the show. Then it's an interesting company named Sectoral Biochemical. Now, the stock has jumped up nearly 3.7 times in the month of February. The stock relisted in February 9, and since then we have seen a surge of nearly 3.7 times. But what does the company do? What's their business is something that we'll discuss on the show. And lastly, when it comes to Go Fashion, that stock had hit a 52-week low in market in intraday basis today. And if you look at the last 7 trading sessions, the stock has declined in nearly 6 of them. It has declined nearly 15% in the last 7 trading sessions. So that's also something that we'll discuss on the show. Firstly, if you look at the markets now, the Nifty is down nearly 200 points in trade. Very weak trading session is something that we are seeing. It's trading near to 25,300 level, which is below its all key day moving averages, below its 50, 100 and 200 moving averages. Apart from that, if you look at sectoral wise, other than Nifty, IT among the major indices. All other sectoral indices continue to trade in red. As you can see, Nifty Media and Nifty IT are the only two major sectoral indices which are trading in green. Apart from that, Nifty Real Estate, Financial Service, FMCG, all down more than 1% in trade. Even when it comes to the Nifty Small Cap Index, it's down nearly 1%. But what are the specific counters that have been buzzing in trade today, Mahima?
Somit, I'll start with some positivity at least. I'll start with what's doing well in the broader end of spectrum, that is the small cap space. Of course, the index is down 0.85%, but defying that, there is Foseco, which is up almost 12%, followed by something like an Awadh Sugar, which is doing fairly well, up 8% as well. Godavari Bio Finery is also doing fairly well, up almost 7%. BL Kashyap, Camlin Fine is also doing fairly well. All of these counters, in fact, up in that range of 6%. Yasho Industries, Dhampur Sugar, as well as Rajeshri Sugar, all of these counters in that range of 5% is the kind of gains that they're seeing. In fact, sugar as a pack is doing fairly well. There's Bajaj Hindustan Sugar also which is doing fairly well, up 4.7%. Magad Sugar as well doing fairly well. Polypex Corp, yet another day of good gains coming in for this particular counter. But on the flip side, counters that are under pressure today, Fino Payments is one of them, down by about 9.8%. Renaissance Global now today is seeing profit booking down almost 16%. Jindal Poly Invest is also down around 8%. You have something like a Fusion Microfinance, Utkarsh Small Finance Bank, as Somit was earlier mentioning, seeing downtick of around 5% each. Sadbhav Engineering is also down by about 5%. BLSE Services is also down by about 5%. DE Development is also seeing a downtick of around 4%. Dishman Carbogen, Fedbank, Shopstop are some of the other names that are under pressure, down by about 4%. So these are some of the names in the small cap space that are under pressure, and that's where the broader end of spectrum is concerned. But as promised, let's welcome in Devlina Chakravarti, the Managing Director of Artemis Hospitals Group, joining us now. Devlina, thank you so much for taking out the time. My first question to you is, I was just going through, the meet takeaways. You are targeting to break into top 5 Delhi NCR areas. Just want to understand as to what is the kind of target that you're looking at, what is the kind of bed capacity addition that you're aiming there, and then from there on, what is the kind of revenue run rate that you're expecting?
So thank you, Mahima, and thank you for this opportunity. So as you are aware that we are at an inflection point when we are looking to grow to becoming the top 5 players in Delhi NCR. We are confined to this region, and we are looking at a whole range of green and brownfield projects. And we have a lot of headroom for debt, but more importantly, we have also been given a nod by the board for a 700 crore raise, which hopefully by May, June, we should be in a position to close, both in terms of QIPs and prefs. So this is, and as we speak, we have a large funnel of good hospitals in the green and brownfield zone, which is going to be price effective, because I don't believe in paying too much to acquire an asset. And as you are aware, we have just announced our South Delhi assets, which is the Vimhans Artemis piece, with 650 beds getting operational by 2029. We have one asset outside of Delhi NCR, which is Raipur, which is another 300 beds, which is coming out to be becoming operational by May of this year.
Right.
Apart from that, we are looking at bed strength of 2,300, if not 2,500 plus in the next 3 years, with the finalization of some of the assets.
Got it. Can you help me explain as to how the bifurcation between greenfield and brownfield is going to be like for you from here on for the next, let's say, 1 or 2 odd years?
So it could be for the next, it depends on the opportunity as we speak and the funnel that we are looking at. There are, 50% green and brownfield. So we will come back to you with more details. Definitely, we are more inclined towards a good brownfield asset, which is cost effective. But then there are very promising greenfield projects where the price of land is actually a steal in areas where there are no big players in Delhi NCR. So we are going to be gauging it very carefully, and we will come back to you once these assets are finalized and are pretty much under our belt.
You're planning to increase your bed capacity to 2,500, I believe, over the next 4 to 5 years. Currently, it's around 700. So that's a jump of nearly 3.5 times. What is the kind of capital expenditure that you envisage that will that the company will incur, be it acquisition, be it greenfield, say over the next 4 to 5 years?
So, our organic growth, our 700 beds in Gurgaon will go up to 1,000 beds, out of which 100 beds we have gotten it free because of a platinum rating that we have gotten from the environment. Balance 200 is through the extra FAR that we are buying. And the additional 1,500 beds in Delhi NCR, the cost per bed that I look at an average is 70 to 80 lakhs per bed, which is far lower than what today a bed is for. So it is, so there are trust lands, there are areas where a distress asset sale or a distress sale of land. We are looking at all of that to acquire, and the numbers would be typically around 70 to 80 lakhs per bed.
And the overall capex would be around?
So the overall capex would be in the range of almost 1,800 to 2,000 crores, which is going to be between debt and equity.
And equity, which means
as you see, all these assets are phased for the next 3 years, and on the books, the company has cash in the range of every year of 175 to 200 crores. So that will also, through internal accruals, debt, and through equity, is what we are looking at.
Equity means you will be raising fund. Any ballpark number that you could share with us?
So I did mention that we have got a nod from the board for a 700 crore raise through QIP and PREF. And we will closer to the date decide how much of this we actually require and how much could we service it through the debt and our internal accruals.
Devleena, what is the kind of RPOP that you are aiming at, let's say 2 years down the line? How is that going to progress? What's the kind of growth that you're aiming at?
So, as you are aware, though we are not the most expensive, we are actually very moderately priced, but we lead the RPOP numbers in Delhi and NCR at 82,000-83,000 is our RPOP. And that is also because of a large number of international patients that we service. 30% of our revenues are through the international patients. And as we speak, the numbers are only growing up with the push on medical tourism and the countries adding on to our list every year. That number we see continuously growing. So going ahead in the next 2 to 3 years, all I can say is we will be one of the leaders in the RPOP numbers, because we will continue our growth with efficiency and with quick turnaround of the beds and a sizable number of high-end surgeries and international patients. So that will be the drivers for a continuously growing RPOP.
Any ballpark figure that you would like to give us for your RPOP?
Well, that's hard to say currently, but definitely our current range will be maintained, if not better. We have shown a 4 to 5% increase in our RPOP year on year, and that will be our endeavor.
Right. The Raipur facility, I believe it has around 300 bed capacity. By when will this be commissioned?
This is getting commissioned in May of this year, 2026.
And what could be the incremental top line that you are expecting when this gets commissioned, say in the third quarter?
So we are, first year, we are looking at an incremental top line of 90 to 100 crores in 11 months. I'm not talking about, because we are going to get operational in May. So it will be net 11 months. So we're looking at 90 to 100 crores of top line in 11 months.
Devleena, you are, for your new hospitals, you're targeting an ROC of around 18 to 20%. What is the occupancy going to look like?
See, currently, of course, our occupancy here is close to 70%. But, we are looking at a very realistic to a slight pessimistic occupancy of around 62 to 63% when we talk about the ROC. But internally, we would like to better it.
Just Now, on a broader picture, we have got all the minor details given the fact that you're looking to increase your beds, you're expecting ARPOB to be on the better side. Overall, if you look at the revenue CAGR, say for the next 4 to 5 years, what is the internal target that the company is working with? At what rate will your revenue grow?
So the revenue year on year, what we have shown is a growth of between 15 to 18% a year on year growth on the revenue. And it will only with acquisition of brownfield and when the top line just they get merged. So we are hopeful to move in that direction and better it in the next 3 years. So at least 15% is minimum, and depending on the closure of assets, it would go anywhere between, it could be anywhere between 15 to 18% on a year-on-year basis.
Okay, all right. Devlina, thank you so much for helping us, answer all those queries and, of course, taking out the time. We look forward to speaking to you once the Q4 numbers are out.
Thank you.
All right.
Thank you.
All right. So that was the management of Artemis, of course. With that, let's also welcome in Gaurang Shah, Senior Vice President at Geojit Investments, joining us now. Gaurang, a very good afternoon to you. Your quick view on Artemis and, of course, the entire hospital space.
Thank you so much for having me on the show, Mahima. A small disclosure that all recommendations that I'll be sharing with you this afternoon on your show, they are part of our fundamental research team recommendations from a long-term point of view. Our company, Geojit or I, we do not have any kind of personal investments, no financial interest, no conflict of interest, but we give advice to our clients on similar lines. They might have their investment interest. So we don't have coverage standalone on Artemis, but we are positive on the sector. There are 3 names that we are positive on in this healthcare. And let me stretch this a little bit forward. In this budget, the Honorable Finance Minister spoke about medical tourism. Last year in the budget as well, Honorable Finance Minister Srimati Nirmala Sitharamanji did refer to medical tourism. Most of the frontline or strong companies with strong balance sheets in the healthcare sector are going through a lot of capex. Either they are expanding their existing facilities or they are taking over smaller players with weak balance sheet. So, and as you were talking to the management of Artemis and the verbatim that the management has given, the future looks very, very strong in terms of scalability and service. We are positive on Apollo Hospital, we are positive on Fortis Healthcare and Max Healthcare. These are the 3 names that we are positive on. And my sense is that not only in India, but I think people traveling from abroad for medical treatment in India is going to go up significantly, and that is going to open up a lot of opportunity for healthcare sector.
Right. Shifting focus to the F&O market, the overall market continues to remain on the weaker side, but let's get in Sharat to understand how is the F&O setup looking like.
All right, since the last time we had come at 1045, the technicals which were there below those key moving averages, that still holds a little bit of respite for Infosys and Trend, but largely it's a sea of red coming in. There's no major support coming in from banks or even Reliance, and also putting the pressure on the Sensex. Let's look at BankX, and the story remains the same. There's no major contribution happening. All 3 major banks are in the red. Stock specific moves, let's see what's there. Long build up, Dixon Tech and Oil India. That's a good move coming in, but Dixon Tech interestingly above the 10,500 mark. Let's look at the short covering candidates, and this includes Kalyan Jewellers and KEI Industries. Small spurts, narrow range, and long unwinding also the story remains the same. But short build up, of course, the story is on the important side. Bandhan Bank, that's down 3.5%. The Bihar MFI impact is definitely coming in this angle also. And the capital market plays, that's what we had stated in the morning also. Angel One also down almost 4%. So, of course, more shorts actions are there, but largely the sentiment is negative in the F&O space.
Rightly said that the Bihar MFI has been impacting multiple banks and NBFCs, and one counter that stands to get impacted is Fusion Microfinance. The stock is down, or was at least down nearly 6 to 7% in trade. So what has happened here is that Bihar Microfinance Institutional Bill 2026 has been passed by the Bihar Assembly. Now, legislation specifically targets individuals, partnership firms, companies, societies, trusts, which are actively involved in providing microloans and small loans within the state of Bihar. Now, to avoid excessive over-leveraging, it states that not more than 2 MFI shall lend to the same borrower. And do remember that Bihar is one of the largest, or is the largest state when it comes to the MFI industry. The total Bihar AUM stands at close to 45,500 crore rupees. Now, this was as per the second quarter of FY26 data, which is the latest data which is available, and that constituted nearly 16% of the overall MFI AUM. So, one of the largest state when it comes to the MFI industry, and hence this impact that is coming in. Now, if you look at companies that have, or banks and NBFCs that have exposure to Bihar, Utkarsh Small Finance Bank has the largest exposure. 45% of its AUM is exposed to the state of Bihar. IFL 21%, L&T Finance 17%. Fusion MFI has an exposure of 16.7%. Asirvad Microfinance, which is a subsidiary of Manappuram, that has an exposure of 13%. Ujjivan Small Finance Bank 11% exposure. Satin Credit Care, AU Small Finance Bank, and Credit Access Grameen have an exposure of anywhere between 5 to 9%. But Fusion Finance, having an exposure of 17%, is down nearly 6% in trade. But what brokerages are saying, now Citi is of the view that this bill is explicitly exempting the lending operations of bank and NBFC. So there won't be any direct impact on banks and NBFCs of this bill, but there could be an indirect impact. And what they're saying here is that multiple lending or adverse shift in repayment behavior stemming from cultural influences could have an indirect ramification on banks and NBFCs, and hence this sentimentally negative impact coming in on the entire NBFC and the banking space. When it comes to Morgan Stanley, they believe that the MFI industry has seen a recovery in asset quality and gradual pickup in disbursements in recent quarter, and this development could create an overhang on investor sentiment towards the industry, if not any actual impact. So it's very clear that there won't be much of a financial impact. It's just sentimentally negative, and hence we are seeing this downtick in all the NBFCs and the banking name. Gaurang, getting you on this, how are you looking at this bill that has been passed by the Bihar government? Do you expect any major impact to come in disbursements for these NBFCs going forward?
So, again, this is, we need a little bit more clarity, isn't it? Because whether the regulation that has been passed in the parliament or by the state government is restricted to the unorganized sector. And, Bihar does have a well-known fact that the way the procedures are adopted by lenders of unorganized sector when it comes to recovery, they are very, very harsh. We had one instance earlier also with one of the listed entities. Out of the names that you flashed on your screen, there are 3 names on which we have a fundamental coverage: L&T Finance, AU Small Finance, and Credit Access Grameen. And I think all these 3 companies have a relatively lower exposure to the state of Bihar when it comes to their loan book. Having said that, all those companies which are having higher exposure, with a caveat that we need clarity whether this new regulation is going to take each and every lender into consideration and limit it, or whether there is going to be any specific in terms of listed entities and unorganized players. And when it comes to unorganized sector lenders, we all know some of the treatments that they use for recovery is very, very harsh. There are cases of, suicide, etc., etc. We've read about such reports in various media. So I think it was an appropriate step. My only thing is we need clarity whether organized players and unorganized players, which one does it have an impact on?
All right, Gaurang, thank you so much for that view, of course. But the other stock that we're putting spotlight on is Zagle e-mobility. Now, the stock has continuously gained in the past 4 sessions and has gained almost 30%. We have Jasmeet joining us to give us more details as to, of course, what the company does and what is going on. Jasmeet?
Well, Mahima, thank you for that. As rightly it is, the stock is in focus on the back of the recent manufacturing unit news. Now, let's quickly understand about the company's stock performance. If we look at the stock got listed in October last year at a premium of 11%, while since then the stock has surged nearly 89%, and currently the stock is down 45% from its 52-week high. So we see a lot of volatility coming in the stock performance. Now, in terms of the last 4 sessions, as rightly said, it's up 30% in trade, and today also it's at 10% high. Now, in terms of what the company does, well, company operates in the business of manufacturing and assembling of the EV vehicles. They produce 2-wheeler and 3-wheeler EV vehicles. And among the market players of Ola and Ather, this is the only company that's a profit making so far. Now, in terms of the other outliners, we see that the company has achieved 3 times its growth when you look at the 25 figures, reaching at roughly compounded growth of 84 times. Now, talking about the recent news, well, the company announced a two-wheeler and three-wheeler manufacturing facility in Odisha, given the demand they see in Odisha market. Well, the company also remains positive about the expansion in West Bengal region, given the new facility will help them cater in the eastern part of India. Now, in terms of what this facility will help the company to, it will reduce the logistical cost, also increase the span and improve the supply chain efficiency. Lastly, if we look at the margin profile of the company has seen a good expansion of margin. In 23-22, they had a margin of 8% and in the recent year, the margin moved up to 12%. So we see a margin jump of 400 basis points over last 2.5-3 years, and the company is well profitable as well.
Okay, all right. So that's Jasmeet, of course. Thank you so much for that. Gaurang, any view on this particular counter?
Well, Mahima, we don't cover it, but a word of caution that when it moves circuit to circuit, one needs to be a little bit careful in terms of what the delivery is and what the valuations are.
Gaurang, you would be quite amused about the next counter that we'll be discussing today. And the company name is Citurgia Biochemical. I believe that the company got relisted back on February 9th on the stock exchange. It's only BSE listed company. And since then, the share prices have moved 3.7 times. Now we have Varsha joining us. In fact, she was the one who pointed out that the company has actually no business, and despite that, it has moved up 3.7 times. Let's get in Varsha with all the details.
Well, you know, in the last 12 years, the company has no revenue but expenses, and hence have shown losses in the last 12 years. And there's a reason for that, and also there's a reason why you're seeing that buzz in the stock. Well, starting with, this company manufactures citric acid, which are used in your food, drugs, and soft drinks. Now, the key observation, because this is where the important is, one is the company is listed and active, but operational revenue, if you see, is nil. Even the company is in losses since last 12 years. Market cap is disproportionately high versus the operational activity. Now, historically, this company has been a citric acid producer, but recent filings shows almost the operating losses that the company has been through. So, zero revenue in the last 12 years, negative EBITDA, and losses in the last 12 years. Now, even for Q3 FY26 numbers also, you see company has zero revenue. Now, why? Because the operations continued to be suspended throughout the year for one of their facilities, and there was a lockout declared at Rishikesh factory with effect from September 2003. I mean, since then, the company has not done any business, and hence no revenue and only losses that the company is going through. Now, still, why the stock is in focus now? Because if you see, the most shares, almost 99% of the holding is by promoter, which leaves very few shares for the public shareholding, hence no free float, and hence you are seeing there's a huge demand and no supply, and hence the stock is up. Now, the low float stocks, if you see, easily hit upper circuit. So the kind of rally that you're seeing is not because of fundamentals, but because of the no free float available, and hence the stock is up. But there's no business into this company since 2003, which has been stated in the annual reports since last many years.
I'm pretty sure you must not be tracking this company, but what would be your advice to investors in such situation? Quickly, if you could give us your view.
Well, I would not even touch the balance sheet, honestly, to be very honest with you. And as Varsha was saying, and I was reading on the slides that you were flashing on your screen, 29 lakh is the loss on the balance sheet. Virtually nothing there. And I think Varsha mentioned that promoters are holding 90% plus. I think these are multiple red flags. And I would also say that this is a classic case of pump and dump, given the low free float. Honestly, there is nothing in the fundamentals. Then why on earth is the stock rallying? Purely because of the cornering of shares by the promoters. And as and when, according to their whims and fancies, they would take it upper circuit, they would take it lower circuit. And in this particular situation, you will have some very naive, gullible traders who would eventually have the courage to possibly do something in this counter. I think it is, it'll be really, we will really appreciate if the authorities and the regulators pull up these kind of companies and promoters who are doing such mischief in the market, to be very honest.
Makes complete sense. Thank you so much, in fact, for that view coming in. And of course, taking out the time and helping us with all those views on the small cap stocks that we discussed today. But with that, viewers, completely out of time on this edition of Small Cap Buzzers. But do stay tuned. Ask Profit up next.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
First India tour in your city. Rock on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक कॉन्सेप्ट नहीं है. This is my life. This is my story. One night, no repeats. Book your tickets now.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories.
You're watching Ask Profit, the afternoon edition here at NDTV Profit. I'm Mahima Vachajani and with me is Somit Sarkar. But before we move on to all the queries that you have for us on the show today, let's take a quick look as to how the markets are doing. The Nifty 50 is down by about 0.6%, 150 points of a downtick is what we're seeing. Since we started, the small cap buzzers, it was down by about 200 odd points, so 50 points of recovery is what we're seeing on the Nifty. The Bank Nifty also trading around 0.5 odd percent lower at that 60,800 odd levels. Let's try to pull up the heat map to see as to what are the counters that are buzzing in trade. You have HDFC Life now losing the most ground, 2.5% of a downtick. Bharti Airtel, followed by Bharti Airtel, down 2.5% as well. And Interglobe Aviation and Dr. Reddy's are the other two counters that are down by about 2% each. Something like a Shriram Finance, SBI Life, Bajaj Finserv, Kotak Mahindra Bank, Nestle, Tata Consumer are also under pressure, down by about 1% each. But on the flip side, Infosys now is topping that chart, up almost 2%, followed by Trent, HCL Tech, Apollo Hospitals, Eternal, Geo Finance. So IT names as well as something like a Trent and Eternal are doing fairly well. That's as far as the Nifty 50 is concerned. Let's try to pull up the sectoral heat map. Largely, except for the Nifty IT and Nifty Media, now I think we're seeing Nifty Consumer Durable as well as in the green, but energy has also picked up 0.3 odd percent, and PSU banks almost flat, but those are the counters in the green. But Realty is losing ground for sure, down 1.6%, followed by FMCG, which is also down by about 1%. Defense seeing profit booking, and Nifty Auto also down by about 1 odd percent. Let's quickly pull up the mid cap 150 and the small cap 250. The broad end of spectrum also equally under pressure. The mid cap 50 right now is down by about 0.5 odd percent. The small cap 250 down by about 0.6 odd percent. So that's with regards to where the markets go. With that, let's also welcome in our guest for the day. We're joined by Mr. Chokalingam, who is the founder and MD of Economics Research, and we'll also shortly be joined by Ruchit Jain, who's the Vice President, Equity Technical Research Wealth Management at Motilal Oswal. Mr. Chokalingam, the first question that we have is from Anuj, who is writing us from New Delhi, asking about Afcons. He's bought 395 odd shares at the levels of 380. He wants to know your view on this one.
Yeah, after a massive fall, one can consider, but however, I want to caution that, these kind of businesses are going through a difficult time in the stock market, but fundamentally quite decent. The P is only around 18 and stock also corrected a lot. So considering its recent track record, one can buy for medium to long term.
Next query is coming in from Sriram Raghuraman from Chennai. He's holding 90 shares of Max Healthcare at an average price of 38 rupees. He wants to know what's the view for the next 1 year on this counter. I doubt whether 38 rupees would be right, or he's, I guess he means Max India. I'm not sure about the price, but he wants to know the next 1 year outlook when it comes to stock Max Healthcare. Mr. Chokalingam, what would be your view on Max Health?
See, Max Health, whether you take a P ratio or you take a enterprise value per bed, it is extraordinarily overvalued. But then, it leads in the pack. It has got a good momentum. And most important fundamental development is that they have got a very aggressive plan to double the number of beds. So with a little risk, I would say it's a hold for medium to long term.
Okay, all right. So that's the view coming in. We've got the next question, which is coming in from Madesh, who's writing us from Tamil Nadu, wants to know if this is the right time to buy Wipro. Ruchit, hi, a very good afternoon to you. Would you recommend that?
Yeah, hi, very good afternoon. Well, I would still recommend to keep a wait and watch approach. First of all, the IT sector as a whole has not shown any signs of bottoming. And within the sector also, Wipro has been one of the stock which had shown underperformance recently. So I think still no signs of bottoming out. So avoid bottom fishing over here.
The next or our first caller query for the second half of Ask Profit is coming in from Pune. Mr. Gupta, you can go ahead and ask your query.
Yes, please. Hello.
Yes, Mr. Gupta, we can hear you. Please ask your query.
Sir, I am holding 1,440 shares of Eicher Motors.
Right.
1440.
And you want to continue to holding this counter? You want to exit? You want to book profits? What is it that you want?
I can continue holding. And price is 150 rupees approximately.
Okay, so you have been holding it for a very long time. Mr. Chokalingam, should he continue to hold these shares or book profit? He's sitting on a handsome gains of more than 1 crore.
Still one can hold long-term investors because, there is a structural shift towards high end of the bikes in recent years. And Eicher Motor is a beneficiary, and performance also quite consistent and steady growth is maintained whether in a quarterly basis or annual basis. Slightly stretched trailing PE around 40, but then I think it deserves that kind of premium. So I would give a hold recommendation.
Okay, all right. So hold on Eicher Motors is the view that Mr. Chokalingam has. The next question is also for you, Mr. Chokalingam. This is coming in from Satyan. He's asking if he should shift from Shalby Hospital to Artemis Medical. We just spoke to the management, in fact. Would that be something that you would recommend?
I am not in a position to talk on these two stocks because of my personal, the insider trading policy.
Okay, and so then, overall perspective on, the hotel space, if you can give any perspective.
See, hospital, I am extremely bullish because hospital sector is the one which attracted more than 50% of the FDI in the recent years and continue to command a lot of, inflows. Second, a lot of acquisitions are also continuously happening in the hospital space. So, and also it is not going to be affected by AI. It's a domestic demand driven. So I am very, very optimistic on quality, small and mid-sized hospital stocks.
The next query is coming in from Ashish from Orissa. He's holding 300 shares of DCB Bank bought at a price of 116. He's currently sitting on a profit. He wants to know whether should he increase his position on this counter or continue to hold this for the next 2 years. Mr. Chokalingam, any view on DCB Bank?
See, it is trading at almost one time price to book value, so one can hold. because most banks are trading, above one-time book value, except central bank. Otherwise, 1.1 to 1.2 is the lowest range. So at least 20% upside is possible from the current price. So I would give hold and even buy on decline DCB Bank.
Okay, all right. So that's the view on DCB Bank. But viewers who are tuning in, you can give us a call on the number that's flashing on your screen up there, and of course also WhatsApp us your queries. The next question is from Srujana, who's writing us from Hyderabad, asking about Astra Microwave. 40 is the quantity and 1015 is the average price. She's saying that she had loss, but it's recovered in the past 1 week. Should I hold, sell, or average? Ruchit, what would you recommend?
I would recommend to continue to hold on the existing positions. In the recent correction, the stock has formed a good support base around 860 to 880 zone. And till that is intact, the downside now seems to be very limited from here on. So hold your existing positions and wait for a breakout above 1020. If once that is taken out, then you can expect a good short-term momentum in the stock.
The next query is coming in from Afreen from Hyderabad. She wants to know whether is it a good time to buy Rupa clothing for the next for long term. Mr. Chokhalingam, any view on this?
One can hold periodically. It gives a decent return. So current price, one can hold it for medium to long term.
Okay, all right. So that's the view on Rupa & Co. The next question that we have is on Maharashtra Bank. Manul from Delhi is asking this question. He wants to know if there is any chance that this will go to around 66 in a month, and current buying price, does it make sense? Ruchit, your view?
Well, the overall trend for the stock looks quite positive for Bank of Maharashtra. Of late, we have seen good volume started picking up in the stock. Now, the 20-day MA is around 69 rupees. So there's a major support on any kind of dips that should act now. So I think if you have existing long positions, you should hold on your and continue to ride this trend.
The next query is coming in from Sridhar, and he wants to know which stock is best to buy, MCX or Karur Vysya Bank. Mr. Chokhalingam, fundamentally, which one would be better, MCX or Karur Vysya Bank?
Which is the first bank you mentioned?
MCX. It's MCX or a bank, that is Karur Vysya Bank.
Oh, a very unique comparison, commodity exchange with the bank. I would prefer Punjab National Bank if somebody wants to make money in the banking space. Commodity exchange at this price, I am not very comfortable. So Punjab National Bank is giving me a lot of confidence.
All right, we've got our next caller. Meghna is calling us from Bengaluru. Meghna, hi, a very good afternoon to you. What's your query about?
Good afternoon. I'm holding Kim's shares, 50 shares at the rate of 707.
Okay.
So this is for 1 year time frame. So I want to know if I can continue in the same stock or can shift to any other healthcare stocks or hospital stocks.
Okay, got it, Meghna. I'll take this up with Ruchit. Ruchit, from a 1 year perspective, is this stock looking attractive on the charts or any other counter in this space that you are liking currently?
Yeah, I think overall hospital space is looking positive, where we can expect some good returns over the next 6 to 12 months period. And within the entire hospital space, I think two stocks are looking good. One is Apollo Hospitals and second is KIMS itself. So I think can continue to hold on if we have a 12-month time horizon. The sectoral move should be positive from here on, and Apollo and KIMS, these are two stocks where technical structures are looking quite bullish.
The next query is coming in from Savio. He's a long-term investor, can hold for the next 1 to 2 years. He wants to know whether at the current level, is Praj Industries a good buy? Mr. Chokhalingam, any view on Praj Industries?
Tactically, yes. Fundamentally, even after the crash, it's slightly stretched in valuation. And I also have a extraordinary belief that once some resolution found for political conflict in Iran, possibly in Ukraine also, the oil price will crash in a very big way. So medium to long term, it's quite risky for Praj industry at current valuation. So tactically in the short term, yes, one can get 10-15% return.
Okay, Satish Kumar is asking the next question. He's holding 25 shares of Gokuldas at the levels of 815. Should I hold, average or exit at a loss? Ruchit, your view on the charts?
I think overall it seems to be into a consolidation phase going ahead. Overall, the textile space did see some news-based moves, but the follow-up move is still missing over there. I think some more time-wise correction or consolidation can be expected in the near term. 550, 540 is a good support zone for the stock, whereas 850 is a resistance zone. So look to exit on pullback moves rather than exiting at current levels, because we have already seen a bit of correction over last few days. So if you get any pullback move again towards 800 and above, then take a review to exit over there.
The next query is coming in from Kalpana, and it's on Aditya Birla Real Estate. Mr. Chokhalingam, she's holding around 200 shares, and she's saying that she doesn't find any strength in the balance sheet, given the fact that the company's debt has been increasing and they have been incurring losses. So should she still continue to hold this counter or exit?
One can, sell this. I would prefer some player like Ovra Realty or even DLF to AB Real Estate.
The next question is from Rajesh, who is writing us from Noida, asking about Vikran Engineering. He wants to know if we can average out from a long-term perspective. Mr. Chokhalingam, your view.
I have not studied this in detail, so I'm not able to give any view.
Ruchit, any view on this one?
A clear low top, low bottom structure since some time, and no signs of trend reversals. The pullback moves which come in between does not witness any kind of good volume action. So I would suggest to avoid.
Okay.
Right. We have a live caller coming in.
Mansingh is calling.
Mansingh is calling in. Mansingh, you can go ahead and ask your query.
Good afternoon, sir. I'm holding control print shares.
Okay.
60 shares at average price 780.
Okay.
Should I continue to stay invested in this counter for 2 to 3 years?
And you can stay invested for long term?
Yes, sir. I can stay.
Okay.
If you want to shift, if I wish to, there is need to shift, can I shift to KP Energy Limited?
Okay, Mr. Chokhalingam, any view on control print? Should Mr. Mansingh continue to hold this counter for long term?
One can. Its only problem is top line is growing, but margin under pressure. But it has got a good track record in the past, so one can continue to hold control print.
Okay, all right. The next one is from Navneet, who's writing us from Hyderabad, asking about Allied Blenders. He's got 8 shares at the levels of 653. Hold or sell is his question. Ruchit, your view on the charts?
I would recommend to exit low top, low bottom structure in the recent pullback move. The 50 DMA is acted as a resistance. So technical structure does not look to be that positive. So can take an exit.
The next query that is coming in from Deepak from Bangalore, and it's on Indraprastha Medical Corp. He's holding 35 shares at a price of 600 rupees, currently sitting on a loss of 6,000. Should he continue to hold this for the next 1 to 2 years? Mr. Chokhalingam, have you tracked this counter, Indraprastha Medical Corp? I believe it's a subsidiary of Apollo Hospitals.
Yeah, I have tracked it for more than 1 or 2 decades. Apollo has some significant stake in it, joint venture with the government. One can hold, particularly after the massive fall, because it's a continuously a growth stock, and PE also very comfortable now. As I mentioned, positive on hospital stock, so one can hold Indraprastha Medical.
Okay. All right. The next question is from Umesh, who's writing us from Delhi. He says he's bought Bharti Airtel at the levels of 1934. Is it a good hold for the next 1 year? Ruchit, on the charts?
Recently, we have seen some correction. So it seems that stock would go into some sort of consolidation phase or time-based correction. I think if you have a short to medium-term perspective, then I think the stock could see some sideways movement only. So I would recommend, if you see any kind of pullback moves again towards the 2000 mark, then you can look to take an exit.
Where is coming in from Subramaniam from Navi Mumbai. He wants to know whether can he invest in Tata Chemicals. Mr. Chokha, any view on Tata Chemicals?
I would avoid at the current price and valuation Tata Chemical.
Okay. The next query that is coming in from, he hasn't mentioned, okay, his name is Natraj, and he's bought few shares of Nuvama Wealth, 20 shares at a price of 1,369. He wants to know the short-term view on this. Ruchit, any view on Nuvama Wealth?
Short term, the stock seems to be into a consolidation phase. 1200, 1180 is a good support on the downside. But on pullback move, 1350 is the immediate resistance. So it does not seem that we would see any kind of trended phase in very near term. If you look at last few trading sessions, the volumes have also reduced significantly. So expect some consolidation to continue.
Okay, we've got Ram Prasad calling us from Mumbai. Very good afternoon to you. How can we help you?
Yes, please. I have purchased 50 shares of Procter & Gamble Health Limited, PGHL.
Yeah, got
And the share price was 6,100 per share. Now the price has dropped too much. What should I do? Should I continue to hold and hope for a turnaround, or what is your advice on this?
Okay, Mr. Oklingam, I'll come to you on this one. What's the view like on PNG?
Yeah, in fact, just a couple of hours back, I also got attracted as this MNC is trading close to 52-week low.
Yeah.
But the biggest problem is growth is missing, near stagnating revenue. But one can continue to hold it. I would not dare to give sell call because this is a solid parental support is there. It is quite possible to come back to growth path. So one can continue to hold.
Okay, the next query is coming in from Rajesh from Noida. He wants to buy Finolex Industries. He wants to know whether is it a good price to enter this counter. Mr. Chokhalingam, the query is for you.
I prefer Finolex cable. In fact, Finolex Industries has about 15% stake also in Finolex cable. I prefer Finolex cable because it's still down 40-45% from 1 or 2 year high Finolex cable, and industry is a solid growth story, and there's a lot of cash, more than 2,000 crore of free cash the company has, and valuations are very, very attractive. So I prefer Finolex cable.
Okay, Lata is asking the next question about Parag Milk Foods. She wants to know if this is the good time to buy, and if yes, what could be the right price to enter this counter is basically her question. Ruchit, your view?
So as of now, no signs of trend reversal. Major support, if I look on the bit longer term charts, then it comes around 160 to 180 zone. So maybe if you get some more dip towards 180, 160, then you can take a review over there.
Query is from Narayan, and he's holding around 30 shares of SBI at a price of 1,023. Should he continue to hold or book profits? Any view on this, Rajesh? Ruchit, sorry.
Continue to hold on. No signs of trend reversal since last 2 quarters.
The next query is from Navneet from Patiala. He wants to know which could be a best bet in the data center space, L&T or Anantraj. Mr. Chokhalingam, any view on both the counters? Which one should he enter?
See, in terms of conservative approach, I prefer L&T.
Okay, all right. So that's the view coming in on L&T. The next one is from Tej, who's writing us from Ireland. He's asking about IHCL and whether he can take a fresh stake into this one from a long-term perspective. But Ruchit, the current levels, do you think he should make an entry?
I think buying with a gradual approach could be a good idea. Buy some quantity at current levels and keep some room that if you get any dip of about 7 to 8% from current levels, then you should add more at low levels. 650, 640 is a good support zone for the stock.
Next query is from Nitin from Gurgaon. He wants to know whether is it a good time to consolidate Jio Financial Services. Mr. Chokhalingam, any view on this counter?
I continue to maintain aggressive buy recommendation on Jio Financial. It is trading at 1 time price to book value, so which according to me is quite attractive.
Okay. All right. Pramod is calling us from Bengaluru. Pramod, hi. Very good afternoon to you. What's your query about?
Good afternoon. Actually, I bought IRB shares at 49 rupees.
Okay.
Now I'm at a loss of 25,000 rupees. Actually, I bought 3,300 shares. So should I average it, or can I expect a turnaround for this?
Okay. Ruchit, any view on this particular counter where charts are concerned?
The trend is not positive. So when the trend is not good, better not to put fresh money to average out. On any pullback moves we are witnessing, the stock is not able to surpass this 200 EMA, which is now around 43, 44. So take pullbacks as the opportunity to exit and invest this amount somewhere else rather than averaging.
Okay, Ruchit, thank you so much for that. Of course, Mr. Oklingam as well. Thank you so much to both of you gentlemen for taking out the time and helping us answer all those queries. With that, viewers, we're completely out of time on this edition of Ask Profit, but do stay tuned. India Market Close up next.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक कॉन्सर्ट नहीं है. This is my life. This is my story. One night, no repeats. Book your tickets now.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go, grab your tickets.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions.
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real
Hi, thanks so much for joining in and happy Friday to you for what it's worth. My name is Alex Matthew. With me is Hiral Dadia and Sharad Dubey. Guys, it's been a bit of a troublesome week for the Indian equity markets and today is no different.
Yeah, I mean, the kind of cuts that you're seeing, that profit booking that's coming in, I think what it's lacking is the confidence that there is value in India.
And where is the trigger? We are just not understanding. There is no major negative trigger also happening, and now the key moving average is Nifty is below that.
IT is another factor that we're watching out for as well.
IT is another factor. In fact, we'll talk about all of that. Let's start with a check on where the benchmarks are, Sharad. And 0.7% lower at this moment, broken below that 25,100 mark. In fact, 25,500 was what we were talking about. If we break below this level, we're talking about the possibility of going to
Further
25,000, right? So this is something that you want to watch for. Let's take a look at the heat map as well, just to see what the picture is. And there is significantly more red on the screen than there was yesterday. Reliance Industries is just about flat. So earlier today, it was losing about 1% or so. It's recovered a little bit of ground. If it was worse off than it is right now, you would see more pain on the benchmark. Trend
the
doing
IT
okay.
is doing well.
Yeah.
A little bit of short covering for third day. But
Yeah.
Alex, the red.
The red is significant, but even IT, and we'll see when we pull up the index, it has come off the high point of the day considerably so. But HDFC Life, Bharti Airtel, Indigo, you know what? Bharti Airtel is actually making it to the lower list or the bottom of the screen for quite a few of the days this week. We'll have to figure out on the charts whether there's something to watch out for. Interglobe Aviation, of course, reacting to that update from the DGCA. That is good news for you and me, Sharad, not so
Yes.
much for
consumers.
Indigo,
It's good, yes.
which is cancellation of tickets becoming easier. Maruti Suzuki, a few other names in the automotive pack doing not so well. ICICI Bank losing about 1.5%, and this is going to be posing a little bit of a challenge. Very quickly, I just want to pull up the IT index intraday chart, because this is something that started off with significant gains, and you've actually seen a complete deceleration from that point. You've seen this play out over the course of the last couple of sessions as well. When that big news came through, the positive news came through, it actually bounced back. That hasn't been holding, right? So you spoke about the moving averages. What are the key factors to look at?
Exactly. But the first thing is that 25,350 mark. That was the 200 DMA. Now we are below that. 1 month low levels at Nifty. So it's a key technical average if you are tracking this. But remember, for the medium term basis, buy the dip strategy definitely holds. It's not intraday of one more session, but for the medium term basis. Options data is suggesting a minor recovery might be possible later on if a little bit more selling comes in, but largely IT is seeing short covering for the third straight day. But will it hold up? That's the question. For last 2 days, the answer is no. Major sectors are seeing losses, but they're in a very narrow range, something between 2 to 3 odd %. There's no major sell-off happening, but of course, capital market and select NBFCs on Bihar MFI News also are seeing a big drag. And interestingly, the European markets have opened positive. So largely we can say a neutral sentiment globally, but definitely we want to understand why the indices are cracking in trade. Over to you, Hiral. Stock specific, what's there on your watch list?
Lots more on the watch list. Thank you, Sharad. But before we head across to the watch list, Reddington, Tejas Network, Supreme Petro, Camlin Fine, Sarda. Few top movers in trade today in a market which is actually drooling under pressure. And to add to that, what continues to remain under pressure is Home First, VMM, which is VMart, Vesuvius, Credit Access, and JK Tyre. These are few of the stocks which are moving in trade as we speak. But on the watch list, pressure continues when you talk about the consumption pack, from a Nestle to a Tata Consumers and HUL, all under pressure. Eternal has seen a good recovery after that extended fall. Ultratech Sim, and that stock is trading under pressure, not done really much in the last 6 months. Maruti Suzuki is seeing selling pressure. In fact, as Alex mentioned, all of your other auto names also are in focus today, and that is on the back of the auto sales numbers that will trickle in tomorrow. That is on the 1st of March, which is a Sunday. Reddington is also up in trade. Tejas Network, Praj Industries, Sun TV are all buzzing on the back of strong volumes. SpiceJet again on the back of the block deal along with a VMart Retail. Vesuvius has reported numbers, and that stock is in focus with a Coromandel which touched a 2-month low. In fact, some momentum or some movement that's happening when you talk about fertilizer stocks between yesterday and today. So watch out for that space pretty closely. And volume building up on Apollo Microsystem. You have your entire MFI pack which is in focus on the back of the Bihar MFI bill. That's the microfinance, bill that has come up, and that impact is what is visible. So these are the stocks that are in focus in today's session. But let's get in. Kunal Shah from Mirai Asset Share Khan, who's joining in to talk to us about what the levels should look like. And we have Deepan Mehta from Elixir Equities. Welcome to the show, gentlemen. Always a pleasure to speak to you. Kunal, let me come to you first. I mean, interesting sell-off that we are seeing in terms of where markets go today. The week has not really been that great, and it's specifically IT also, which has been on a back burner, though some kind of respite in today's session. If you have to look at Nifty and Bank Nifty, what are the levels that you're tracking from a perspective that someone wants to enter in trade on Monday?
Good afternoon. Good afternoon to everyone. See, I think firstly, what we have seen post that the US trade deal, the high gap up of what we had, we have been continuously making from those levels a lower high formation. So clearly, there is no momentum in the markets. Today, again, 25,500 has also been broken on the downside 400 zone. And I think now the gap area, which is there around the mark of 25,100, that will be tested on the downside. So overall, the view remains negative, sell on rise for the market. 25,100 is what I'm expecting to be tested on the downside. And if we sustain below that, then we will probably will be heading towards 24,900, 600 zone. On the higher end, till the time we don't surpass 25,600 again, the view continues to remain negative on the Nifty index. The Bank Nifty index here in the last 3 trading sessions, what we were trying to defend was 60,800. That has been broken in today's trading session, but again, Bank Nifty has a couple of supports where 60,800, the next is 60,500 on the downside. A decisive break below the 60,500 will open up the doors for the Bank Nifty on the downside towards 59,700. 59,800 mark. So I think these are some of the key levels which one should watch out for. And if one wants to go long on the Bank Nifty index, only on a breakout above 61,300, one should be aggressive long, or else one should remain cautious even on the Bank Nifty index.
So there is a clear divergence, for FI favorites, so be it IT or banking, both sides, the story is very different. But Kunal, I just want to get your technical picks also. What will be the important picks today?
Yeah, I think overall, what we have seen in the markets, pharma again continues to be the safe zone on these levels. So I think landmark pharma still looks positive to me from the current levels. The recent swing high, swing high which was made, that has also been taken out. So clearly a bullish momentum that is playing out. You can expect the stock to go towards 2200 on the upside in the very short term, keeping a stop loss on the downside close to 2100. The second stock which is there on my radar, that is on the weaker side, that is CDSL. It has started to lose momentum, facing rejection at the 20 DMA. There is follow-up selling pressure, and we have seen the stock forming a low top, low bottom formation. So here again, the sentiment continues to remain on the weak side. One can expect further decline over here, 1,240 to 1,020 is what I'm expecting on the downside for CDSL. CDSL remains a sell for me with a stop loss of 1,330 on the upside.
Right, so those are the stocks that you should watch out for on the basis of technicals. Deepan, before we get into stock-specific questions with you or pointers with you, just wanted your initial view on what you're seeing this week. Because one would have thought that with some of that tariff turmoil dissipating, of course, there remains a little bit of uncertainty. There would have been a little more interest in the Indian equity markets, but it seems like every move upwards is being sold into. On the fundamentals, are there any triggers that you see that are causing this pressure on the downside?
Yeah, good afternoon. Thank you for having me on your show. No, I don't think so. I think fundamentals remain strong. And today's GDP number also perhaps will reflect that as well. We've had a decent earnings season per se. And apart from software services, I think all industries are chugging along pretty fine. Growth dynamics are decent. And because of this correction, valuations also are at reasonable levels. So I'm a bit perplexed why the market is behaving the way it is. But, look, market is God. So, we have to respect it. My sense is that this uncertain time can last longer than we think. But from an investor's perspective, who has got a 3-year view, I think these are great times to be overweight equities, especially small mid-cap stocks. I get the kind of a same feeling when I was just around COVID time. And after the returns were phenomenal. So I'm pretty positive on the market as a whole. I could be wrong. You could see another 5-10% correction also. But if you're prepared to ride out more uncertainty, more correction, and build your conviction, then certainly I think next 2-3 years could give very good returns.
The next 2 to 3 years, something which Deepan Bhai has stated that there can be a good returns coming in. But let's move on. The Supreme Court has delivered a decisive ruling in favor of Sarda Energy and Minerals, rejecting all appeals filed against the company's resolution plan for SKS power generation. Varsha is here with more details. Varsha, the stock is up 6%. What are the key takeaways from here?
Well, we all know that Sarda Energy is actually moving from minerals to energy portfolio, and hence this ruling is very important, and hence we are seeing the stock is up 7%. Now this is related to Supreme Court approving Sarda Energy's buyout plan when it comes to SKS Power. The deal value stands at around 19.5 1,950 crore, and the legal fight is finally over. Now, who is buying whom? So, Sarda Energy and Minerals will acquire SKS Power Generation, and the process is done under insolvency and bankruptcy code. Now, who opposed the deal? Well, Torrent Power and Zindal Power challenged the plan, and Supreme Court rejected their objections, and finally, Sarda Energy will buy SKS Power. Now, onto the what does this mean? That Sarda Energy officially wins the bidding war, can take control of SKS Power. No more legal uncertainty, no more that legal overhang on this. Now, why this is important? Because of the big expansion move for Sarda Energy in power sector. As I was saying, the next growth trigger is actually for Sarda is power segment, and shows that IBC approval plans are filed and protected. Now, this is a positive signal for future insolvency cases, and as we know that Sarda Energy is going big when it comes to their energy portfolio, and all the growth has been aligned to the power or energy sector, and hence this ruling is really important because that aligns the growth prospects for the company, and hence we are seeing the stock is up almost 7 to 8% in trade.
Okay, right. Yeah, well put, Varsha, and that allows us to pose the perfect question to Deepan Mehta. Deepan, if you've looked at Sarda Energy, of course, the story or the conversation about the change that they are undergoing in the business lines that they have is well known. But what do you make of the latest development?
No, sorry. I have no clue about this story. I don't want to comment.
That's perfectly fine. All right, let me go across to Kunal then on the technical charts to see if Sarda Energy, with about 6% of an uptick as things stand right now, has more legs to it. Would you buy right now?
I think, yeah, definitely I'll buy it right now. 539, 540 has been the hurdle for the stock, and that has been taken out today decisively with volumes. So now it opens up more upside for the stock. The next level on the upside, what I'll be looking out is somewhere close to 584, 590 on the upside. So I think even at the current levels, it looks attractive to buy. Now the support on the downside is placed at 525, 530 zone.
All right, but the closing is very much important, especially if you are in the F&O space, because the 200 DMA level, that has been breached downwards for Nifty Index. But let's look at stock-specific moves where the action is coming in, long build-up coming in. Interesting for Dixon Tech and ONGC Oil India also going up in trade, or BSE Oil and Gas Index actually doing well, one of the top gainers. I could talk about it. Let's also see the short covering candidates where the action is there. Kalyan Jewellers and KA Industries, but it's not that convincing, but definitely volume pickup is definitely there. Long unwinding also, no major trade because most of the trades are happening in the short segment. But yes, Dalmia Bharat, that's where a little bit of long unwinding has started taking place. But today, of course, the capital goods and your select NBFC companies, this is where the pain is. Let's just show the key short build-up which is happening, and largely we see one is coming in from the capital goods, the capital market space, that's down 4%, and Bandhan Bank, that's also seeing a little bit of pressure. Kunal, I want to get you on this. Two sectors, both capital and the select NBFCs which we are talking about. Of course, there's the Bihar MFI impact also, which we'll talk with Deepan on that. But on the technical charts, capital market stocks and select NBFCs which are cracking in trade, what are the technical levels looking like, and the important stop losses also?
I think firstly, the one call which I initiated on the sell side was from the capital market space, that is CDSL. So again, that continues to be on the negative side for me. You can expect further lower levels for the stock towards 1200 mark as well. So that is again looking on the weaker side. Even from the capital markets, CAMS has also given us a breakdown. So that is also looking weak. Can test the lower end of 610, 620 zone. So CAMS, CDSL, these are some of the stocks which are looking weak. I mean, NBFC space, I think overall here the setup still looks more or less sideways. to me. In fact, contrary a little bit, I'll be bullish on certain NBFC stocks over here. If you get a dip in LTF, that would be a good buying opportunity around 275 to 80 zone. Probably one can expect a good recovery again back towards 300, 305 on the upside.
All right. Let me go across to you, Deepan, on a couple of interesting takeaways from conversations we had this morning. And we spoke to two companies. Pine Labs was one of them. Zagle was another one. And both of these entities, the management said that 25 to 30% already of their coding requirements are being taken care of by artificial intelligence. Zagle said that they've reduced their workforce in the third quarter, and Pine Labs said that they're unlikely to need more engineers from this point on. Productivity gains are going to result in any improvement that they see or any incremental generation of business. It's going to get taken care of with the existing stock. Is this only a sign of various other players operating in the same manner? And what do you think the financials will see heading into FY27?
First of all, I think it's a very good particular story and theme to track, and maybe you should ask more and more managements, especially companies which are heavily technology driven or dependent, not driven, dependent as to how they're adapting artificial intelligence. And one kind of a situation comes to mind about the Bajaj Finance con call where Rajiv Jain explained in detail how they are using AI. So I'm certain that there'll be many winners in this AI theme, and companies which are able to embrace this change and proactively work towards using AI will be the winners. And I think you already found two companies over there, Pine Lab and Zagle Prepaid, a disclosure that we are invested in Zagle Prepaid and Bajaj Finance. And Pine Labs is also top of the mind in terms of fresh investment as a measure of disclosure. But I think that the application of AI will differentiate you from the competitor. And I think early adopters will certainly be rewarded very handsomely by the street. We should track this particular theme more closely. And I think that there's just too much of attention being given to the software services companies and how their models get disrupted or not disrupted. Are they going to be implementing AI? Are they going to get, less business because of AI? That is just noise. End of the day, if you want to have an eye on the ball, exactly what you did, focus on companies which can cut their cost by 15-20% or so and get those gains over there in terms of better productivity, better operating profit margins, or improve services, and that can just strengthen their moat.
A nice take, Deepan, when it comes to usage of AI and the kind of companies that could benefit out of this as well. But stay with us. It's time for the rapid fire now. A couple of stocks that we're talking about in today's session that I will be taking you through. But Kunal, let me come to you first. Tejas Network, that's the first one. They've got a supply order, strong moves coming in there.
I think, from the past two trading sessions, the stock has witnessed a good move on the upside. Now, the next level, what I see on the upside for the stock from a short-term perspective would be 500. So there is some rally pending. It could go towards 490, 500 zone from the current levels. But fresh entry at the current levels, I would not recommend any dip. That would be a good opportunity to enter into the stock.
Okay, correction is an opportunity to enter. Redington, 17% gains, biggest intraday gain since November 6, I beg your pardon, strong trading volumes.
See, I think the next level of resistance for the stock is somewhere around the mark of 300. 284 is where it is currently trading. So can extend this gain towards 295, 300 on the upside.
Okay, Phenolics Cables is trading with strong volumes as well. Along with that, look at a Vishal Megapart. Your views?
I think Phenolics Cable, a little bit of upside is still left towards 970, 980 zone. That could be tested on the upside. So still the view remains positive. We have seen strong moves in the past two trading sessions.
Okay, and what about a Vishal Megamart?
Vishal Megamart, again, we had seen some buying interest from the lower levels, but now again, that has been wiped out. So here the view remains, if 115 on the downside is reached, then probably you will see further selling pressure.
Okay, so that's the rapid fire, but another stock that we want to pull up is the IDBI Bank as well. Let's look at that one because there are news reports suggesting that Fairfax is the front runner, and this is to actually buy majority stake in IDBI Bank. That stock is at the day's highest levels as we speak, and this could actually become one of the largest foreign investments that could be coming in terms of the banking sector. The government's 61% stake is valued at around $8 billion. Now, this 61% stake is what the government as well as LIC hold. There are talks ongoing. The deal outcome is something that is still uncertain, is what they're reporting. Now, whether Fairfax has the capacity or not is the question. They've said that they will be able to purchase it independently. They may bring in a partner at a later stage, is what reports are suggesting. And this could actually, Fairfax could actually consider merging a IDBI bank with a CSB as well. If you pull up the charts of CSB, let's see what's happening on that counter. And Fairfax, as we know, already controls a majority stake in a CSB. That stock nearly at the day's lows. Some minor correction coming in from there. Deepan, your view in terms of, IDBI Bank, Fairfax coming in and a potential merger of the two banks?
I think it's great for minority shareholders of IDBI Bank, and even if the transfer of ownership does not take place, I think IDBI Bank is now a phenomenally efficiently run bank with good quality balance sheet as well. They have completely wiped out all the old losses which they had. The NPAs have been cleaned up. Now their loan book is amongst the cleanest in the industry. Growth rates also are better than the industry growth rates. And certainly, I think they are on a new growth plan. So it'd be a good purchase for whoever buys IDBI Bank. And at the same time, I think a merger with CSB also will make sense because I think geographically it will kind of diversify the revenues, and a stronger bank is always welcome. But I just have one word of caution on the entire banking industry, that the way the industry is going is becoming more and more of a red ocean, and competition has come through from the PSU banks also, which was not there earlier. And also, I think a lot of competition is there from the capital market. So I would be a bit circumspect in the medium to long-term prospects of banks. I'm not completely convinced that such high 3% type of plus net interest margins are sustainable. Although I think India's lending requirement is strong and chasing consumer lending is a good idea, I would prefer to play through the NBFCs where there's more flexibility in terms of lending, in terms of the norms, provisioning as well. So that's the way I would like to play it. With banks, I'm getting a bit circumspect with every passing quarter.
Right. So bank, of course, there is a skeptical approach to it, but NBFC is something where Deepan is finding a little bit of comfort. But now it's that time of the day where we get you the khabar on the street, and Somit is here with the stocks. Somit, in this market also there must be a couple of stocks which are there in your radar, where the new buzz is there.
Well, just 3 stocks, given that market is quite weak, not much of an action that we are seeing. Or not much of chatter in dealing rooms that is happening. A few stocks that still dealers have highlighted. Firstly is MCX. Dealers indicate that there are some buy flows on the institutional desk at the lower level that we are seeing for this counter, and dealers indicate that some margin easing on gold and silver is something that will benefit MCX and could lead to higher volumes. So that is one of the reasons why we are seeing some buy flows at the lower levels for this counter. Dixon Tech, that stock has been gaining on reports of fresh round of PLI scheme for smartphone makers, and hence that stock is gaining in even such a weak market. But dealers still indicate that there are sell flows that continue on higher levels from the large HNI desk. That is still continuing for Dixon Tech, so keep an eye out for Dixon Tech as well. When it comes to Voltas, dealers indicate lower channel inventory ahead of summer, and that is one of the reasons why the stock has perked up nearly 2% in trade. Channel checks are indicating that higher stocking has happened so far in the 4th quarter in anticipation of a strong summer this year, and also because of some price hikes that could come in going forward because of the increase in the commodity prices that we have seen. So both these factors have led to higher stocking by dealers, and that is one of the reasons why inventory has come down, and this could benefit Voltas in the 4th quarter numbers as well. So that is one of the reasons why the stock has perked up.
Great. All right, Somit, very interesting 3 stocks, even if it's a limited list. And I would like to double click on Dixon Technology. Let's pull up the chart and see where it's currently trading, because I'd be very keen to find out what Deepan has to say about this one. 4.8% or thereabouts, and 10,600 now on the ticker for Dixon Technologies. It's a far cry from the heady valuations, Deepan, that it has had in the last 3 years. So therefore the question to you Yesterday, we were hearing about reports of the possibility of lower smartphone sales, and this obviously has a natural bearing on Dixon Technology. But at the same time, there are, as Somit just pointed out, certain PLI benefits that are seen for the company. Do you think that the valuation as it's poised right now is attractive from the long-term standpoint?
I certainly think valuation-wise, it has reached attractive levels. And no doubt that a soft quarter, management commentary also was weak. But I think these are companies, which are in a way, going to benefit from the longer term trends which are taking place in electronic manufacturing. A lot of electronic manufacturing, be it mobile phones, other electronic devices, is going to get outsourced. And Dixon certainly has displayed exceptional execution. And also, one more fact comes to mind is that they are going very heavily into backward integration. And as and when the JVs and the new plans for backward integration, be it for cameras or be it for screens, they go into stream, they should be able to improve their operating profit margins, and also it may provide a new source of revenue for the company. So first of all, the disclosure, we are invested in Dixon Technologies, and we do feel that a lot of the negativity in the stock has got priced in, and maybe from these levels it can restart to retrace the lost ground.
Your views on Dixon Tech? The stock is up almost 5% above that 10,600 levels mark. What are the key levels looking like? Any other sustained up move from here?
I think the key levels to watch out here will be 11,200. That has been the resistance for the stock in the short term. So 11,200 is where I'm expecting this pullback. Overall, the larger term picture still continues to remain on the negative side. We'll further need confirmation for the stock for a trend reversal. 12,000 is something which would be on my radar. Once the stock surpasses that, then probably you can confirm a trend reversal into the stock.
So that's with regards to EMS players. In fact, Keynes as well has been in focus. PG Electroplast lately has been in focus. So watch out for these names which have been beaten down. Some buying interest coming back soon. But moving on, we're talking about IT and real estate hand in hand, because the moment there is pressure building in terms of IT, there are job losses, and that somewhere has an impact when it comes to real estate as a sector. Though today, if you talk about IT as a sector, it is buzzing in trade. Now, what is keeping it afloat? The oversold index is seeing some sharp rebound today. Two, your mood lifters mainly have been Accenture and Cognizant, where both of these counters have seen some good uptake, and that's what is having some bit of a counter impact as well. Now, AI is not becoming as a threat, it's seen as an opportunity, and your AI infrastructures, data centers, GPUs are the ones who are in focus, and valuations are at multi-year lows. It's the worst fall since September 2008, as we've seen in terms of the monthly fall on Nifty IT index. And in terms of February performance, Wipro is down 14%, worst fall in 4 years. Infosys down 20%, worst fall in 13 years. And you have HCL Tech promoter buying that's coming in as well. Vama Sundari has bought around 4.4 lakh crore shares. So lots brewing in this space, but what's the counter impact that it could have in terms of real estate? Gulam Zia from Knight Frank India joins in. Gulam, welcome to the show. Always a pleasure to speak to you. What is the mood looking like right now? That's what we want to talk to you about. Are you seeing a change, a shift in terms of inquiries, in terms of the booking numbers that you're seeing, and specifically when it comes to IT hubs?
Well, first of all, thank you so much for calling me on this platform. Always a pleasure to interact with you and to be in front of your audience. The question relating the recent layoffs on real estate and impact of that, we still don't see any impact actually on both. Like either if I'm talking about housing sales or even offices, nowhere is it reflecting, because last year we saw a bumper year for office absorption, and at least the current trend is that the inquiries for office spaces is also as strong, if not any better, than what it was last year same time. And housing, very strangely, there is no slowdown in housing market either. Like we are looking at one of the best Februaries, the kind of numbers that we are tracking right now, the best month in last 14 years. In Mumbai, at least, the kind of registration, the euphoria is, there is no slowing down either. So while the layoffs are talking a lot of those AI-related disruptions, but then at least on real estate, we don't see any impact yet.
Ghulam, hi, Alex here. So just trying to understand then in certain pockets, and obviously these are the real estate has to be looked at in micro markets. So I was speaking to somebody just a couple of months back, just before the budget in Coimbatore. They were saying that the property prices have gone up very significantly because of IT demand. And she, as a real estate developer, was saying that 60-70% of the demand comes through from IT. So hypothetically, if there is pressure on the workforce participation, and if IT companies as a whole are moving away from that workforce-led model to a delivery-based model, then is there the possibility that you could see supply slowing heading into FY27?
Well, once again, Alex, I would want to bifurcate this into two asset classes the way I did it earlier. So even if I'm talking about offices, that question, because the recent upswing in GCCs, Global Capability Centers, etc., has given a completely new twist to the Indian office space market for last 2-3 years, which never was a demand driver, say about 4-5 years back. So this is a completely new demand driver, which has added a huge momentum to office stocks in the country. And in different locations, as you rightly said, the impact is different. But specifically for housing, the only market which has seen some signs of slowdown is NCR, which is not so heavily dependent on ITS. On the other side, Bengaluru or Hyderabad, these are markets which are first of all not showing any slowdown, any sign of slowdown. Hyderabad, for that matter, has been showing a non-stop kind of improvement in prices as well as number of sales. The only thing, Alex, I agree with you is the price rise. The price rise has reached a certain stage where we are expecting that these are actually going beyond the affordability numbers, and that can have an impact on sales number in times to come. And many developers are already talking about that. And that's also reflecting in lots of those freebies kicking in. But net, at least till today, we don't see much of an impact. And as I said, markets like NCR have not much of a dependence on AI or IT per se, are showing signs of slowdown. So these are a few confusing signals emerging. But I can't put any of it purely on AI-led disruptions. The markets have their own nuances.
Ghulam, on that note, thanks so much for taking the time and for explaining this to us. Important to have you this afternoon.
Thank you.
I very, very quickly want to get your view, Dipan, on this, because some of the pre-sales data that we've seen is not as rosy as that, as you might think, right? So quick view on whether or not you see there being any disruption whatsoever on account of job losses, particularly because IT in certain pockets is such a large buyer of real estate.
Well, I think generally, real estate has hit a slightly softer trend, although the multi-year trend remains intact. But I think there are some minor challenges as of now. So I'd be a bit circumspect in real estate as well. And the numbers will come through, but I think the number of new projects and new bookings, base effect, what's coming into play over there, should soften up a little bit.
So that's with regards to where IT, real estate go. Another sector that is in focus today, which will report, the monthly numbers on the first, is the auto sector. Let's quickly pull up all the counters on the screens because you'll see what is in store. Clearly, what you're looking at is a strong demand across segments. Now, Bajaj Auto, TVS, Hero Moto, Eicher. On a year-on-year basis, we are expected to see some bit of a growth in Bajaj and TVS. Hero is showing a 73% decline, so watch out for that one. And Eicher, again, lower double-digit growth is what you're watching out for. In terms of four-wheelers as well, on a month-on-month basis, between January to February, you'll have to compare. All of them are expecting a decline in that range of 7 to 10%, whereas on a year-on-year basis, you're seeing M&M, which is seeing very strong growth, which is then followed by Tata Motors. You have Hyundai and Maruti Suzuki pretty much at the same levels. Commercial vehicles, a similar trend, 24 to 28% is the kind of growth that you're expecting on a month-on-month basis, but on a year-on-year basis, it's seeming to be absolutely flat or mildly negative for a Aisha ECV. And in terms of tractors, again, it's been a good season for tractor sales. 22 to 29% is the kind of growth on a year-on-year basis. But it's going to be interesting to see how a M&M could see a deceleration to the tune of 20%. And these are consensus estimates that we are picking so far. Nomura's view is that passenger vehicle inventory is comfortable, discounting is slightly higher, two-wheeler momentum is firm, and it's rural sentiment which is strong. Jefferies is talking about wholesale to be in double-digit growth across OEMs, and they're expecting wholesale growth in that range of 10 to 45%. You'll see the numbers on your screen. So very mixed views coming in there, and the month-on-month and year-on-year growth is showing you some bit of deviation. So that's what the auto numbers are expected to look like. But very quickly in terms of markets, a sudden downtick, Alex and Sharad, that we are seeing right now, and that's what we need to address. And I would request Deepan to stay back to talk to us about this as well. The sharp downturn that's coming in, we are at the day's lows. We've broken below that 25,250 mark as well. 25,200 is something that we should be tracking right now. Let's just look at the components and contributors of Nifty 50 to understand what is putting pressure from an ICICI Bank, Bharti Airtel, HDFC. So it's mainly your financials which are actually putting that kind of pressure right now. If we can also see a RIL, because that is another heavyweight, a mild change in terms of Reliance Industries also has a major impact. If we can have that intraday chart, there you go. Reliance Industries also seeing that sharp fall right now, which is being reflected in terms of Nifty 50. Deepan, a sudden downtick that we are seeing in terms of markets. What are you picking up? Anything that you see here?
No, I'm in front of your cameras. I haven't picked up anything. Well, it's okay. These things happen. I think today there's MSCI rebalancing, so maybe something is happening over there, but nothing really to pin down why such a huge correction has taken place.
But you just added value, because MSCI is something we completely missed out. We spoke about that this morning, and yes, absolutely, it's the MSCI rebalancing probably which is causing this kind of a move right now. But thank you so much for joining in. Always a pleasure to speak to you. I mean, this is something that we picked up this morning as well, with the inflows and outflows that could happen, and I think that's being reflected. Yes.
Exactly. For the last half an hour, you will see the volatility, because the adjustment day comes in.
It does. We'll talk about some of the stocks that we've just mentioned. We have to slip into a very quick break. On the other side, you'll get the top buy today and sell on Monday strategy. Stay tuned.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go, grab your tickets.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक कॉन्सर्ट नहीं है. This is my life. This is my story. One night, no repeats. Book your tickets now.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
Welcome back. You're watching India Market Close, and even as we speak, the markets have taken a turn for the worse. First, take a look at the Nifty 50, and you're seeing it trade at the low point of the day. There's a sharp crack that has come through just over the last 5 to 7 minutes or so, down about 1.4%, and below that 25,200 mark, ratcheting towards that 25,000 mark. What is playing out? First of all, the breadth of that 50 stock Nifty 50 has actually turned very dramatically. Only 4 stocks in the green. Pull up the heat map for the Nifty 50 and you'll see what I'm talking about. 46 stocks now trading in the red. You have Sun Pharmaceuticals that is trading with the biggest cuts. Mahindra & Mahindra, Bharti Airtel, not too far behind that, but it's really the heavyweights. You will see this in the contribution list as well. When you look at it, the biggest weight on the downside is ICICI Bank, followed by HDFC Bank, Bharti Airtel losing quite a bit of ground as well, Reliance Industries. If we can pull up the heat map for the Nifty 50, let's do that first, and you will see what I'm talking about. Just 4 spots of green on that screen and a large part of the market of the Nifty 50 in the red. Pull up the contribution chart as well, and you will see that the heavyweights on the Nifty 50 are really pulling the market lower, pulling the benchmark lower. ICICI Bank, HDFC Bank, Reliance Industries in that list. Now pull up the intraday chart for the Nifty Bank as well. It is trading now with cuts of over 1% and underperforming to a significant degree. Of course, this is an index that has proved quite resilient in the recent past, and that hasn't been the case in trade today, likely on account of ICICI Bank as well as HDFC Bank. Pull up the intraday chart for the Nifty IT as well. You started the day with gains of 1% or over 1%. It is now just about flat. So all of those gains have now been erased. Let's talk about a few of the factors that are at play right now. And in fact, let's go across to Somit Sarkar to get those details. Somit, few factors at play, possibly even the MSCI rejig.
Well, I'll just move out here, and as you can see in this chart for the Nifty 50, clearly in the last 5 minutes, we have fallen nearly 150 points, and clearly shows that some algo trades must have hit at around 3 p.m. That has led to this sharp fall. One of the reasons could also be because of the MSCI rebalancing that was expected to happen today. But apart from that, there's no other technical reason that could be found out. Also, do remember that we were trading below all the key daily moving averages, that is 50, 100 and 200 DMA. So some algo hits must have happened that could have led to this sharp fall of 150 points. MSCI, again, as I mentioned, could have been one of the reasons. But apart from that, FIs have also been continuously selling, as Sharad was also pointing out earlier. And if you look at the sectoral indices, the fresh sell-off that had started at around 3 p.m. was largely led by IT stocks. IT stocks were gaining throughout the day, but post 3 p.m. we have seen a sharp fall coming in all of them. And as you were mentioning, Alex, that in the Nifty 50 basket, just 4 stocks are managing to stay in green. While if you look at HDFC Bank, ICICI Bank, Airtel, all of them have been contributing to this fall. All these 3 stocks have contributed nearly 100 points to the downtick that we are seeing. Though Sun Pharma is the top loser, the contribution to the benchmark fall is much lower. Yes, IT stocks are still in green, HCL Tech, Infosys, but they have come off sharply from the day's highest point. In fact, TCS, which has a higher weightage, has come down and is trading in red, 0.2% now. Apart from that, if you look at the sectoral indices, it's largely Nifty Real Estate, which is one of the top sectoral loser in trade, supported by Nifty Auto, Nifty FMCG and Nifty Metal. Nifty IT Index now up just 0.3%. Could be some MSCI-led rebalancing as well, but we can see that it has happened sharply at 3 p.m., sharp 150 point, and usually the MSCI rebalancing happens in the last half an hour or 15 minutes of trade.
Okay, and to add to this, thank you, Somit, for that. You know, if I'm seeing there are 239 stocks right now which have actually hit a 52-week low in intraday trading. So that is telling you what's happening to the breadth, what's happening to the kind of cuts. We have Kush Bora also who's joining in. Kush, I'm sure, you know, you didn't really expect something like this when you started off the day today at NDTV Profit. Right now we're seeing cuts of nearly what? We are below the 25,200 mark. What are levels indicating?
I was expecting this kind of a sharp gash. You know, we were speaking about buy on declines, but I would suggest that, you know, hold up on that because some of the key support levels have been broken. The 200-day moving day average, average on the Nifty has been broken, and how. So, and plus a lot of sectoral breadth is also negative. So my suggestion would be just to, wait this one out. Anyway, we are just about, 18, 20 minutes away from the market close, and there's the weekend. I would suggest don't act in panic, not even a buy call, not even a sell call. Just hold up, see what pans out. We don't have a very clear reason. MSCI rejig is perhaps one of the reasons. But let's wait and see how markets react on Monday. If there's any kind of a rebound, I think this could just be a dip, because of a technical reason. But that remains to be seen, and hence I suggest no action or no activity just yet.
Stay put and don't do anything. That is also a trade. In fact, if you don't do something. Ajit Mishra, do you agree? Do you concur? But what, and also a supplementary question to that, what if you already have existing positions and you've been betting on the wrong side? How do you deal with that right now?
Yeah, good afternoon, sir. So what we are seeing right now is the range breakdown. It's been almost 3 weeks we were hovering in this 25,400, 26,000 zone. And earlier also we breached this mark of 25,400, but this time around it's a decisive break, and that's the reason why we are seeing this pressure emerging, alongside with the technical factors, with the MSCI rebalancing and the other reasons.
Ajit, apologies. I'm so sorry to cut you off, but it seems like we've got you on a bad line. I'm going to try and repatch you because we couldn't really make out what you were saying. Kush, let me ask you this question. You said don't do anything, but that assumes that you have not already initiated a trade. For those that have done so, what kind of advice would you give on either side?
Very, very pertinent point, Alex. Now, assuming that you already have a trade, if it's not a leveraged one, if it's in if it's in the cash segment, it's, like I said, not a bad idea to not act in panic and not sell off. Like I said, this is a very sharp reaction. In the last few minutes, of course, the markets were a little lower throughout the day, but this breakdown of those support levels, 25,300 on the Nifty and about 60,800 on the Bank Nifty, which was being respected for the last few days, this is a very sharp reaction. So my suggestion, if you have a position, don't act in panic. If you can hold off, if it's not a leveraged trade, then you can still hold on to that. So my suggestion would be hold on. Yes, the resistance levels have shifted lower as we speak as well. So, 25,800 to 25,600 is what we spoke of earlier in the morning, but that seems like distant history now. The call option base has shifted lower to even as low as 25,200, where the Nifty is currently. So, yes, the resistance levels are shifting lower, but again, acting in panic has never done, good to anyone. So, like I said, if you don't have a leveraged position, if it's just a cash position, and if you can hold on to that, I think you should hold on to it till Monday. and see how the markets react, and if there is any kind of a rebound that we see in the coming days, especially with the Monday opening.
Right. Thanks a lot, Kush, for that. But Kunal, want to get your views also on that. A sudden fall in the markets, it might be an algo, and of course the MSCI adjustments also coming in. Your views on that?
I think overall what we have seen in the markets that post that gap of what we had got, we have been continuously forming the lower top lower top approach over here, and 25,250 to 25,800 was the broad range in which the index was trading. Now we have broken over there decisively. Today is going to be the weekly close as well for the market. So I think now brace for further downside for the markets. I'm expecting Nifty to go toward 24,900, 24,600 on the downside. So I think not looking good for the markets as being a daily close as well as the weekly close. Even if you get any positive opening on Monday, that would be again an opportunity to sell. We can expect lower levels for the market.
Okay, Neeraj Devan with us, independent market expert. Neeraj, thanks so much for having the patience. Sudden sharp fall, which is why we had to go to take a look at all of the technical indicators as they're standing. What would you do with your portfolio? The suggestion broadly has been on the technical side as well to not do anything at this moment. You don't want to catch a falling knife. And so with your portfolio, what do you do?
Yeah, good afternoon. Actually, if you see over the last few days, we're getting some base building happening in some of the stocks also. In the mid-cap, small cap space also, there's some buying that you can see in certain stocks. So I think this is a market where you have to have a bottoms-up approach. If you're getting, because of these deep sell-offs like we're seeing today, if you're getting your stocks at a good valuation, I think one should be accumulating. One should not go all out and buy right now because still there is weakness in the market. There is a dearth of buyers in the market. If someone comes to sell a small lot also, the buyers are not there. That's why the stock slides more than one. It will slide with small selling. So I think one should be on the watch. And if you're getting good valuation, getting your stocks at good prices, keep accumulating these dips.
That's an interesting take. Someone who's been on the sidelines right now, probably these could be good times to start accumulating as well at lower levels, at lower valuations. But my question, Kush and Kunal, I think we have both of you, is I'll take it with Kunal first. Now, Monday is a day that we should be watching out for. Tuesday is a holiday. Being a truncated week, expiry will be on Monday as well. What happens then? What are you looking out for?
Yeah, I think definitely from an expiry point of view, 25,300 was what we are looking at. That has been breached on the downside. So now the next psychological level definitely comes at 25,000. That will be tested. So I'm expecting 25,000, 24,900 to be tested on the downside on Monday. And probably then you will see an expiry somewhere around the mark of 25,000 only.
Okay. Kush, any views that you have on this? Because Alex did ask you as to what someone should do with positions that they've already taken as a buy on dip strategy. But being Monday as an expiry day and a truncated week, what are you looking at?
So here, even now, if I see, the 25,000 put option really does not have as big a base, as does the 25,300 or 25,400 call option, suggesting that, while there could be a technical and a psychological support more so at around the 25,000 mark, at least in terms of data and in terms of option writing, that is not evident. So, this could well be a level that could be tested. Like I said, right now, given the ferocity of the fall, wouldn't want to venture into a trade and, go out and say, let's buy that put because, the put base is missing right now. We could well have a rebound. Does it get sold into or does it become a short covering rally from there? That is something that, Monday will tell us. But like I said, there is a good possibility that we could see slightly lower levels also. So I wouldn't really venture a trade right now. And yeah, being a truncated week, we've seen, and I'm just, saying something contra now, which is we've seen that markets have a tendency of reacting very, in a very opposite manner on the expiry days. So maybe some pullback, on the upside could not be ruled out. So there is a good possibility that, markets could go higher and test the 25,300 mark as well as we've seen in the expiry. But like I said, given the ferocity of the fall doesn't warrant any trade just yet.
Okay, very, very quick last view, Kush. Since we spoke about it this morning, the IT index was something that we were looking at as a bright spot. And you were talking about, if I remember correctly, 30,800 being the immediate resistance. Does that stay? And would you still initiate a trade? It's the only bright spot, but just about 0.2% higher as we speak right now.
When the fuse will go off over there, Alex, we don't know.
Exactly why I'm asking Kush.
So, Alex, irrespective of, just for a minute, irrespective of whatever's happening in the market, the IT trade still becomes, a buy. The only reason for that is that, it's already massively oversold. So there could be a rebound that could come in. Like we've discussed, by the way, that level on the Nifty IT index was 31,000, which was proving to be a resistance and is continuing to prove to be a resistance. But yeah, since it's already oversold, the downside risk on this from this point onwards is fairly small. This is something that you can buy into from a positional standpoint, not expecting a V-shaped recovery, but stick to the big boys like TCS, Infosys. And if you want to dabble a little lower, then perhaps, persistent is something that you could consider. Even at HCL Tech is something that I can throw in the mix. But yeah, this is, that there might not be a very big downside from here on, at least, not from a very immediate perspective. So you could have a rebound in some of these names. And, that's something I would still treat as a bright spot. 31,000 is the mark on the Nifty IT index that I'm looking for to be crossed on a closing basis.
Right, Kush, thanks so much for taking the time, and a pleasure speaking with you once again. Have a great weekend. Well, I certainly hope you do. All right. Well, at least you can enjoy your weekend. That costs nothing, right? Let's talk about something else. So let's talk about the earnings season, and which it shows a clear divergence between companies accelerating on revenue and profit growth and those seeing multi-quarter deceleration. Domestic-focused businesses continue to hold firm, while export-linked sectors are feeling the impact, of course, because of that entire tariff turbulence that you saw in the third quarter. Jasmeet joining in to tell you about what he's picked up. Jasmeet?
Well, thank you for that. If you look at the overall Q3 angle, we did see a strong set of numbers coming in. And the Q3, we itself saw that it was the best quarter when we look at the last 12-quarter history. As rightly said, the export business saw a slight pressure in Q3, but the domestic business held strong. Let's quickly understand, we have taken 10 stocks which have been doing, 5 stocks are doing really well in last 4 quarters, and 5 stocks are seeing a decrease in the PAT growth on YY basis. So here are the list of top 5 accelerative stocks that have seen a good growth in their PAT on YY basis. Starting with Jubilant Food, we see that from negative 6% growth up until a positive 43% growth in the Q3 of FY26, the stock has seen a strong up move. Similarly, we have Polycab, we have Persist Systems, Max Health, and even the Home First Financials, which sees a good up move coming in. Something like a Jubilant Food will be in focus, given from a negative to positive up move in terms of the overall PAT growth. Let's quickly understand what led to this growth in this particular quarter. For Jubilant Food, we have the overall Domino's expansion, which is lifting the revenue and profitability. Even the like-for-like growth is something that's helping the management grow further. But for something like a Polycab, their focus towards the wire and cable is strengthening further. The GST boost is something that overall pulled the momentum in the Q3 and the Q2 of this particular year. Further, the government's capex is driving the growth for the company. While something like a Persistent System, the company remains in focus on the back of the AI-led deals. And the company has been investing in AI since a very long time, and they see a slight pickup coming in. That's why it remains in focus. While the fourth stock that has done really well over first 4 quarters is Max Healthcare. While the company sees existing units up ramping up for the company very well, as well the capex they have been doing for brownfield projects are also working well for the company. But now let's quickly move and understand the last one, that's Home First Financials. For this stock, we have seen that the strong disbursement rate as well as the strong NIM growth is something that's pulling the overall momentum for this particular stock. Let's quickly understand the valuations and the return potential. While among the entire set, we see that Persistent System had the highest return potential, 40-odd%. Well, this comes after the sharp fall in the Nifty we saw in this particular month. That's why the return potential remains high for Persistent System. In terms of valuation, we do see Jubilant Food at 108 times, slightly expensive, and something like a Home First Financials, the price-to-book ratio remains at 4.2, in the range of the other players as well. Now let's move on and understand the next set of 5 companies that have seen a degrowth in their overall PAT in terms of the last 4 quarters. Now Concord saw a degrowth, while we have Concord Biotech, we also have Kotak Mahindra, Crompton Greaves and Axis Bank, which grew from positive to negative numbers in this particular quarter. And what led to the overall default in Concord was the exam softness. The overall tariff uncertainty led to the overall fall. Further, if you look at the next aspect, we also have Concord Biotech, which saw a US tariff hit that impacted the PAT line as well as the margin expansion for the company. Further, they also faced a lot of other duties as well. Now, Kotak Mahindra saw low cost of deposit pressure and liquidity swings, which led to the overall volatility in the PAT performance. While we also have Crompton Greaves, which saw commodity price inflation, which impacted the margins and the bottom line of the day on the back of the hurting the demand and the increased price hikes that have been doing in the quarters. Now, lastly, Axis Bank sees a wholesale-led mix, while weaker CASA ratio and the squeeze in the NMS, that's something dragging the overall overall theme for this particular stock. Let's quickly understand the valuation for these stocks. They remain in mid-20s to mid-30s in terms of valuation, in terms of return potential. We do see that even the potential remains in mid-20 to mid-teens for these stocks. The lowest potential being with the Axis Bank at 8% given the stock has already rallied in the recent times. So all in all, we see good set of numbers coming in for Q3. It's a wait and watch of how does the decelerators turn in the coming quarters.
All right, thanks a lot for that, Jasmeet. But let's just pull out the stocks which are getting impacted by Bihar's MFI related announcement coming in, and let's pull out the majority of these NBFC stocks which I'd like to talk about. And Kunal, of course, let's just talk about Fusion Microfinance, Utkarsh Small Finance Bank. All these stocks have been falling in trade. Of course, the news flow is that the targeted entities of this bill are offering micro and small loans, and remember there is going to be some kind of a regulatory kind of a stronghold coming in, and brokerages have stated that this is sentimentally negative and we are seeing a big downtick coming in. Just wanted to get your view on that, Kunal. Fusion Micro, that's down almost 8% in trade right now. Good time to accumulate right now, or you'll wait it out?
I think definitely avoid at the current levels. 208, 2010 has been the strong resistance for the stock. Again, we were not able to close above that even in the previous trading session. So I think wait for it right now, get some clarity. If 210 is taken out decisively, then probably one can go aggressively long, and then you can see targets of 270 on the upside.
Views on this? Yeah, Neeraj, your views on this? The Bihar MFI impact?
Of course. Yeah, I think one should wait and get some more clarity on what kind of impact it can have on the listed entity, and then only take an informed view. I think let's not be the buyers on the first day after this kind of announcement. Let's have a clear understanding on what kind of impact it can have.
Okay, so that's with regards to where microfinance companies go. Kunal, any quick view on the charts for all of these companies? Any buying opportunities?
I think not at the current levels for the microfinance space. We even if you look at all the companies chart as well, they have been rejection from the resistance zone. So let the dip play out, and then probably one can look to go on the long side, not at the current level.
Thanks a lot, Kunal and Neeraj, for your time, giving views both on technical and fundamental perspectives. But coming back to the market, last 15 minutes, we have seen a sharp fall coming in. Of course, dipping past that 25,200 mark, you can say it's MSCI adjustment, or there can be algos also at play. But looking at Nifty Bank also, that's down almost 700 points, and Nifty 25,200, that's a very important technical level, already below the 200 DMA levels, and the decline in the broader market, that has also intensified. Let's also pull out the mid cap and the small cap indices to show you where the fall is. It's not that much as compared to the large caps, but interestingly, small cap is holding up in this market. That means it's the third straight day of value buying or strength coming in the broader market. That's actually a good sign. But let's move on to the Nifty 50 companies, the constituents, how they are playing out. Is going to be very few names in the green, just 4 of them, 46 of them are in the red. Couple of IT names, but they have given the strength. But look at the sell-off. HDFC Life, Maruti, Dr. Reddy's, all these stocks are tanking in trade, all going past that 2% downtick coming in. Even the support from Reliance, that has also turned into red. Let's talk about the sectors, and largely it has been selling like a basket selling, we could say, but a little bit of strength coming in the consumer durables and the IT space, but largely we see the sell-off has intensified. The metal, FMCG, auto and realty, again the sell-off is turning big. Advanced decline ratio, let's just give you the entire picture of how things have panned out earlier. Of course, there was a gap, but the gap became bigger in the last 15 odd minutes. Now we need to understand whether this is the MSCI adjustment or is there something else at play. Of course, the weaker rupee is there, and the support from FIs is still very much fluctuating. Also, we could like to point out the BSE 500 stocks to show you where the action is, and interestingly, there are some good gains also in today's market. And Tejas Networks, that's continuously seeing buying happening, that's up 17%. Reddington also seeing a highest 1 month jump coming in. Supreme Petro, LTTS, Sun TV, all the names which you haven't seen over the last 1 month or 2 months, they are seeing a rotation and buying, especially in the cash counters. Sell-off, of course, the NBFC is taking a big hit, all these 3 of them. Credit Access Grameen comes in, and even the capital market stocks, Angel One, CDSL, all falling in trade as well. So these are the 2 sectors where the sell-off was there. But of course, it's an end to the markets, but it's a very difficult and a sad ending, you could say, in last 15 minutes. But you should be prepared for what to watch out for during this weekend and on Monday. Of course, the GDP data comes in today at 4 p.m. And remember, this is the rebased data on GDP, so it will be very interesting to understand how it impacts the macroeconomy for the country, the government budget, the bank loan growth, and forex. These are the important numbers you should be tracking. But for US also, there is a core PPI data coming in, which will give us a little bit of viewpoint at where the Fed's rate cut trajectory is. Corporate actions for next week, healthcare global rights issues there. The ratio is 1:17. There's going to be a board meeting for the fundraise. It includes Balkrishna Industries, Moltech Packaging, and also in the small cap space, 5paisa Capital. IPO listing back to the primary markets again. We are seeing Shriram Pistex and Clean Max Enviro as well. But remember, the grey market premiums I have checked, these are largely flattish of most of the larger primary issues. So definitely the sentiment is not very much upbeat even in the primary markets. But that's all, folks, for India Market Close. Stay tuned to NDTV Profit. Up next is Market Express.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
साउंड चेक हो गया? विजुअल्स रेडी? लाइट्स ओके? एवरीथिंग इज रेडी? वेट, आर यू रेडी? ये सिर्फ एक कॉन्सर्ट नहीं है. दिस इज माई लाइफ. दिस इज माई स्टोरी. वन नाइट, नो रिपीट्स. बुक योर टिकट्स नाउ.
First India tour in your city. Rock on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
Hello and welcome. I'm Gargi Shetty and you're watching Market Express. This is the show that gets you all the headlines that you should be looking at this evening. But first, a quick look at the markets. Bears clawed on Dalal Street today with a sharp fall in the last few minutes of trade, with the Nifty slipping below 25,200. Sun Pharma and HDFC Life lead the fall in the Nifty. Sensex shed more than 900 points. Broader markets also traded with sharp cuts and ended the day in red. Now, the sectoral picture was tilted sharply in the favor of the red. Realty, FMCG and auto sector were the top sectoral laggards. IT, oil and gas on the flip side remained resilient and held on to a tinge of green. Brigade Enterprises has partnered with Primus Senior Living to develop 3 new senior living communities. The upcoming projects will carry a combined gross development value of about 750 crore rupees. 2 of these communities will be integrated within larger township developments, allowing residents access to broader social and physical infrastructure. Now, the partnership signals Brigade's continued push into the managed senior living space, an area seeing rising demand as urban families look for organized service-led living options for elders. The developments are expected to combine healthcare support, community-led engagement, and age-friendly design features. Ramco Cements has sold non-core assets worth nearly 60 crore rupees to Rainbow Foundations. The company plans to use the proceeds from this latest transaction to bring down its debt levels. Ramco had earlier announced in December 22 its intention to divest about 200 crore rupees worth of non-core assets. With this latest sale, the company has now disposed of non-core assets totaling over 1,080 crore rupees. The move forms part of a broader balance sheet strengthening exercise as the company looks to streamline operations and improve financial flexibility. Lupin's Goa manufacturing facility receives a voluntary action indicated classification from the US FDA. The inspection conducted between November 10 and 21st noted some observations but requires no further regulatory action. Now, this eases compliance concerns for Lupin, allowing the plant to continue producing for regulated markets without additional remediation. IDBI Bank could see a major foreign investor as Fairfax emerges as the front-runner to buy a majority stake. The 61% government and LIC holding is valued around $8 billion at current prices. Now, negotiations are ongoing, and if the deal goes through, Fairfax may consider merging IDBI with its controlling stake in CSB Bank. Zimbabwe has banned the export of all raw minerals with immediate effect, including lithium, a key ingredient in electric vehicle batteries. Now, the order applies even to cargo already on the way. As Africa's largest lithium reserve holder, Zimbabwe plays a crucial role in global supply. The move is likely to push up battery costs worldwide. And for India's growing EV market, the impact may be indirect but significant, as higher input costs could squeeze margins for car makers. Kansai Paint has outlined its India business strategy, laying out a clear roadmap across divisions. The company is targeting faster growth in non-auto industrial coatings while sustaining leadership in auto and refinish paints. Now, decorative paints will see steady but measured expansion. Management is sharpening its focus on profitability and market share, signaling a calibrated, segment-led approach to growth in India for the next 5 years. Morgan Stanley maintains an underweight stance on Kansai Nerolac with a target price of 191 rupees. The note highlights that while the company is pushing growth in non-auto industrial coatings, the strengthening auto offerings, decorative paints remains modest. Analysts caution that near-term gains could be limited even as management focuses on profitability and market share expansion. NBCC bags a 775 rupee crore order from the Delhi Development Authority. Now, the project involves redevelopment of staff quarters, marking a significant addition to NBCC's ongoing urban infrastructure work. Tata Motors' commercial vehicle business enters a cyclical upswing, says CLSA, which initiates coverage with an outperform rating and a target of 673 rupees. Now, analysts expect domestic demand to strengthen, while Iveco operations could benefit from emission norm changes in 2027-28. Now, strong consolidated cash flow should support a leaner balance sheet by 2028. Bernstein maintains an outperform rating on PB Fintech with a target of 2,200 rupees. Analysts see limited downside, noting only a drastic reduction in take rates could hurt earnings. AI disruption is nuanced, and PB Fintech is well positioned to lead in digital insurance solutions with a strong focus on maintaining its industry edge and long-term growth potential. Astra Microwave Products plans to demerge its space and environmental business into a separate entity. The new firm will focus on space and environmental monitoring, while Astra Microwave continues with defense electronics. Now, shareholders will get proportional stakes aiming to unlock value and improve operational clarity for both businesses. Sarda Energy and Minerals win Supreme Court approval to acquire SKS Power for 1,950 crore rupees under the Insolvency and Bankruptcy Code. Now, despite opposition from Torrent Power and Jindal Power, Sarda Energy emerges victorious in the bidding war and can now take control of SKS Power. The deal marks a major expansion and reinforces the credibility of IBC-approved acquisitions. MSTC wins an order from Coal India to conduct NRS linkage auctions for non-coal sectors like cement and steel. MSTC will facilitate the auctions and manage agreements through its platform. The order is set to run for 3 years, strengthening MSTC's role in industrial trading solutions. Now, March has historically been a steady month for markets. Over the last 10 years, the Nifty has closed in the green 8 times with an average return of around 0.8%. Strong gains of over 4% were seen in select years like 2016, 2019, 2022 and 2025. Mid and small caps, however, show a more mixed trend with modest average returns and sharp decline seen during volatile years like 2020. Now, sectorally, FMCG, energy and metals have tended to outperform in March, while IT and auto have lagged. Gordium IVF made its stock market debut at a 5% premium on the NSE, becoming India's first listed IVF-focused healthcare player. The company operates over 30 centers on a hub and spoke model and plans to use IPO proceeds to open new IVF centers and repay debt. Now, financially, it has delivered strong margins above 40% with steady growth profit expansion. An expansion to Tier 2 and Tier 3 cities is seen as a key growth driver. However, high doctor attrition and dependence on specialized talent remain risks. Now, the listing gives Gordium access to capital to scale in India's fast-growing fertility market. Jack Dorsey, co-founder of X, announces cutting over 4,000 jobs at Block, reducing headcount from 10,000 to under 6,000. Now, Dorsey says AI tools are reshaping how companies are built and run. Despite the layoffs, Block stock jumps 23% in after-hours trading, reflecting investor optimism. SEBI has tightened rules for investment advice shared on social media, citing a rapid rise in stock tips and market commentary online. The regulator says investors often struggle to identify genuine experts. Now, under the new rules, all registered entities must clearly display their name and SEBI registration number on their social media profiles and in videos. The norms also apply to agents and distributors across all platforms. The regulation comes into effect from May 1st, 2026 and is part of SEBI's broader Ease of Doing Investment initiative aimed at improving transparency and investor protection. Now, SpiceJet has suffered a major legal setback after the Supreme Court upheld a Delhi High Court order directing the airline to clear its outstanding duties of 144.5 crore rupees in a long-running dispute with senior technicals. Now, the top court refused to grant relief, reinforcing the earlier judgment that required the airline to honor its payment obligations. This ruling adds fresh financial pressure on SpiceJet, which has been battling cash flow challenges and multiple creditor actions in recent months. Zagle has made a major push into the sports and entertainment space, signing a 1-year partnership with Chennai Super Kings to provide corporate expense management cards for the IPL franchise's employees and associates. The agreement, disclosed in a regulatory filing on February 26th, marks Zagle's formal entry into a new client category, expanding its footprint beyond traditional enterprises. The company says the deal is fully compliant with SEBI norms with no promoter-linked interest and the contract executed strictly at arm's length. The Hollywood power shuffle has taken a dramatic turn, with Netflix officially stepping out of the Warner Bros. Bidding war, leaving rival Paramount Skydance in a pole position. After months of high-stake talks and regulatory lobbying, Netflix says the price tag simply stopped making sense, especially after Paramount raised its all-cash offer to a level Warner Board deemed superior. Now, with Netflix walking away, the stage is now set for a tectonic merger that could reshape the entertainment landscape, from HBO to CNN to iconic film franchises. And Anthropic CEO Dario Amodei has rejected US Pentagon demands to loosen safeguards on the company's AI model Claude. Now, the Department of Defense reportedly asked Anthropic to permit any lawful use of its tools. Amodei said the firm would rather exit Pentagon contracts and allow use of its AI for mass domestic surveillance or fully autonomous weapons. He warned that such applications could undermine democratic values. The Pentagon has threatened to remove Anthropic from its supply chain. The standoff highlights growing tensions over how advanced AI should be used in national security operations. Now, more on Anthropic, the firm has rejected access to its flagship model Claude for companies linked to the Chinese Communist Party or the CCP, citing concerns about misuse. Now, the move blocks entities with ties to the CCP from using Claude's capabilities while allowing continued access for other users. Anthropic says the decision is part of its efforts to ensure responsible use of AI and prevent its technology from being exploited for harmful purposes. The development comes amid growing global scrutiny of AI governance and national security risks tied to advanced AI systems. And Jack Dorsey-led Block Inc. is cutting about 4,000 jobs as part of an AI-driven overhaul of its business. The layoffs affect various divisions as the company restructures to focus more on artificial intelligence and strategic priorities. Block says the move is aimed at streamlining operations and positioning itself for future growth, but it represents one of the largest job cuts in history. The decision follows similar workforce reductions across the tech sector as companies adjust to evolving technology demands and economic pressures. The company has started notifying affected employees. SEBI has changed how gold and silver ETFs are valued, moving from London benchmark prices to domestic spot rates. The new method, effective April 1, 2026, factors in conversion, duties, taxes, and premiums, aiming for clearer, more consistent pricing that reflects that metals trade in India. Now, investors may see slight price shifts initially, but long-term clarity improves. Now on to some national news. In a major relief to Aam Aadmi Party's leadership, Arvind Kejriwal and Manish Sisodia have been cleared of all charges in liquor policy case by a Delhi High Court. The ruling also said that the evidence against him was insufficient to proceed. The court said the materials on record did not make out a prima facie case against Kejriwal. The decision comes amid ongoing legal proceedings involving several political leaders and bureaucrats, including Manish Sisodia. The CBI will continue to pursue charges against other accused, but Kejriwal is no longer a party to the trial at this stage. The judgment marks a significant legal development in the high-profile matter. President Draupadi Murmu undertook a sortie in the indigenous light combat helicopter Prachand at Air Force Station Jaisalmer. The mission was flown in a two-aircraft formation with the president in the lead helicopter alongside a senior Air Force pilot. The 25-minute flight included maneuvers over Gadisar Lake and Jaisalmer Fort and a simulated attack on a tank target. Now, the president said the experience filled her with renewed pride in India's defense capabilities. She also congratulated the Indian Air Force for organizing the sortie. And the Uttar Pradesh government has signed a 200 crore investment memorandum of understanding with a German rail infrastructure firm to boost railway development in the state. The pact was inked to enhance rail systems, technology, and modernization across key corridors. The investment is expected to support improved connectivity, faster project execution, and stronger logistical infrastructure. Now, officials say the deal will also bring foreign expertise into India's rail sector and strengthen bilateral industry ties with Germany. The MOU signals renewed focus on expanding and upgrading UP's rail network to support economic growth and mobility. Telangana government is considering a new law that could penalize children who neglect elderly parents. Now, under the proposal, employees including government workers may face salary cuts or penalties if they fail to care for or support aging parents. The move comes amid rising concerns over elder neglect and the need for better care structures. The draft law aims to make family members legally responsible for the well-being of senior citizens. Critics question enforceability and privacy issues, while supporters say it reinforces traditional social responsibilities. The bill is still under discussion and details are being finalized. And a strong earthquake rocked Kolkata as parts of eastern India, sending tremors through offices and homes and prompting evacuations. Citizens reported shaking across the city, leading to precautionary exits from buildings. Early measurements suggest a high-magnitude quake with reports of shaking felt widely. There are no immediate reports of major damage or casualties, but authorities are assessing the situation. The quake was also felt in surrounding regions, unsettling residents and triggering safety protocols. Emergency services are on alert and more details on the quake's epicenter and impact are awaited. Police have arrested 9 people in connection with a massive 1,500 rupee crore multi-state cyber fraud case. The arrests follow a detailed investigation into an organized gang that allegedly duped hundreds of victims through online schemes and digital platforms. Now, authorities say the accused used high-tech methods to siphon money from bank accounts and mobile wallets across several states. Searches were conducted at multiple locations, leading to recovery of digital devices and incriminating evidence. The investigation is ongoing and more arrests may follow as police work to trace funds and dismantle the network. Now, Uber is accelerating into autonomy. From self-driving vehicles in Dubai to electric air taxis preparing for launch. Our executive editor of Auto, Siddhartha Sharma, checks out how the company is shaping the next wave of mobility.
What we witnessed here in Dubai was a test flight of that. That is a vertical takeoff aircraft that will be used as an air taxi in Dubai to cut down commute times that take hours into just mere minutes. The partnership with Uber will define the next step of mobility, and prices, as they say, will be very similar to what you pay on Uber Black.
Dubai will be among the first global markets expected to see a commercial rollout of Joby's air taxi in partnership with Uber.
Joby Aviation is a California-based aviation company that has built this. This is a vertical takeoff aircraft that's beginning passenger operations later in the year 2026.
Joby's aircraft can carry 4 passengers and a pilot, travel up to 160 kilometers and reach speeds up to 322 kilometers per hour. Flown by a certified commercial pilot, it offers a remarkable way to travel above the city and experience the next generation of flight. Joby's aircraft uses 6 tilting propellers to take off vertically before transitioning into a forward flight. In 2021, Joby acquired Uber's Elevate division, and in 2025, Joby acquired Blade's passenger businesses, which flew more than 50,000 passengers in the year 2024.
So we're launching here in Dubai in 2026. We'll be in the US next. We've got New York, we've got LA, but we're looking at London and Japan, and of course we have India and just the amazing opportunities there as well. So we spent 15 years designing this aircraft. A lot of it is the very first principles around safety. You'll notice that it's got 6 different propulsion units. If you compare that to a helicopter, you know it's got 1 rotor, right? So this has a lot of redundancy, far more than others, so that when we launch later this year, people can be assured it's safe.
Being an all-electric aviation vehicle, the rotors on this one are also engineered to be super duper silent. So this is very non-invasive. The decibel levels are also super low. And when they fly all over the city in the future, you will not hear them that loud in the skies.
Uber and Joby plan to integrate air taxi mobility services directly into the Uber app, allowing users to book electric air taxi rides seamlessly in the future.
As EV mobility expands from roads to the sky, the Uber model is also evolving and having those multiple layers when it comes to mobility and transportation in the future.
And viewers, that's a wrap on this edition of Market Express, but do stay tuned to NDTV Profit for more news and updates.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody,
5 times Masti with NDTV Good Times. Go, grab your tickets.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक कॉन्सेप्ट नहीं है. This is my life. This is my story. One night, no repeats. Book your tickets now.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Market ends over 1% lower as Nifty erases all monthly gains. Nifty IT suffers worst ever fall in February. Benchmarks underperform the broader indices for the month. Government to release Q3 GDP data with new base year as it shifts base to 2022-23 from 2011-12. Revision aims to reflect structural shifts in the economy. Fairfax is the front runner to buy a majority stake in IDBI Bank. Reports say that the talks are ongoing and Fairfax's investment could become the largest foreign investment in Indian banking. The Supreme Court rules in favor of Kalanidhi Maran and KAL Airways directs SpiceJet and Ajay Singh to deposit 144.5 crore rupees to Maran. Also imposes costs of 1 lakh rupees on Ajay Singh. Zimbabwe bans exports of critical raw materials and lithium concentrates. Suspension applied to cargo that's already in transit and will remain in force until further notice, may impact Indian EV companies. Canadian Prime Minister Mark Carney arrives in Mumbai for his first official visit to India. Over the next 2 days, Carney will engage with a wide range of Indian and Canadian stakeholders. Pentagon gives Anthropic a Friday deadline to drop its safety limits or lose a $200 million defense contract after Anthropic's refused to let its AI be used for mass surveillance or fully autonomous weapons. Netflix paves the way for Paramount to take over Warner Brothers Discovery as it declines to raise its offer to buy the company. Netflix said the new price it would have to pay would make the deal no longer financially attractive. Hello and welcome viewers, a very good evening. This is Profit 360 on NDTV Profit and I'm your host Malika Mishra. Along the next half an hour, we'll take you through some key updates on markets, national as well as international news. Let's begin with focusing on the Dalal Street. Markets came under sharp pressure this Friday with the Nifty 50 slumping nearly 1.3%, dropping about 100 points in the last 5 minutes to slip below 25,200. That was a dramatic sharp fall. The BSE Sensex also shed over 1.18%, losing close to 1,000 points. Selling was broad-based. Let's go across to my colleague Jasmeet for a complete market roundup.
Well, market ends in red. Today we see a massive fall coming in the market in the last 30 minutes of trade. Now, what led to the fall was a weaker MSMI adjustment impact on the closing trade. Further, we also had a key long-term technical level which breached the Nifty. Further, weak rupee and FII selling is something that impacted the Nifty in the final half an hour, and we saw Nifty fall and end in red. Now, looking about the monthly picture of Nifty, over a month Nifty ends in red. It erases all the gain it had done during the month and gains about 0.5% lower in trade. But in terms of this performance, we see Nifty ends in red for the third consecutive month in a row in Feb as well. For the Infosys and Tech Mahindra lead the fall in Nifty. Both were down about 22% in the month of Feb, while the fall in IT stocks comes on the back of that Anthropic fear which came in the beginning of the month, impacting the overall IT pack, and Nifty IT is down about 16 or 19% during the particular month. For the broader market, outperforms the benchmark. If we look at Nifty Midcap 150, it ends in green 1.5% higher, and Nifty Small Cap 250 again ends in green at 0.75% higher. In terms of the overall sectoral performance, we saw that Nifty is the sector which Nifty IT is the sector that lost the most in the month of February, down about 20 to 22%. And in terms of the Nifty performance, we said Nifty IT sees its worst monthly fall since September 2008, and Nifty February, the 50 IT's February month marks as the worst ever Feb month ever for Nifty IT. In terms of the other performance, Wipro fell almost 14% in the month of Feb, seeing a worst fall in last 4 years, while Infosys fell over 20% in the month of Feb, marking its worst ever fall in last 13 years. All in all, the market ends in red in the month of Feb as well.
Thanks so much for that, Jasmeet. As bears really tightly hold the markets at a time when investor confidence is shaky, investment expert Kenneth Andrade remains selective when choosing companies and sectors. The expert said that India must rely on finding newer markets